sound like you think that they will change to get where they should be.
No, I don't. I think we're going to continue playing this repeated game until something bad happens. But this repeated game can be played for a while.
Does he need to communicate the destination at Jackson Hole?
He absolutely needs to
How does he do that? What does that look like? What does it sound like?
He'll say, we've looked at this. This is what our instincts are right now for where we're going. We're going to be going down that path, but we will course correct as we get more information. But you need desperately to anchor this market, John.
Mohammed, appreciate it. Just fantastic. You've nailed the turn in this economy twice now. Just absolutely brilliant. Mohammed Al-Ain with Queen's College, Cambridge, on the latest in the US economy and over at the Federal Reserve. And the third hour of Bloomberg Surveillance, the lineup looks like this. Alicia Levine of BNY Wealth, Pierre Ferragut of New Street Research, Ian Lingen of BMO, and Ashok Bhatia of Neuberger Berman. The third hour of Bloomberg Surveillance just around the corner, with equity futures on the S&P up by a little more than 1 full percentage point. In the bond market, yields are higher by 3 basis points on a 2-year, up 4 basis points on a 10-year. Your yield this morning at about 3.93. And if you'd like to know where dollar yen is, the yen is a whole lot weaker. Dollar yen up by 2%, 147.21.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
The top names in global leadership are on Bloomberg.
I envisage not only some kind of a bridge towards membership or language linked to the irreversibility of Ukraine's membership in NATO, but also some kind of a broader package of military material, of financial aid. The more we support Ukraine right now, the sooner the war will end.
Nobody covers the top global leaders like Bloomberg Television and Radio.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells. We can edit the genome. We can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
this move in the market has a lot more to do with positioning, over leverage in some cases, volatility, than it does the economic fundamentals.
When the sentiment shifts, when the trends change, that always causes a lot of turbulence.
We've obviously had a level shift in the volatility environment across markets.
Momentum had been probably the best factor all year. I think we're going to really get exposed as that passive has now become somewhat of a momentum strategy.
When we put into context where we are, I think there's a lot more panic in the market than is warranted.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Every morning at the moment starts with dollar yen, so let's start with dollar yen. Dollar yen right now at 147. It's a move of 1.9%, so that's a weaker Japanese yen, and that move is engineered by some comments from the BOJ's deputy governor. A bit of verbal intervention, a blinking contest between the market and the BOJ, and the BOJ's lost, and lost quite quickly, Danny.
They certainly have, but for now, it is a market that is rallying, potentially out of its hand. I mean, it's kind of insane to see comments from a deputy governor and then to see the Nikkei basically erase all of its losses, which were the biggest since 1987. Something's not adding up, and a lot of people have said it's just positioning. But if you have a deputy governor who says we still have a tightening bias, I don't know. Is it just positioning?
The Nikkei have been absolutely ridiculous. Just in a word, ridiculous. To see the biggest one-day loss since 87, followed by the biggest one-day rally since, when was it, 2008?
Yeah.
And then I guess this is stability at the close today. The Nikkei 225 was up by 1.2%. Have we just encouraged a group of investors just to pile on the old trade once again?
I just don't understand if you're in this market and you see pain to that extent, and then you're like, well, it came back, so I don't mind. I can keep buying it. The deputy governor said something, so I can get back in it. I mean, surely you look at the volatility, and even just holding this thing in your portfolio, all your returns are going to look out of whack. Your volatility is going to look out of whack. It's not performing as it should.
Secured overnight financing rate 5.33% August 6th versus 5.32% August 5th.
Bullied into this. Mohamed El-Arian, even though he was on with us the last hour, also managed to get out this piece. And he says this signal, which he suspects was partly in response to external nervousness about global stock losses, was seen pro-risk by markets. So they're nervous, but the markets are saying, well, you know what? Now we're ready to go in for more.
Yen selling, reloaded, dollar yen at about 147, 146.98. There's a single name out there we need to talk about. I've said repeatedly, we're light on the data, don't get much of it. Jobless claims tomorrow morning. Light on the Fed speak, only heard from a few so far, the likes of Goolsbee, Barkin and Mary Daly. Light on earnings too, but we do have Disney, so let's talk about Disney. Disney in the pre-market just about unchanged in early trading. What we've heard from the company so far is that the streaming business is doing well, which means we can hike prices. The theme park business doing less well. And guess what the culprit is for this? Lower income consumer spending. They're pulling back at the parks. And the higher income, they're traveling abroad but not going to Disney. So we've got to work out where this bounce comes from. Does it come from the higher income spenders coming back or the lower income spenders bouncing back? Which one is it?
I mean, take your pick of what every company has said to try to figure this out. Uber in their earnings yesterday, the CEO said, while our consumer tends to be higher income, we're not seeing any softness or trading down across any income cohort. So we've got to wrap our heads around this. Is this a lower end consumer that is really struggling? Or is it simply a lower end consumer that is being more picky? That there is some price fatigue and they're not willing to, go pay up for theme parks. They're not willing to go pay for McDonald's, but they are spending a lot at Taco Bell, for example. We had Yum earnings yesterday, which were extremely strong.
But it's also the higher end consumer that is, at this moment, at least according to the CFO was saying, that these people are jetting off to Europe. It's Amalfi Coast versus Orlando. They are not here. And what the CFO, though, said is maybe next year we'll start to see that demand come back. But I think this is more of an understanding, this bifurcation we are seeing within the consumer.
Seen it repeatedly again and again and again, and see it again this morning. Disney just about unchanged. The broader market is positive by 1 full percentage point on the S&P 500. Equities with a little bit of a bounce to the bond market. Treasuries lower, yields are higher. Just a little bit of softness coming back into the Treasury market. We're up by 3 basis points on a 10-year, 392.78. Coming up this hour, we'll catch up with Alicia Levine of BNY, and while we're still on course for a soft landing, Pierre Ferragu of New Street on why he is upgrading Nvidia, and Ian Lincoln of BMO on the odds of a 50 basis point cut from the Federal Reserve. We begin with the big issue. US futures adding to Tuesday's gains going into the opening bout. Dovish comments from the BOJ lifting sentiment this morning. Alicia Levine of BNY Wealth is not expecting a recession. We still believe the macro data are pointing to a soft landing, but the areas of concern are growing, to include softness in the labour market. Alicia joins us now for more. Alicia, good morning.
Good morning.
Let's get into that. Where does that more constructive view come from on the economy?
Because the data are really still quite good, and even the forward-looking data are good. And let's look at what's going on in the credit markets. The spreads are really holding in there and are not blowing out. And that's really the first view of what's happening with corporates. So spreads are fine. And the data just macro are fine. The ISM services data really came and saved the market, on Monday when it came in better than expected, and the employment data for services came in better than expected. That was a big number. So I think you're going to get revisions on non-farm payrolls in the next month, and it just doesn't seem that we're moving towards recession. Now, having said that, I think the Fed is too tight here for where inflation is going, and real rates are quite high. So it's time. Gentlemen, it's time. It's time to start the cutting cycle, but we don't see evidence of a recession yet, and the soft landing is still in play here.
How offside do you think this Federal Reserve is? It was a question we explored in the last hour. How offside do you think they are?
So I think they could cut 100 basis points here, and they'd still be tight.
Still tight after 100?
Well, because you want a real rate, and we're 2.5% on PCE, so that seems to make sense, right?
So if they are still too tight, even if they cut 100 basis points, but the economy looks okay, at what point does that cease to be the case? That they continue to be too far behind and they don't catch up?
So it's a great question. I think let's talk about the institution for a second. As an institution, the Fed is set up to be a little bit late, because they're looking at data. The statements are written 2 weeks before the meeting, and even as data may come in those 2 weeks, those statements don't get revised, and the press conference is the press conference, even if you get different CPI that morning, and we've seen that in the last few Fed meetings. So I'll say I think they know they have to cut. The messaging on last Wednesday was that they are starting the cutting cycle in September. The conversation today is it 25 or 50 basis points, and ultimately it's the macro data coming in, less on CPI, less on PCE, and more on employment. So Thursday claims data, that really spooked the market last week, and non-farm payrolls and PMIs and ISM. Those are the numbers that are going to tell us whether it's a 25 or a 50 in September.
I got to say, one of the confusing things about the delay of this Fed is they say we don't want to react on one data point, but I remember when inflation was on the way up, and we got a University of Michigan survey that scared them. And they flipped over the weekend via an outlet saying that we are indeed going to hike. I mean, why are they not doing that this time? They've shown some flexibility in the past, again, off of probably tier 2 data.
Because the data are still good, right? The economy is still good. We just came off an earnings season where earnings are over 11% in the second quarter, 2.8% in the second quarter for GDP. Atlanta Fed GDP now is revised up to 2.9%. So the data that are coming in are not that weak. It's very specifically located, certain parts of the income scale, certain parts of the labor force. Now, you have to go where the puck is going, right? So we have to project forward, and I think it's time to cut.
What pushes them to 50? Well, they're already running with an unemployment rate that's higher than their year-end target.
So the thing about the higher unemployment rate is that there's some noise there because it could be driven by new workers in the labor force. As we know, we've had a bolus of workers in the labor force in the last 4 years, and they're coming in, and it is more people in the labor force. We saw it in the participation rate as well. That can also drive up the unemployment rate. I think there's noise there, and I think that economists realize that there's noise because of, let's call it, the extra 5 million people in the labor force that may not be picked up in other metrics, okay? So what drives them is not so much the unemployment rate, but the new jobs creation and the claims data. The claims data is about as coincident as you get on what's going on with the labor force.
So out of all the data we have ahead of the next Fed meeting, the CPI data, PCE, jobs data, what are you going to be looking at that would potentially give you the path to know what the Fed's going to do?
Thursday claims data, right? So new claims and continuing claims. The trend does not look good. There is some seasonality there. Education workers sometimes take unemployment during the summer. That if that is the case, that is the case, we should see that roll off soon. And there was some closure of factories over the summer, also seasonal. If that's the case, that should come off fairly soon. But I think any number that's over 250 will start getting the attention of the Fed. And we got there almost last week.
Let's talk about stocks. For weeks, people came on this program, pounded the desk and said, buy small caps. Sticking with tech?
Not I.
Avoiding small caps still?
Not I.
I know not you. I'm not implying you. Just to be very clear, not Alicia. Very clear on that. Did not say buy small caps. We've reset, though, particularly with the Friday and Monday price action. Where do you think we are now? What's the trade at the moment?
So we're allocated to all asset classes. We're not overweight small caps. We thought the trade was early because ultimately, if you think that there's a soft landing and the Fed's cutting, it does seem like a great setup for those companies that are underperforming and have highly levered debt. That's the definition of small cap. The problem is if you think that the Fed's not cutting all that much and they still have floating rate debt that comes due in the next 12 to 18 months, it has to be refinanced. I think what you saw was an index play. You know, everybody was so over their skis on large cap and tech, and the market cap of the top 10 stocks is 5.5 times that of the Russell. So it was like a pachyderm through a needle, right? Like taking the capital out of the top 10 stocks and throwing it at the index, you were gonna get these huge moves of 3 and 4% on the way up, and then you see it on the way down as well. There's just not enough market cap in the Russell. It's idiosyncratic. You have to choose your companies very carefully here. So we're allocated. They will do well in a rate cutting cycle, but if there's any question at all about the real economy, then small cap is not where you want to be.
And there's a big question about that at the moment, particularly after Friday. Looking ahead to, as Alicia suggests, the big one tomorrow morning, which is jobless claims, Thursday morning at 8:30 Eastern Time. Alicia, love it. It's good to catch up, as always. Thank you. Alicia Levine there of BNY Wealth. Let's give an update on stories elsewhere this morning. Let's cross over to Yahara Hackers, who has your Bloomberg brief. Hey, Yahara.
Hi, John. Oil is recovering along with global markets. Investors are on edge about the possibility of a retaliatory strike from Iran on Israel, with the Middle East region accounting for about a third of global production. Brent crude is trading around $78 a barrel as headwinds loom from slowing demand in China and the U.S. and the potential addition of supply from OPEC+. Hong Kong's flagship airline Cathay Pacific is buying as many as 60 Airbus jets in an $11 billion deal. The carrier confirmed an earlier Bloomberg report that it placed an order with the European plane maker, overlooking an offer from U.S. rival Boeing for 787 Dreamliner jets. Cathay's latest deal is the third with Airbus in 12 months and caps its biggest plane spending spree in more than a decade. The airline also reported a 15% slide in first half net income, with flight numbers still sitting at around 80% of pre-pandemic levels. And the Paris Olympics are winding down with only 5 more days left of competition. Today, the newly crowned fastest man alive, American Noah Lyles, returns to the track in the 200-meter semifinal after taking home gold in the 100-meter. And Team USA's women's basketball team tips off this afternoon against Nigeria in the quarterfinals. The women's team has not lost an Olympic game since 1992. As for the medal count, Team USA leads in both gold medals and total medals won. That's your Bloomberg brief. John?
Can I just say that Gabby Thomas made us all look terrible yesterday. Neurobiology at Harvard, gold medal at the Olympics.
It's so unfair. And how old is she? Probably like 20-something also?
It's like beauty, brains, athleticism. It's just absolutely ridiculous.
Yeah, the winner was Noah Lyles, though, saying, like, you're not a world champion if you're just playing in the NBA because you're not competing against the world.
Those comments resurface. I've said that a million times. It's like baseball, World Series.
Ridiculous.
Like, who are you playing?
Yeah, well, Canada.
Yeah,
Canada. Come on, Canada. That's the world.
It's the world according to North America.
Okay. Up next, the morning calls plus Pierre Ferragut of New Street on his NVIDIA upgrade. That conversation just around the corner, with equity futures continuing to bounce up 1% on the S&P.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
This from Barclays this morning. Buy the dip in tech, overweight financials. The latest from them. A lot of people buying that dip in the last couple of days. Equity futures right now on the S&P up by more than 1 full percentage point. Yields climbing higher by 3 or 4 basis points at 393.16. We'll keep revisiting dollar yen for you. I know you're all interested in where that's at. That currency pair at 147, positive 1.8% on the session. Let's get you some morning calls. First up, Wells Fargo raising its price target on Uber to 97 from 91. The firm keeping an overweight rating on stocks, saying it remains a top pick for the second half of the year. The stock is up by 0.4. Your second call from TD Cowen, lowering its price target on Airbnb to 125 from 170. The analyst keeping a buy rating on shares, but pointing to tough comps and headwinds from regulators. Their stock is down by 14%. And finally, New Street upgrading NVIDIA to buy with a 120 price target. Analyst Pierre Ferragu saying the recent sell-off is a buying opportunity. Pierre joins us now for more, with that stock up in early trading by more than 2%. Pierre, great to catch up with you, sir. An upgrade on this stock after a big correction going into the weekend and coming back out of it. Some wild swings we've seen in that name over the last week or so particularly. Pierre, why do you think this is a good entry point, a good opportunity?
It's a good opportunity because we had a bit of an overheating, in all the AI-related stocks. We grew a bit more cautious 3-4 weeks ago on the back of that. And you've had like a technical correction of the whole group. And specifically on NVIDIA, our concern was that expectations were basically getting almost like about to be ahead of what the supply chain was, lining up in terms of capacity, and well ahead of CapEx projection, how much money the top players were going to spend on their data centers. And so what happened over the last couple of days is that you've had a lot of news flow about the next generation of NVIDIA chips, the Blackwell generation being delayed. And that actually creates like a very counterintuitive situation where if the next generation chip Blackwell is delayed, it creates a bit more slack, a bit more leeway, a little bit more room for NVIDIA to do more of the older chips. And so we actually think it makes like meeting expectations for NVIDIA safer today than it was a few weeks ago. And of course, with the stock being down almost 30% from its peaks, valuation now is very reasonable. To give you an idea, Jonathan, it's trading on 29 times what we expect for earnings for next year, and we're slightly below consensus. We're very conservative. And, in the last pullback in 2020, this is kind of like the trough multiple at which the stock really got to its lowest point. So we don't see much, downside risk on earnings, no downside risk on the multiple. So it's a good place to get into the AI infrastructure leader.
Pierre, let's talk about the potential downside risk to earnings, perhaps not in the immediate term, but maybe longer down, just a little further down the road. We have heard from their biggest customers. We know who those biggest customers are. And we've noticed just a loss of patience with some investors towards those customers about how much they're spending on their AI ventures and how little maybe the reward is. Based on things so far, do you sense that loss of patience from the investor base with their biggest customers? And what do you sense that could mean further down the road?
Yeah, it's an excellent question. This loss of patience, we've seen it already in the past when these customers, moved into the cloud business. They were spending a lot of money to build out the clouds. And at the time, I remember so well all investors being very scared about it because they see all this free cash flow going into additional capex and they don't like it. I think it's being a bit short-sighted for investors. They always react like that. These investments are really going into assets that are going to generate additional revenues that are going to depreciate over a long period of time. To give you an example, the CFO of Microsoft said last week that half of the capex they're spending this quarter, so they're spending $19 billion. It's a lot of money, but half of that goes into buildings that are going to be, generating revenues and that are going to be depreciated over 15 years. So it's always a bit scary to see very large capex, and it's normal to hear investors being worried about it. Now, our view is don't listen to investors. Look at the balance sheet, look at the cash flow statement, and look at the P&L. And when you do that, especially on Microsoft, on which we've done a lot of work lately, what you see is a transition to AI is actually very, very safe. Microsoft has all the means required, of course, to finance it. And the transition to AI is going to cost like a couple of points of gross margin pressure in the next 2-3 years. And you see that the free cash flow of Microsoft is actually already stabilizing, even as a percentage of revenues. So this transition is going to happen without paying for these very large players, which means that they're going to be able to continue to spend as much money as they spend today, and actually they're probably going to keep growing the amount of money they are spending. So we feel relatively safe about this situation.
Still, one of the scary things, I think, for some people, Pierre, is that those big players, it's kind of what NVIDIA's got. Some 20% of NVIDIA's revenue comes from Microsoft alone. Does it have a concentration problem?
Yes and no. You're right, 4 players make about half that market, but only one supplier makes it. So as long as you have more concentration on the supply side than the buy side, it's actually still a good place to be. And you clearly see that in the profitability and the return on operating assets of NVIDIA. It's a very, very healthy business. So from that perspective, I would tell you, no, they are more concentrated than their clients are. Now, on the other side, only 4 players making half your business presents a permanent strategic risk of clients really working out a way to create an alternative suppliers. And you see how Google developed their own chips in-house very successfully and are now ramping millions of these chips, the CPU. And you see that all other players are looking at making similar moves. You look at SoftBank investing in GraphCore to try and create an alternative. You look at other startups trying to create an alternative to NVIDIA. You look at AMD and to some extent Intel trying to create an alternative as well. So NVIDIA is in a very strong position, but they need to remain very, very good at what they do, provide a lot of value to their clients in order to maintain this leading position. So far, we see that they understand that. They are very careful about pricing, about bringing value to their clients at every new product generation. And so far, we have to say execution is very good. Like, for instance, you see that today Blackwell is being delayed the next product generation. You could see that as a mis-execution, but the reality is that NVIDIA moved from releasing a new product every year versus every 2 years, if not more, in the past. So in this acceleration, they took a lot of risk, and now they have maybe like a 1 quarter delay. Overall, execution is still very, very good, and it's going to continue to be very, very good for anyone to compete with NVIDIA. Not impossible, but very, very, very difficult.
Pierre, what about heightened scrutiny? We learned this week that the DOJ is going to be looking at NVIDIA when it comes to potentially violating antitrust laws. Any concerns you have about this?
A lot of concerns in terms of a lot of scrutiny, as you mentioned it. I think you're totally right. Look at Microsoft in the last 20 years and how much scrutiny they've been in terms of regulation. Does that mean it's going to hurt the business? Probably not. NVIDIA will have to manage that very carefully. We'll have to carefully choose its practice, be careful about bundling, be careful about pricing fairness, and they have to be very careful to behave very well. But if they do the best chip, they do the best chip. If everyone wants their chips, and there isn't much the regulator can do about that. So it's going to be high on the list of topics being discussed in the boardroom of NVIDIA, as it has for Microsoft in the last 20 years.
Yep.
Does that mean NVIDIA could suffer? not really.
It wasn't a regulator that beat Microsoft, it was the market. Well said, Pierre. Pierre Farago of New Street. I mean, my words, but Pierre was basically alluding to it. You think about the experience of Microsoft in the last 20 years. That's what did it. If you make the best product, people are going to buy it.
Yeah, but investors, how much patience are they going to give in the meantime? To your point, I mean, we had Super Microcomputers earnings last night, which NVIDIA is their biggest supplier. I mean, crazy earnings. They really, really upgraded their forecast, but margins were kind of off. That thing is getting punished this morning. So in the meantime, investors don't really care if it's the best product. They just want it to keep growing at, I don't know, 300%.
Yeah, ridiculous levels. NVIDIA's up in the pre-market by 2%. New Street upgrading the stock to a buy. New price target 120. We traded about 106 this morning. Coming up next, we'll catch up with Ian Lincoln and Ashok Bhatia on the odds of a 50 basis point cut from the Federal Reserve in September. Their conversation up next.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
DOJ or other authorities
could face bigger challenges.
Britain's next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
So we've said a few times, we're light on economic data. The next big data point is jobless claims tomorrow morning, about 24 hours from now, 8:30 Eastern Time. Andrew Honhorse of Citi with this to say. Initial jobless claims remaining at these levels in August would confirm the slowdown, and a rise to 260 or above would signal deeper weakness. 260. Andrew and the team over at Citi have said a few times that's the danger zone for jobless claims. Their words. Equity futures right now on the S&P 500 shaping up as follows. We look a little something like this. Drifting higher by another 1% on the S&P. On the NASDAQ up by 1.25. In the bond market, Treasuries taking shape with yields higher by 2 basis points on a 2-year, approaching 4% again. Seen that a few times in the last couple of days. 393.73 on a 10-year, up by about 4 basis points. Curve a little bit steeper, led by a sell-off for the long end. The 30-year up by 6 basis points. If you switch at the board, the one to watch really should have started with this because it set the tone for absolutely everything elsewhere. Dollar yen 147. We're positive on that currency pair by 1.9%. That is a weaker Japanese yen. Here's the why. Under surveillance this morning, the BOJ sending dovish signals after days of historic volatility. The bank's deputy governor saying this. The bank needs to maintain monetary easing with the current policy interest rate for the time being. The bank will not raise its policy interest rate when financial and capital markets are unstable. So no hikes from the BOJ as a conclusion by some. Danny, I think, like others, you're skeptical.
I am skeptical because he saw that big reaction in the yen. He saw that chart that you just showed that had it shoot up, and then we get maybe 30 minutes later, he comes out again and says, I think markets actually will calm down, which again gives him the room to continue tightening, and saying, I have no gap with UEDA on policy. We know what UEDA's policy is. He wants to tighten, he wants to normalize, he wants to continue to hike. He talked about that in the meeting last week, that it was coming, one of many. 25 basis points is what we saw. So if you're comfortable loading back into the carry trade, you have to contend with that this is still a BOJ that wants to normalize.
Mohamed Al-Erwan was on the program the last hour. Mohamed making the point that if they're capitulating here, if they're placating markets, he thinks they're making a mistake.
Right, because they're basically just allowing the markets to come back in, load back up. Paul Donovan this morning saying Japanese equities, what we've been witnessing, now entirely where they were before the plunge on Monday. So economic fundamentals have not changed that much this week. Draw your own conclusions about markets' relationships to economic reality.
Yeah, this market has just been ridiculous over the last few days. The politics is ridiculous too, but just sort of like spare us just a moment to talk about the politics. Republican presidential nominee Donald Trump announcing Elon Musk will interview him on X on Monday. The news coming just after Vice President Kamala Harris named Minnesota Governor Tim Walz as her running mate. Musk quickly endorsed Trump after the assassination attempt on the former president just last month. I have to say that assassination attempt feels like a year ago, given how quickly this political cycle has moved.
It does, and I'm looking forward to seeing this interview, but I do have to say two things. One, Elon Musk is a firm believer at this moment in Donald Trump, so this feels like it's going to be softballs. I would love to see Trump and Kamala Harris, for that matter, sit down with journalists that are a little bit more unfriendly to them. It's also interesting for Elon Musk. This is potentially a space for him to have a redo. Remember when Ron DeSantis launched his political campaign, his presidential campaign, it was on X, and Don Jr. came out and called it disaster, or disaster, like DeSantis. So for me, this just feels like potentially it's a win for Musk, but it's almost like Reid Hoffman sitting down with Kamala Harris on LinkedIn. You know what you're gonna get.
When have US politicians ever sat down with people that don't like them?
They have.
When does that happen? Who? When was the last time that happened?
Trump just did it.
Trump
at the
does
NAJB. He literally just did it.
So let me rephrase. When do Democratic politicians sit down with people that don't like them?
Yeah, there's probably, well, when do they sit down with anyone? I think we need to ask that question at the moment because we haven't heard with friendly or unfriendly.
That's true. I would also just note, though, that Trump was speaking on a panel event. But yes, many would say that potentially for him, it wasn't the best idea to go into that.
Let's see if we actually get an interview a little bit later this month. We shall see. Let's turn to the earnings. Disney results painting a mixed picture. Weakness in the company's famed theme parks offsetting its first ever profit in streaming. Disney saying its theme park in Paris suffered from a reduction in summer travel due to the Olympics. Streaming earnings continue with Warner Brothers Discovery expected after the closing bout. It was interesting hearing from the CFO the different cohorts of consumers here. Upper income consumers not going to Disney parks because they're going elsewhere. Lower income consumers just pulling back more broadly, yet still they've got faith this thing bounces back in the next 12 months.
The reason I find this confusing is because we've also heard from airlines and from Airbnb and from hotels saying that people aren't traveling as much, that they're not going abroad as much. It's so interesting to get different slices depending on the different company, and you try to wrap your head around what this means for the consumer. I don't know, maybe it's just an excuse at the end of the day that these companies need to recalibrate strategy to make sure people go down to Florida instead of going to Italy, and they somehow have sort of misplaced that in a changing consumer and are just basically blaming it on, I don't know, normalization or a slowdown in consumers.
What the CFO, I think, was alluding to is basically what we've been talking about, is bifurcation of the consumer. The high-end consumer that they really want to come back next year and spend locally, say in Orlando, they're not doing that right now. He says they're off abroad.
US 10-year yield rises to 3.94%, erasing drops since jobs data.
Right? If people are going to the Olympics, why not stop at Disneyland Paris?
Waiting to see if this shows up in the numbers elsewhere, particularly jobless claims tomorrow morning. So let's talk about that. 24 hours away from the data at 8:30 tomorrow morning. The first time since the soft July payrolls report, we'll get another sense of the labour market. Investors hoping the data will offer clues about how much the Fed will cut in September. Ian Lincoln of BMO writing the following: our base case remains a 25 basis point cut, with a caveat.
ECB's Ren says, I see the recent market swings as an overreaction. US economy remains relatively strong. So again, that's ECB's Ren.
Payrolls. Ian joins us now for more. Ian, it's good to see you.
Nice to be here.
The rethink of the rethink, with the 10-year yield back at 3.94 and a raise and a drop since payrolls. What is this? What are we doing?
So I think we're in one of those classic moments in financial markets where the prices have changed more than the facts have. What have we learned? We have learned that the unemployment rate was a bit higher than the Fed and the market was looking for, but that's really about it. We've seen what's gone on with the Bank of Japan and the yen, the carry trade, the big unwind. We saw 10-year yields as low as 366, give or take. We're now back up to roughly 395. We have an auction this afternoon. We're going to be in a much different environment by the end of this week than the angst that was in place on Monday.
For people obsessed with asymmetries, given the reset we've seen in the bond market, are we more vulnerable now to hotter data or still colder data? Just what is things set up for?
At this point, we have gone through the peak angst of being more vulnerable to stronger data than weak data. I think we're right in that sweet spot where we can respond with a degree of intellectual honesty to whatever we see tomorrow via claims.
That also sounds like a more volatile bond market, though, if we're kind of sitting at the precipice and can go either way. What does that mean just for my ability to hold bonds and feel comfortable with it, that this is kind of the haven, the thing that offsets other risk assets?
Well, at this point, it is an ideal environment to hold Treasury bonds because the Fed has told us that they're following every major other central bank, with the exception of the Bank of Japan, and moving toward an rate cutting, not necessarily an easing, but a rate cutting bias for, frankly, the foreseeable future. And while that might not be a 50 basis point September move that starts the process, we will get into a series of rate cuts. And so there will be moments, as we have seen, where yields back up as we rethink the rethink, as it were. But at the end of the day, the structural change definitely benefits lower rates.
We're on the curve, though, because this has been a front end that's been scared of the Fed, a long end that's been scared of the economy and the deficit.
I would point to the compression of 10-year break-evens as a clear indication that the market has renewed faith in monetary policy and renewed faith in the Fed's commitment to get us back to that 2% inflation target. And as break-evens compress, we will see nominal rates move lower and lower. And so I like the 10-year sector, with a nod to the fact that 2 years are going to be very closely linked to near-term policy expectations.
When it comes to policy expectations, you're still expecting 25 basis points cut for September, but potentially the data can move you to 50. But how much do you think they need to cut for the rest of the year? Alicia Levine was just on talking about 100 basis points. How much do you think the Fed, by the end of December, should have in this market?
So our base case remains that if the Fed starts at 25 basis points a quarter, they can continue that cadence only if we remain in a soft, low landing environment. And we're going to know that over the course of the next three major data releases, 2 CPIs and that non-farm payrolls, and that will set the tone for September. In an ideal world, 25 in September, 25 in December, quarterly cadence from there. I'm worried that that's not going to be what plays out. I'm worried that we're actually going to see a more dramatic deceleration on the inflation front and another concerning payrolls print. And then we're 25 at each meeting, with the note, or with the caveat, that that could begin with that departure point of 50.
How do you define a concerning payrolls report?
Anything sub 75 in terms of the headline, or another 0.2% increase in the unemployment rate that is not coupled with a higher labor force participation.
Ian, just quickly, I'd love your thoughts on the price action. How orderly was this bond market on Monday. What did you make of it?
I wouldn't put it in the category of being disorderly. Liquidity was fine. Everything functioned as it was supposed to. There were no clear strains. We haven't seen any drama unfold in the funding markets. Things seem to be calm for the time being. That being said, as we know, when paradigms and narratives shift this quickly, the price action can be very, very choppy. We reprice, we don't trade tick for tick to a new level.
Things have gone back and forth viciously in the last year, repeatedly. We've seen it time and time again. Ian, it's good to see you. Thank you, sir. Ian Lingham there of BMO. To continue the conversation, Ashok Bhatia of Neuberger Berman joins us now. Ashok, I want to come to you on something you've been pondering for a while. Invest for the destination, not the path. Can you just frame why that was important and why maybe things have started to turn, that the path has become more interesting?
Yeah, I think so. A lot of our thesis for this year was what you said, was own 5 to 7 year points. We were at peak in the spring. Those points were pricing for the Fed to get to a terminal rate of 4, at one point almost 4.25. And our view was Fed was going to end up somewhere lower than that. We sit here today, and the terminal rate pricing, at the lows on Friday or Monday, we got down to a terminal rate of 2.90, and we sit here today with a terminal rate pricing of 3%. And that to us seems extremely reasonable. So I think the main thing that's going to have to, and it's going to be a harder question for the bond market, is suddenly the path gets more important. Because the endpoint is priced, I think, pretty fairly, it's now going to be these debates about how quickly they get to that 3% level that's really going to drive bond performance. You were talking with Ian about how much is priced in 25 versus 50. The challenge for bonds is there's over 100 basis points of easing priced in for the rest of the year. And if you don't get that, total return performance in some of these short maturity fixed income securities will be challenging. So I think the structural change that's happened in the bond market, and I think it will persist, is we're going to have to talk more about 25, 50, this pacing and this path, and the destination pricing of 3%. I'd be surprised if that changes an awful lot over the coming months.
Well, the crazy thing about this bond market is you can have a clear view for where that destination is going, but you can be smacked around in the meantime as this market swings back and forth. Do you think there's any merit to being a more short-term trader, that you just have to be tactical in a market like this?
I do. I think, you want to definitely keep, valuation as an anchor on this. But, we saw this in November and December of last year. And, it's kind of history's littered with this, which is when bonds rally, they often rally very quickly and, can occur in this case, we've repriced 100 basis points or so in the course of a week. I do think, our base case is the next few months, we'll see continued, weak inflation prints. I think we're a little more concerned about the labor market. So I think what that all adds up to is the next few months, we're probably not going to see a big repricing higher in yields. And I think it's probably more going to be, how weak does the data get? Can that drive even faster Fed expectations? But base cases, we've repriced yields, and we're probably just, I think, going to sit around these levels for a while.
The other repricing we did is a market that you like. It is credit. And I mean, there you saw some huge moves, widening of 73 basis points in just 5 days. Sure, it comes in 22 again yesterday, but actually, are you now fairly getting compensated for the risk in this market?
Yeah, I think it's a great point. And, credit spreads, high yield spreads were, 300 coming into this. I think intraday, we probably peaked at around 390. We've retraced some of that. But definitely, this has created some opportunities in high quality double Bs, in some of the longer duration triple Bs, where, names are 25 to 50 wider. Now, I think, yield credit spreads are still pretty low in the grand scheme of things, but there's definitely a little bit more opportunity. And we do think that, if one of the big things that comes out of this is the Fed wants to get to its neutral rate faster, and this will all be an excuse for the Fed to do so, that should actually be a bit more supportive for credit and take out some of the tail risk. So, yeah, the opportunities in credit have appeared a little bit more.
When it comes to what the Fed is doing and the question about the 50 basis points at the meeting, intermarket meeting, how potentially that's also a debate. What are you viewing for the entire rest of the year for basis points the Fed's going to cut?
Yeah, that's the $1 million question here. I'd say the way we're investing is really don't bet against a very aggressive Fed. And I think that's sort of lesson one, which is the Fed knows it's got a restrictive policy rate. The Fed has been trying to get into this period where they can be a bit more forward-looking, and this is going to give them, we think, the excuse to get there. So I wouldn't rule out, and we wouldn't rule out, the chances that, look, if you see, and I know you were asking Ian about a payroll print, less than 75. If you get some of these more downside types of outcomes in the next few months, I wouldn't discount that the Fed can deliver the 100 basis points or even a little bit more if you get that kind of weak data. The Fed, I think, wants to get that first 100 basis points and should get that first 100 basis points of easing out of the way. So it's not a great answer to your question, I know, but I think 75 is probably the minimum, and the upside or how much easing will be data dependent, but I don't think we're going to back off this pricing off an awful lot.
Ashok, I feel like we've been exploring the same thing now for months and months and months. Is it a welcome cooling or an unwelcome deterioration? I can tell you the split on Wall Street. Morgan Stanley, Bank of America, basically saying a welcome cooling. Citi, JP Morgan saying an unwelcome deterioration. Are you in the latter camp and not the former? Is this looking more and more like an unwelcome deterioration?
Don't think. Look, we think this is still a soft landing. It's really hard to get the U.S. into negative type of GDPs. But I do think, we've spoken about the labor market, right? The gains that we're seeing are getting more narrow. 60% or so of the job gains are coming in two sectors, education and healthcare. It's continuing to get more narrow. And that's concerning, that once the cyclical sectors are already weak or weaker, and you get a little bit of weakness in those, suddenly you can introduce more downside to payrolls. So I'd put us somewhere this is a soft landing, and that's our view, base case, but it's probably tilting a little bit more towards that lower end of soft landing. But this is not, in our view, a recession outcome.
Got it. Ashok, appreciate it. As always, sir, thank you. Ashok Bhatia there of Neuberger Berman. On the labour market, the economy, and what's developing in the bond market too. In the equity market right now, going into the opening bell about 1 hour and 13 minutes away. Equity futures positive by a little more than 1%. With an update on stories elsewhere with your Bloomberg Brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Vice President Kamala Harris and her newly named running mate, Governor Tim Walz, kicking off their swing state tour yesterday in Philadelphia. Harris introduced Walz on stage, hailing him as a fighter for the middle class. The campaign saying they raised more than $20 million since the Walz announcement yesterday morning, which they hailed as one of their best fundraising days. Harris and Walz will be in Wisconsin and Michigan today as they continue their battleground tour. Shares of Airbnb are plunging in the pre-market, down more than 12%. Bookings in the second quarter came in lower than expected, and the company gave a disappointing outlook, setting it up for the slowest pace of growth since 2020. It also warned of slowing demand from U.S. vacationers, despite it being peak summer travel season. One area that saw positive results was bookings for larger parties after the company retooled its marketing toward groups choosing multi-bedroom homes over hotel rooms. And a group of U.S. senators, including Elizabeth Warren and Bernie Sanders, have sent a letter to the Department of Justice asking it to investigate the newly formed Venue sports streaming platform. That's according to a report from The Athletic. The platform is a joint venture by Disney's ESPN, Fox Sports, and TNT Sports to provide a direct-to-consumer service. But the senators have reportedly asked the DOJ to investigate whether it violates antitrust or telecommunications laws. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the programme, setting you up for the day ahead. We'll get you the trading diary, the calendar for the next couple of days. You're watching Bloomberg TV.
Who is the Vivian Tom clientele?
Yeah, powerful women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the t-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, they are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The guiding light for this market right now is dollar yen. So I'll tell you where dollar yen is first, and then we'll take a look at everything else. Dollar yen right now just short of 147. That currency pair has moved by about 1.8% in today's session. That's where we are at the moment, given a nudge by the Bank of Japan Deputy Governor. That gives a nudge to all of this. Equities up by more than 1% on the S&P 500. Treasuries down and yields higher, up by 3 basis points, 392.78 on a US 10-year. As we count you down to the opening bell, about 1 hour and 9 minutes away, let's get to the trading diary, the calendar for today and the rest of this week. Vice President Harris and Tim Walz hitting the campaign trail, holding rallies in Wisconsin and Michigan this afternoon. J.D. Vance planning to mirror their route throughout this week. After the market close, we'll get some results from Warner Brothers Discovery, and tomorrow, another round of jobless claims for some Fed speak from the Richmond Fed President, Tom Barkin. Joining us now to talk about all of this is Bloomberg economics and policy correspondent Mike McKee. Mike, good morning to you, sir. Light on data, light on Fed speak. What do you make of what you've seen and what you've heard so far this week?
I think it's been a kind of classic market overreaction to things, and then misunderstanding of where the Fed is from some people on Wall Street who've called for this emergency rate cut or a 50 basis point announcement or something like that. Tomorrow we get jobless claims. It's going to be the one number that everybody cares about this week. And I have a chart that kind of gives you pause. When you consider what's happening with jobless claims, I mean, we're looking for a slight drop, but it's possible they go up again. But when you look at the non-seasonally adjusted and seasonally adjusted rates of jobless claims, the blue line is seasonally adjusted. That's what we report. The white line is non-seasonally adjusted. And look at the difference. Look what happens every July. Claims go way up on a seasonally adjusted basis. And look what's happened this year. Not only is the same pattern being followed, but there's a great divergence between the two. And that may be in part because of additional people coming into the labor force and new seasonal adjustment factors post-pandemic. The Fed is only going to act if they see a serious, real problem with the labor market. And maybe this is not telling us there is one.
There's so much blame going around at the moment. The Bank of Japan, the Federal Reserve for not cutting the interest rates. I mean, pick your poison. Some people even blaming Kamala Harris, which I have to say, I find that absolutely ridiculous, just sort of bonkers. I thought it was kind of ridiculous how many people thought it was Trump at times, and now it's Harris. The whole thing's nuts. Yeah. Let's park that. Ed Yardeni blaming the weather. Can we talk about the weather a little bit more?
There's a lot of people who are blaming the weather. And even Mary Daly was talking about the weather when she was speaking the other day, because yes, the BLS says it wasn't the hurricane, and we have no reason to doubt their reasoning on it, but there were 436,000 people who couldn't work because of weather. And so there was something going on. It may not have been right in Texas, but maybe around the country. So there is the chance of a big snapback in the August numbers when we get them in September. We don't know, but there is that out there.
When you look at something like ISM services this week, where the employment part is quite strong, How much do you actually want to read into that? Or do you say this is just like a small segment of the economy and I can't extrapolate it for the data to come?
Well, it's a big segment of the economy. It's a small survey, but it's also a sentiment survey. It's what purchasing managers think is happening in their company, and they're telling us that they're not letting people go at this point, and it doesn't suggest that they're going to be hiring a huge amount of people, but as long as they're retaining the people who are on their payrolls, then that squares with what we're seeing with jobless claims, and services obviously the biggest part of the economy, so that's an important number. Would have been interesting to have that before the payrolls report last week. It wouldn't have kind of matched up.
We're waiting for jobless claims then tomorrow morning, 8:30 Eastern time. Just to give you a sneak peek of our survey, our estimate, our median estimate in our survey, 240,000, which would be a drop back from the previous week's reading of 249. So we're looking for 240 tomorrow. This is going to be a key feature of our programming tomorrow morning. Given we're so light on everything else, there's going to be a lot of weight put on this number following the soft job print on Friday, on payrolls Friday, and we'll see what we get in the market in response to it. Our lineup looks like this. We'll catch up with Seema Shah of Principal Asset Management, Sarah Wolf of Morgan Stanley, Tony Rodriguez of Nuveen, and Samir Samana of Wells Fargo. All of that still to come as we count you down to the opening bell, about 35 minutes away, with equity futures positive on the S&P 500 by a little more than 1%. From New York City, this was Bloomberg Surveillance.
In global leadership are on Bloomberg.
I envisage not only some kind of a bridge towards membership or language linked to the irreversibility of Ukraine's membership in NATO, but also some kind of a broader package of military material, of financial aid. The more we support Ukraine right now, the sooner the war will end.
Nobody covers the top global leaders like Bloomberg Television and Radio.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different.
The effective Fed fund rate is unchanged at 5.33% for August 6th.
Investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Japanese dovishness drives futures higher in the U.S. 30 minutes until the start of trading. Here, I'm Matt Miller.
I'm Shanali Bassett. Katie Greifeld is off today, and Bloomberg Open Interest starts right now.
Coming up, dovish signals from the Bank of Japan give fresh legs to the recovery in stocks globally. But worries remain. Disappointing earnings reports continue to pile up, with Disney and Airbnb showing weakness for the U.S. consumer. Over the next 2 hours, we're going to get the view from the C-suite as well, from Rivian CEO R.J. Scaringe, Resi CEO Pablo Rivero, and MicroStrategy's Michael Saylor. Let's take a look at where markets are trading right now. You've got futures higher by more than 1% on the S&P 500. On the NASDAQ, we're looking at a 1.4% gain. And as Shanali just pointed out to me, we're seeing Treasuries almost back to 4 on the 10-year.
On the 2-year, back to 4, but the 10-year also on the rise. Certainly, we have erased a lot of the gains that we saw this week. But let's take a look at what else is erasing gains. That is Disney, showing weakness in its park business, overshadowing its streaming profits. Disney down now about 1.7% off the lows of the pre-market, but still down nonetheless. Let's flip up the board here and take a look at some other earnings from this morning. Airbnb down more than 12.6%, points to weaker demand here based on its outlook. Bookings also weaker than expected. If Airbnb continues to drop, you could see a record drop, so keep an eye on that stock. Lyft down more than 13.6%, similar issue here. Bookings and outlook missing expectations, and Rivian down another 9.3% pre-market. Second quarter revenue missed estimates, with cash burn being bigger than expected. You're not going to want to miss it. Tune in a little later with our interview with Rivian's CEO coming up in just a few minutes, Matt.
Yeah, very much looking forward to that. Let's talk, though, about the markets. Goldman Sachs CEO David Solomon sees more jolts ahead as the market reorients itself. He spoke on an upcoming episode of the David Rubenstein Show, Peer-to-Peer Conversations.
I think we're going to see more volatility in the short term here. This was a pretty big, pretty meaningful correction and a big unwind of leverage, as we have discussed, in certain parts of the system. My guess is we'll see a little bit more rebalancing. But my base case is still that there's a good chance the economy is still in reasonable shape.
All right, joining us to talk about this is Brian Levitt, global market strategist at Invesco. And Brian, he spoke with David before the Bank of Japan came out and essentially offered a jawboning put, right? Saying that we're not going to raise rates anymore if markets are volatile, like now. Yeah. What do you think that means for the carry trade? Because that was at least one of the reasons that we saw the big collapse in prices on Monday.
It did seem like a big overreaction for one rate move that you probably could envision for the first time in Japan in a long while. And the reality is, anytime you get volatility in markets, it tends to be the result of policy uncertainty. Usually it's centered in the United States with the Federal Reserve. This time, the uncertainty of just how high the Bank of Japan may raise rates. I always thought it was an overreaction. This idea that after fighting deflation for a few decades, we were going to see Japan raise rates significantly was probably an overstatement. I'd say instead it was the market looking for an excuse to pull back.
Was it an overreaction, or was it just a classic deleveraging? It's interesting. I think it's fair to point out that that carry trade doesn't just exist in the yen. Some strategists pointing out this morning as well that the yuan is something to keep an eye on as well. Can you see more deleveraging ahead?
Yeah, so I agree that it's deleveraging, but it was an overreaction to assume that it was going to keep going. To think that, once that leverage was taken out, once that was covered, that the Bank of Japan was going to keep raising rates and it would no longer be a funding currency. It seemed overstated given the dynamics, given the structural position of the Japanese economy.
In terms of the U.S. economy, it seems like we're still seeing some pretty significant growth, right? At least in Q2, 2.8% is nothing to sniff at. And as Mike McKee points out to us often, the Atlanta Fed is forecasting 2.5% in Q3. Are you worried about the unemployment number?
Not worried about it. What I would suggest is we're slowing. It looks like, if you look at the leading indicators, we're below trend. It's pointing to below trend growth and slowing, but certainly not to levels that people would worry about if they were forecasting a recession. I mean, you see the unemployment rate moving up. You see things like the ISM manufacturing survey going down to 46. These are all signs of an economy slowing.
Well, in the earnings reports that we got yesterday from Airbnb or this morning from Disney, it seems like people aren't shelling out cash to go to the House of Mouse.
Look, sometimes you have to be careful what you wish for. When we were sitting here with 9.6% inflation rate, the concern was that the consumer was just not slowing down, and we were booking Airbnbs and we were going to the parks and Disney because we hadn't done anything in a few years. We had saved some money and we wanted to enjoy some experiences. So we can't have it both ways. We knew the consumer had to slow down. The question now is just how slow does the consumer get? And, for the most part, the consumer is in reasonable shape. There's no reason to believe that this is a consumer that's about to crater. But that's the concern I think some people have.
2 days ago, there was a much more drastic expectation in the bond market on how fast you would see those cuts, people even calling for that intermeeting cut. And we were talking about this idea that the 2 years already flirting with 4% again. And if you see rates not come down as fast as perhaps the market would like, then how much weaker does that consumer get going into next year?
Yeah, the longer that rates are elevated, the more challenge for the consumer. So I've been saying now for a while that I wish the Federal Reserve would get out in front of this. I believe that the inflation story was way behind us. Typically, when you see inflation roll over, it doesn't spike back. It was a pandemic challenge, right? Blame it on whoever we want. It was a pandemic challenge. So inflation was no longer the problem. The Federal Reserve should be easing. They should, and that's what the 2-year has been telling us. Now, maybe not as much today as 2 days ago, to your point, but the Fed should be easing, starting to take some of that pressure off. The good news is, though, it's not an over-levered economy.
Well, I was just going to bring that up because Shonali's worried about the embedded leverage in the economy, but it's really at the financial level, right?
All I'm saying
banks. No, I think it's fair.
It was a huge moment to realize there was more leverage than we realized.
Yes, and we're still trying to measure the size of the carry trade. But in terms of the economy, mortgages, the consumer, which is obviously the biggest part, you're not worried about a real recession here, or at least a big drop.
80% of Americans have a 30-year fixed-rate mortgage. 90% of Americans have a fixed-rate mortgage of some maturity. So most Americans are not feeling it. Now, yes, credit card balances have increased. I've joked that was all just Taylor Swift tickets last summer. But balances have increased. But if you look at servicing them as a percentage of personal income, the consumer looks fine. So, no, I'm not overly concerned about a significant deterioration in economic activity.
To that end, also, Torsten Slok over at Apollo was out with a great note this morning to the point that you've been making, that this drop or the rise in unemployment rate was due more to the rise in immigration, increasing labor supply here, rather than it was a number of job cuts really hitting the market. What does that mean for the way you read the unemployment reports moving forward?
Well, I think we say that every time, though. So we've got to be a little careful, because what you find with the unemployment rate is once it starts to move, it doesn't come back. It goes in the direction that you don't want it to go. That's what tends to happen. And so that's why I would like to see a policy response. Now, what does it all mean for investors? We just did an 8% decline. We do those almost every year, right? So 5 to 10% you recover in 3 months, right? Not a big deal. Now,
and you were already telling your clients to get defensive at the end of last month.
We were. And a couple of days of small cap rally hurt my feelings a little bit, but I'm happy we were telling people to be a little bit more defensive until we see the Fed step in, more of a normalization of the yield curve. But, if you have a recession, you're looking more like a 20% decline, and it might take a year or two to recover. So that's really what we're grappling with if we want to put it into bigger terms for investors, at least from the broad market. So this feels like a garden variety correction. right? I would need to see credit spreads blow out far further than they are right now. I would need to see leading indicators of the economy deteriorate far more significantly to be more concerned that this becomes something more significant.
Matt will lose his mind if I start forcing credit spreads, free market.
I like IG credit spreads. That's a very good point. Those are your canary in the coal mine, essentially.
Those are my canary. You know, they don't use canaries in coal mines anymore, if anybody was worried about it.
That's good.
We certainly need them
I
for
think
this
that's a good
market,
thing,
however.
right?
Brian, we got to leave it there. That is Brian Levitt of Invesco. Now we have some breaking news that we want to point out to you. The Consumer Financial Protection Bureau announcing a probe on JP Morgan, Wells Fargo, and Bank of America over Zelle scams. It's a broad and nature type of probe here, according to the Wall Street Journal reporting this morning. According to people familiar with the matter, JP Morgan had disclosed that it was responding to a CFPB inquiry, and other banks are expected to disclose their contact as well, Matt.
Right. They're investigating not only those banks, but all big banks and Zelle scams. And I mean, this is their job, right? This is what the Consumer Financial Protection Bureau was set up to do. So,
and at the end of the day, you know, more people are transacting online. Zelle is a third-party service that they're using, so all banks are now being.
That's right, and we're looking at about $10 billion in scams in the U.S. economy alone per year. So it's become a serious problem, and it's growing quickly. I think it was $8.8 billion in the year before. So it's getting worse and worse, yeah.
Yeah, it certainly is.
All right, another quick check on futures here. They're getting better and better. You can see the S&P futures up 1 0.2%. The NASDAQ futures up a little bit more than 1.4%. And the small caps gaining back a little bit. They had lost almost everything from that great rotation last month. Will they add to it? Let's get a look at the stocks moving ahead of the opening bell. The individual names for that, we go to Abigail Doolittle. Abby?
Well, Matt, let's start off on a stock that is certainly helping the futures this morning, and that is Lumen Technologies. Take a look at the stock, absolutely soaring up more than 40% in the pre-market. Now, interestingly, they put up a bigger loss than expected, a small sales beat, but most important, their free cash flow forecast off the charts. Investors really liking it. It looks like AI demand is helping out this telecommunications company. Let's take a look at an earnings mover to the downside, however, and that is Super Micro Computer, right now down about 14%. There was a 25% earnings miss on very, very disappointing gross margins. There were supply chain constraints in liquid cooling, plus a large customer mix. They actually boosted the sales outlook, but investors looking past that. And then in terms of why those futures are truly higher, at least relative to the S&P 500, the NASDAQ 100, take a look at the three most valuable companies in the world, Apple, Microsoft, and NVIDIA. Actually, I don't know about NVIDIA if that's in the third spot anymore, but in any case, big tech is making a comeback. I would point out, though, that, Matt, Apple lagging, that is the key stock to take a look at here in the days ahead to see whether or not the pullback has abated.
All right, you've been keeping your eye on Apple. We'll continue to watch that as well. Just above $200 right now. Abigail Doolittle, thanks very much for that. Coming up, Rivian's second quarter missed estimates slightly. I mean, we're talking about $1.16 billion in revenue instead of $1.17 billion.
Market doesn't like it, though.
In revenue. But the market doesn't like it. Maybe the cash burn is worse than expected. We'll talk to the CEO, RJ Scaringe, next. This is Bloomberg.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built on mediation, on trying to help in resolving conflicts. between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
Let's get to high interest now. A look at what's making headlines around the world. Bangladesh's president and security chiefs met the demand of student leaders on Tuesday to name Nobel laureate Muhammad Yunus as the country's transitional leader after mass protests led to the resignation of the country's prime minister earlier this week. The high-profile intellectual previously pioneered microloans to fight poverty. We'll be watching him closely. Vice President Kamala Harris is stepping up her efforts to bring rank-and-file union members in swing states back to the Democratic fold. She's being joined by her newly named running mate, Minnesota Governor Tim Walz, at rallies in Michigan and Wisconsin. And United Auto Workers President Shawn Fain is expected to join in Detroit as well. And more than 24 packages of cocaine were found on a Florida beach, according to U.S. Border Patrol. That's because Hurricane Debbie's strong winds swept them there from somewhere. Sustained gusts of 74 miles per hour blew 25 packages onto the Florida Keys, where they were discovered by a Good Samaritan who handed them back to the police. Now, we are watching Rivian stock this morning. It is down pre-market after the EV maker's second quarter revenue missed analysts' estimates by just a tiny, tiny hair. Cash burn for the quarter, though, also came in bigger than expected. And this is the worry with Rivian. Joining us now is the founder and CEO, RJ Scaringe, as well as Bloomberg Technology co-host Ed Ludlow, who covers the EV market so closely. RJ, I want to ask you just quickly about the sales. This is no doubt a hot product. I mean, I have been fascinated by the car. I love the design, looking at it for years, and people wait in line to get them for a long time. Why are sales only growing 3.3%?
Yeah, I mean, it's great. As you said, it's great to see the reaction to the products. And we see that both through the excitement of our customers directly, but there's lots of ways to measure this. And we just had J.D. Power does an annual appeal study. We came out as the #1 brand this year. We had a #1 ranking on a J.D. Power study last year. So the reaction to the product's been great. We've in the second quarter, we went through a big refresh to the product where we've now launched what we call Generation 2 of that vehicle, of the R1T and the R1S, where we made significant improvements in the product, but also took a tremendous amount of cost out of the vehicle.
RJ, the kind of summary of the earnings print was that all of the guidance previously issued was reiterated, and there's a lot of positivity around that. Very simply, loads of people ask me to ask you, can you define what modest gross profit means, or what you're defining it by in order to achieve it?
Yeah. I mean, ultimately, this has been the central focus for us as a company, as a business, is driving cost efficiencies into everything that we do, into our bill of materials, into how we operate and run our plant, and ultimately driving towards getting our production of our R1T and R1S to positive gross margin, ultimately to have the business get to positive free cash flow and profitability. So there's a whole series of steps we're making along the way in terms of improving costs, but the biggest singular step that we've made is what we did in the second quarter. We took the plant down for about a month. Well, we made meaningful changes to the operations, and importantly, changed a significant portion of our supply base out to new suppliers in conjunction with a number of design improvements. And all of that comes together to take us to a place where the incremental contribution of every vehicle we sell is positive, and that's that's what we're driving towards. That's where we continue to guide towards for the fourth quarter this year.
In the first instance, oh, sorry, Matt, I was just going to hold RJ to account on that one and say, in the first instance, is it just like more than zero? or single digits gross profit? Just, I think that's the answer we're looking for.
Yeah, we haven't provided a specific number, but certainly by saying it's positive gross margin, it's more than zero. Our objective, what we've guided to for a long time, we continue to maintain this guidance, is the long-term margin profile on R1 should be around 25%. And so that's what we, beyond just this fourth quarter performance that we're tracking towards, seeing how we continue to improve in 2025 and beyond, we still maintain confidence in the 25% gross margin.
And the gross profit on vehicles has nothing to do with the credits, but with credits you can make a lot of money, as we've seen in the case of Tesla. You're making double-digit millions there. Do you expect that to grow considerably? Is it really part of your financial planning?
Yeah, I think as we design the business and think about how we're operating the company, the credits environment is certainly something that's a helpful tailwind, but we don't design the company or the business or a strategy around it. It is worth noting, though, that we're seeing the credits environment really become a lot stronger as a number of existing or legacy manufacturers dial back or walk back from their electrification strategies. And we see that as further, I mean, the most important point here is it further amplifies the need for more product in the marketplace. There's very, very little choice in the sub $50,000 price range. And we see that, with just the dominant market share position that Tesla has with its Model 3 and its Model Y. Customers need choice. And so this is why we're so excited about the R2 program, because we think there's a tremendous amount of latent demand that wants to buy a vehicle, a lot like an R2, wants something that's less than $50,000 in that product. When it comes to market, it hopefully answers that need.
RJ, for most of the time that you and I have known each other and we've talked, Rivian has been in a position where it's been supply constrained. I wonder if that's still the case on the R1 refresh. You talked last night as a big factor towards gross profit being ASP, essentially, that these higher performance spec R1s are going to put you in a wider range of price points, but that will be a contributing factor. Is there a backlog, essentially, for R1? Are you supply constrained in that sense?
I mean, it's an important point. We've with the relaunch of what we call the Gen 2 R1, it's not just cost down. We've also added some new packages. We have a tri-motor, our new next generation quad motor is extremely high performance. That's allowed us to stretch the pricing band from our base, roughly $70,000 vehicle up to over $100,000 for our quad motor. And what that's really helpful in doing is helping to drive continual, sort of maintenance of that high average selling price. So this is something that we also continue to have confidence in. It does reflect, as you pointed out, that there's a backlog of interest and excitement around the product. And today, one of the things we're focused on is making sure that the tri-motor and the quad motor ramp meets customer demand. Those are the higher price variants. They're great for driving ASP. They're also the products that a lot of our early adopter customers really want to get. They want the best version of the vehicle that we make.
I want a quad motor. Over 1,000 horsepower with this vehicle. I think it starts at around $100,000 if I want the highest trim level, RJ. I would have to borrow money to buy that. How important is it for you that the Fed bring rates down into the next year?
I mean, ultimately, we watch this extremely closely, and just the overall macro environment that we're in, an interest rate environment, it does have an impact on folks that are buying vehicles that are of this price point, $80,000, $90,000, $100,000 vehicles. It's hard for us to predict exactly how that's going to play out. We, much like in the credits environment, we work really hard to make sure that our business is not dependent upon ultra low rates, but it certainly affects anybody who's selling products that have financing associated with them.
RJ, you gave really early heads up to investors that you're going to shut down Normal for about a month for splicing the plant, right? Accommodate for R2 install. That's a long period of time, thinking back to April, the 3 weeks. I know you're not going to tell me a number for production for 2025, but could you extrapolate out whether it's higher or lower than the base of 57,000, given that 4-week period you outlined?
Yeah, the decision to put R2 in normal was one that's going to ultimately provide us around $2.25 billion of capital savings in terms of reduce the amount of capital necessary to launch R2. So that was one of the big drivers. The other is it allows us to have really high fixed cost absorption between R2, R1, and our commercial vans in a single plan. Now, of course, to do that, it does require us, as you said, to shut down the plant for a period of time. What we've provided guidance on is to say in the second half of 2025, we'll be shutting down the plant for about a month. And that will impact production. We haven't, we've guided to say 2025 will grow relative to 2024. We haven't been overly specific around the exact numbers of vehicles we'll produce, but it will be another year of growth for us.
RJ, when I was a kid, some of the cooler guys had a Scout International truck in the high school parking lot. I always thought they looked so cool. And Volkswagen is reviving that brand. You're working closely with Volkswagen. My immediate thought when I saw that story was, wow, they could just take a Rivian and rebody it as their new Scout. Is that anywhere near part of the plan, or what kind of vehicles can you build together with VW?
Yeah, the Volkswagen partnership is something we're really excited about, but the focus of this is around leveraging our network architecture, our topology of computers, topology of electronic control units, the ECUs in the vehicle, and then, of course, our software stack. It does open the door to other types of partnership and activities we could be doing with Volkswagen Group, but to date, the core focus, the singular focus is around our software and electronics technology.
All right, well, we look forward to any news that comes out on that. RJ, thanks so much for joining us. Really appreciate your time today. RJ Scaringe there of Rivian, as well as Bloomberg Technologies anchor Ed Ludlow, who also is essentially the EV reporter for us here across all of our platforms. This is Bloomberg Open Interest. A quick check on futures shows that we continue to see more than 1% gains, pretty much the same as it looked 10 minutes ago. The market open in 3 minutes' time. We'll talk to Nancy Tangler of Laffer Tangler Investments today as well on what she expects the market to do. This is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can
So
explain
1 minute
things
remaining
really
now to the
clearly,
cash
which
equity
shoots you
open
up the
and the
learning curve.
market on open
Understand what
imbalance.
they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Let's take a look at where futures are trading. Right now, more than 1%, 1.2% on the
So we're looking now to the market on open imbalance. S&P 500, 470 million to the buy side. NASDAQ 100, 10 million to the buy side. Dow 30 stocks, 70 million to the buy side. Mag 7 stocks near flat at minus 1 million to sell.
On Monday, and especially if you put them together with Friday. But it's better than a stick in the eye, as my first stockbroker used to say. You can hear the New York Stock Exchange bell there rung by Abbott. Down here on the NASDAQ, you have Hellport AI ringing the bell. A quick check on the major averages as we get into the swing of things today, and you see, sorry, let me move this way. You see essentially what you saw in futures, 1.1% gain on the S&P 500. The NASDAQ up 1.5%. The small caps doing pretty well today also. The Russell 2000 up 1.33%. In terms of the stocks that we're watching closely at the open, Lyft and Rivian, you know, we just spoke with the CEO of Rivian. Right now they're down 9%, so getting punished pretty badly for a slight miss on revenue and a bigger cash burn than had been anticipated by analysts in our survey. Taking a look at Lyft right now, down 18%. That is rough. Being second to Uber is no good after those earnings come out. Shonali, what are you looking at in terms of, I think, really the consumer that's getting hit?
Absolutely. Some brutal moves in consumer-focused stocks reporting this morning. You have Airbnb now down almost 15%. You can see potentially a record drop down in Airbnb shares today. Also, Disney seeing a drop of more than 3.2%. Both companies showing signs of weakness in the consumer. Airbnb bookings missing, and Disney showing weaknesses in their experiences business. Also watching Supermicro falling, disappointing gross margins over there, overshadowing an otherwise strong 2025 net sales forecast. Supermicro now down 12.5%, 13%. Let's take a closer look here with Bloomberg's Abigail Doolittle.
Yes, it is the worst day, Shonali, going back to April 19th. So take a look at this nosedive, down 13%, as you mentioned. It has everything to do with those gross margins coming in at 11.3% versus the estimate, or versus 17.1% a year ago. So basically a 400 bip drop in gross margins. However, that forecast that Shonali was just talking about, let's take a look at the big growth here, because we will see that revenue is really expected to grow. This year, revenue is expected to grow more than 100%. Next year, very strong growth, I think around 70% or so. In terms of the overall AI chip space over the last month or so, though, there's been lots of bumps. Let's check in on a number of these stocks. And, well, we've got lots of red on the screen here. This is pretty interesting, because if we were to have done this about a month or two ago, this would not have been the case. NVIDIA down 14%, AMD down 22%, ARM down 34%. And then, Matt, here is that Supermicro in this over the last 30 days, down about 36%. Really pretty extraordinary.
Yeah, absolutely. But if you have that kind of exposure to an industry that gets hit so hard, a lot of people think AI is a bursting bubble, Abigail, and the NVIDIA doesn't get punished as much as the smaller players like SMC. Abigail Doolittle, thanks very much for that. Let's talk about whether or not AI is a bubble. Is it sustainable in terms of these levels, valuations, even after the big drop, or especially after the big drop that we've seen? Nancy Tegler joins us, CEO and CIO at Laffer Tangler Investments. Nancy, you all had leaned in pretty hard to this. I know that you lightened up a little bit in terms of your big tech holdings, thankfully, previous to the last few days of drops. But what do you think about the potential of AI? I mean, are we over-investing? Are we going to see ROI?
think we are, Matt, and thanks so much for having me. You know, I look at the company's CapEx budgets, and I see it a little bit differently than the street does. First of all, these are smart management teams. They're not going to invest billions, tens of billions of dollars in something that they don't think they can monetize. But more importantly, one man's CapEx spending is another man's revenue. So I think you want to be in the right spots clearly, and we can just see that in the consumer space between Uber and Lyft. It matters which companies you own. You know, happily we own Uber and we don't own Lyft, but it doesn't always work out that way, by the way. But I do think you want, if generative AI doesn't work, then the market has much bigger problems because it's really permeating across sectors. I just gave a speech on this at the Money Show in Las Vegas, and the use cases are exploding, and it's not just within technology. I mean, I know most people know that, but it's financials, healthcare, industrials, and so you really need to see this work, and we think it will. Last thing I'll say is, you know, I was managing money in the 1990s, poster child of excess valuation. Cisco Systems closed out the decade at 100 times earnings. John Chambers, who was the CEO, has said that he believes, and I think he's right, that generative AI is bigger than both cloud computing and the internet combined. So stay tuned. I think we're in early innings.
More on the consumer here, Nancy, because you're seeing Airbnb really drop to record levels. You're watching it drop the most since it went public. And Airbnb, Lyft, these are a generation of companies that went public when interest rates were ultra low and when the consumer was very, very strong, flush with cash, really. Do the dynamics change, or is this just a knee-jerk reaction you're seeing? A lot of fear around that consumer causing these stocks to fall more than they would have if that fear wasn't there.
Yeah, I think you're right, Shonali. I mean, if you look at every company that has just modestly disappointed, I mean, take Microsoft. The disappointment was Azure was growing at 30% versus 32%, and the market sold it off. I think the market is looking for an excuse to take a number of these companies down when they disappoint. I don't think either one of these companies is in dire straits. They are in a different position than the large cap tech companies who are actually benefiting from higher interest rates because of the cash on their balance sheets, just kind of, you know, printing money, if you will, from the interest income. So I think you just want to be adept. Some of these will be buying opportunities, and some of them will be dead money that you want to stay away from for some period of time. Own the industry leaders with the best management teams.
Nancy, you referenced the 1990s. I was there too. You've been in this business for a long time. When you look at these summer swoons, and you think about investors who are in it for the long haul, not, you know, tactically trading, but holding a portfolio for 5, 10, 15 years out. Are these always good times to buy?
Yeah, absolutely. We're having a sign made for our office that says volatility is the friend of the long-term investor, because historically, just look the last 3 years. In 2022, it made sense to add to holdings and add risk back into your portfolio, which is what we were doing. 2023, we got another summer swoon in technology and growth stocks in general, and now we're seeing it again. I think, you know, you can't underestimate the power of the hedge funds and the hedgies going to the Hamptons and pulling some of the volume out of the markets and increasing volatility. Then you've got this, you know, the carry trade issue. But at the end of the day, it made sense. I mean, we had some real big pullbacks in the 1990s, but the NASDAQ was up 820-something%, and the Dow and S&P were up about 450% with higher interest rates. So 10-year between 5 and 8%, with higher inflation averaging around 3%, a labor shortage. What we haven't talked about, and what I thought was the bright spot from last week, is productivity. It came in well ahead of expectations at 2.3%. It was revised up, and that's, you know, that put pressure downward on unit labor costs, which will put downward pressure on inflation. Chairman Greenspan understood that. And so let's hope that this Fed does, because you can have, you know, a GDP now of 2.9%, as it was recently revised up to, and you can have growth that is less inflationary than most people would expect.
Nancy, it's worth talking more about the macro. We're talking more about positioning, but another example here that I think is pretty fascinating is you look at a market in search for options, and on the flip side, you see some major pain in some of those consumer-focused stocks. You see Lumen Technologies, after a 90% surge yesterday, another 40% this morning. And I wonder how much money is just flocking to the AI names that work and bursting valuations to a place that maybe are unsustainable.
Yeah, see, I think that's the point, Chanel. I mean, that's what always happens when you have emerging technologies. And we learned that painfully at the end of the 90s when you had, analysts measuring eyeballs instead of earnings. And I think at the end of the day, stocks trade off of earnings. So in the near term, we have all these other, sort of shocks that drive the short-term returns, but long-term, companies trade off of earnings, and you need to own the companies that are going to survive this. And so, as obvious as it sounds, you want to own Microsoft because they'll buy the competitor that's leading edge. And they have leading edge technology themselves. But those are the kind of places where I want to hide. If you think the economy is slowing, and the GDP now number will go up and go down between now and the end of the quarter, but it is slowing. The labor market is softening. You want to own
stocks
the
extending
reliable
gains
earners.
here.
And
That's
if
the
you look
NASDAQ
at,
up 2%
consumer
now.
stocks, as you pointed out early, Pepsi, and
S&P is up
Procter &
around
Gamble,
1.5%
they have
too.
no more pricing power, and their earnings growth is going to be mid-single digits, and they're trading at 21, 24 times next year's earnings. I'd rather own Microsoft that's growing 15, 16% at 31 times earnings, just as an example. So it matters. You want to stay away from the new fractional companies.
Nancy, we thank you so very much for your time. That is Nancy Tengler, CEO and CIO at Laffer Tengler Investments. And it's interesting, Matt, it's not just Lumen that is rising today. You actually have every company in the Philadelphia Semiconductor Index rising this morning. The SOX is up more than the rest of the market, up more than 3%.
Yeah, good breadth today. I noticed 434 stocks are up right now in the S&P 500. So really ripping. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Open Interest, and a quick check on stocks this morning, ripping as we've been talking about here. S&P 500 up more than 1.4% with a broad-based jump in most of the stocks in the index. NASDAQ 100 jumping even more, 1.8% higher. Those small and mid caps also seeing some love, Matt, 1.4% higher.
All right, let's get your top calls for you. Some of the analysts' action in focus this morning. First up is Loop Capital Markets cutting Trex to a hold. The outdoor decking company lowering its sales outlook for the full year. The Loop analyst says headwinds are more significant than had been anticipated. Next up is TD Cowen cutting its recommendation on Molson Coors to a hold. The analyst says the beer giant didn't hold on to share gains from last year's Bud boycott, especially considering that shelf space for Molson Coors beverages increased by 13%. They should have taken advantage of that and failed to. Finally, B. Riley is downgrading TripAdvisor to a neutral. The online travel site missing second quarter revenue estimates. The analyst says the disappointing report reflects deterioration in the company's core business. Shanali?
One stock to watch at the open is Disney. The company posted its first ever profit in the streaming department, but it's offsetting sluggish performance at its theme parks, which are seeing moderation in demand. You're seeing Disney shares down almost 3%, and CFO Hugh Johnson spoke earlier on Bloomberg Surveillance.
The lower income consumers are a little bit stressed and shaving a little bit off of their time at the park. And then higher income consumers are tending to travel overseas a little bit more right now. So we really just see this as a few quarters of slight perturbation in the numbers. Frankly, I think we're going to be right back as we get into the middle of next year.
Madison and Wall principal Brian Weiser joins us. You see the entertainment numbers out there. That's really what's spooking the market a little bit this morning. When it comes to Disney, you have the CFO saying that it's, let's say, somewhat of an aberration, not something more consistent. Bloomberg Intelligence, though, disagrees. Brian, how do you see these numbers playing out?
Yeah. Well, I thought the advertising numbers were certainly very strong, although they had also very, very easy comparables from the year ago period. So it's kind of hard to read that. You may have seen Tegna also just came out with numbers which were probably closer to where the underlying TV business is at -5. And if you think about that, Disney did quite well, all things considered. When we look at the streaming business, they're continuing to grow and make good progress there. I think that the shift to including ad-supported offerings for Disney Plus, obviously really positive. Hulu's doing well. Consumers are willing to spend money on these services. And so I think that's probably, that's the stuff that I'm focusing on. It's a strong business in the long term because they are investing in content. They could be investing more. I think Disney Plus would probably benefit from more of that. But ESPN also is doing quite well, remarkable numbers from the quarter.
I wonder about the parks business, just because we've seen some eye-popping numbers recently, Brian, in terms of costs. I think I saw a report that a high-end trip with a family of 4 costs $40,000 to Disney World. Are they regretting their price increases, or are they going to hold tight, since at least they're not seeing a decline, right? They're still seeing 2% gains year over year.
Yeah, well, I mean, I don't spend too much time thinking about the travel business, but I think that maybe I could point this out, that consumers are still spending an awful lot of money on services broadly. When I looked at the latest services quarterly survey from the Census Bureau, I mean, it looks like we're going to still see mid to high single-digit growth rates of spending on services. And exactly as Hugh Johnson pointed out, the higher-end consumer is probably driving that. The lower-end consumer is probably not. Now, can Disney parks, see some short-term challenges because there's going to be more spending on travel abroad? It makes sense to me. But the underlying spending patterns in terms of higher spending growth skewed towards higher income consumers, I think, is probably going to help them in the long run.
You know, you think about Disney and the position it's been in the last couple of years, and in this earnings report, they really do tout pretty high up what they're seeing out of ESPN, ESPN Plus, and of course, there are some interesting deals happening in that industry ahead. Do you think that there's still a rationale, Brian, to bring up that conversation about what it would look like if ESPN was spun out of Disney?
And Brian, by the way, is a former investment banker, so like you're pitching these kind of deals, right, Brian?
Well, once upon a time, you know, it does make a ton of sense because the dynamics of sports and sports-related video programming are so different than the rest of the industry. It made a lot of sense in a world where you could tie together access to the distributor to the sports-related product. If you wanted the other product, rather you want sports, you're going to get all this other stuff you don't want. In this world that's more a la carte, it's a lot harder to tie those things together because the cost profile of sports-related programming is just so significant that you will not be able to avoid spending 8% more per year on the underlying sports rights. Whereas with the rest of the content business, those costs can probably go down. I mean, we talk about what an AI-driven content world starts to look like, especially when you look at reality TV and a lot of other programming, not news, not business news, certainly. The profiles of these businesses will look very, very different. So I do think that there is still a significant rationale for ESPN to eventually be spun out.
All right, Brian, great to get your take. Brian Wieser, not only famous for the analysis that he's done in media, but also for his investment banking experience. Great to get some experience.
It's in 10 minutes time now at the top of the hour.
Report. Coming up, we're going to talk more tech.
Do you see the release of the Canadian IV PMI for the month of July? Prior read was 62.5.
In the recent sell-off, we'll discuss the ones that were hit the hardest next in our Wall Street beat with Hema Parmar. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Time now for the Wall Street beat. After the global sell-off took place earlier this week, some of the world's biggest hedge funds lost hundreds of millions of dollars as a result of being in the most popular of tech stocks. But the market turmoil helped Brevan Howard's flagship hedge fund swing to a profit for the first part of the year here. Joining us now is Bloomberg hedge fund reporter Hema Parmar, who's had her eyes all over the industry, and it's been a very volatile year. When you look at Brevan in particular, I think it's an interesting moment for macro funds to be capitalizing on things. They had lost some money earlier this year due to wrong way bets on Fed cuts. How did the turmoil help?
Yeah, so you're actually seeing an example of a fund doing well in this market. They were down before July. Now they're up about 1%. They made about a 2% gain in the past couple days, which is, really good for them. They have been saying since January that the market isn't pricing in enough rate cuts to come, and so they are expecting more to come. And it looks like their bets have helped them.
What's going on at Light Street?
Yeah, so this is a fund that is not winning, down 9% in 1 month of July alone. They may be down more when you look at the turmoil in August. Up 40% for the year, but keep in mind this is a fund that has big bets.
40% for the year, including the bad month.
Including the bad month.
Yeah.
That's what I was going to say. They did really well before this.
They did, but they're still digging themselves out of 2 years of losses. In 21 and 22, they were down a collective 40%. So, they're trying to dig themselves out of this high watermark. Their biggest position, NVIDIA, about 17% of their portfolio as of March. Sizable chunks in these tech stocks, and that can work for you and the market's great, but when you see a really difficult month, it can really backfire.
How about some of these Tiger Cubs? It's interesting to see what's happening at Tiger Co. 2. They had similar problems, to my understanding, as Light Street. How does this year complicate getting out of that kind of high watermark moment that they're grappling with?
Yes, yeah, a lot of funds had a very difficult couple years and need to try to get out of that hole. And so, every month matters. Every month that you're not making money impacts the year-to-date return, impacts what investors expect, and will impact whether or not they continue to stay in the fund or they give it more time. So, until investors are made whole, the firm is also not charging fees to the full extent. And so that impacts how much they're bringing in terms of expenses and revenue.
Joe, pull up that full screen again of their holdings, because I think it's interesting to look at the fact that they're green check marks on almost every single one of these stocks for almost every single one of these hedge funds.
Yes.
I mean, it's a herd.
Concentration risk you're worried about too.
Exactly.
Precisely. So, these funds, generally Tiger Cubs, even some that are not, these are their top 10 positions. Their biggest stakes are in these companies: Meta, Amazon, Microsoft, NVIDIA. So it's unsurprising that when you see...
So in just under 5 minutes time now at the top of the hour, see the release of the Canadian IV PMI. The prior read was 62.5.
Buy the cues.
There were some funds up. David Einhorn was up. Rentec was up. So let's not throw all the babies out with the bathwater, Matt.
And they're less tech focused too. So they're more healthcare and other things too.
All right, it's interesting because, if you just own the S&P or the Qs over the past 10 or 15 years, you're outperforming any of those hedge funds. So, Hema, great to have you on to talk about the horse race. We've got to do this more often because I think it's pretty fascinating stuff. Hema Parmar covers hedge funds for us on the print side. In terms of what we're seeing in the markets, still green arrows across the board and getting better here. The S&P 500 up 1.4%, the NASDAQ up 1 2/3% almost. We've seen the Russell sort of hovering around that 1 1/3% gain. Coming up in the next hour, MicroStrategy Executive Chairman and Co-founder Michael Saylor is going to join us. I will tell you, he likes Bitcoin.
Yeah, he
does. I'm going to say he's going to go long Bitcoin. 10:30 a.m. Join us for that interview. This is Bloomberg.
US stocks extend gains, Dow Jones up 1%.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf. There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product.
Canadian Ivy PMI out early now, 57 spot 6, 57 at spot 6.
Of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, why haven't, we're owning this space.
Good morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shonali Bassett. Katie Greifeld is off today. And coming up, dovish signals from the Bank of Japan give fresh legs to the recovery in global stocks. But worries remain. Disappointing earnings reports continue to pile up, with Disney and Airbnb showing real weaknesses in the consumer. And we'll get the view from the C-suite this hour from Resi CEO Pablo Rivero and MicroStrategy's Michael Saylor.
Let's get a check on where the markets are right now. Seeing some decent gains here, 1 2/3% on the S&P 500, and some really good breadth as well. If you take a look at the S&P right now, the move function on your Bloomberg will show you that we have 458 stocks gaining. So almost all of them are up. The NASDAQ gaining 1.9%, almost 2% there. We know that the Russell's up as well. The 10-year yield at 393.73, and Shonali, as you point out, we're looking at 399 right now on the 2-year. No, just over 4% now.
Ooh, we broke
on the 2-year yield. So investors selling off those treasuries that they were clamoring for on Monday.
But if you're buying that 10-year auction today, you're looking at 393. It might be below 4% for the first time in a while. Now, we're also watching Europe's most valuable company, Novo Nordisk. The stock needs a checkup after reporting disappointing sales of its blockbuster weight loss treatment, Wegovy. The company's CEO spoke with Bloomberg's Francine Lacroix earlier this morning.
The second quarter is a quarter where we came in a bit short of consensus, and that's linked partly to some adjustments in how we accrue for rebates. So we really urge investors to not just look at the quarter in isolation, but look at our confidence in the rest of the year and the upgrade we are bringing.
And for more on Novo's quarter, we are joined by Bloomberg Health reporter Madison Muller. We're also going to talk about the competitors here. When you look at the numbers themselves, you look at the competitive pressure, you look at also the relationship to insurance companies and pharmacies here. Does this sell-off seem warranted given those concerns?
Right. The thing is, I mean, the expectations for Novo Nordisk and Eli Lilly are so high, and that's something that we've talked about before. I mean, the margin for error for them is very small. So anytime there's, a competitive pressure, a supply pressure, or they miss estimates, it just affects them a lot, and that's what we were seeing this morning. It's actually a good thing that there is more uptake and that we're seeing more insurers cover the drug, but that also comes with more pricing pressure because of the discounts that are offered, through the pharmacy benefit managers.
So we're not talking about, they're not selling fewer drugs, it's just that their prices are getting compressed, right?
That's
by
part
the
of it,
pharmacy
yeah.
benefits managers.
I mean, the problem for Novo Nordisk right now is they actually they're struggling with supply. I mean, that has been the problem still struggling with supply. It has, I mean, as of today, actually, most of the doses of Wegovy are listed as available in the FDA's shortage database, but Novo is having to continue limiting these lower doses, these starting doses of the drugs, because their supply is still so limited.
Can I ask, you cover the drug maker side, but I wonder about the insurer side. I tried desperately to get a hold of some Wegovy. My doctor said, okay, you know, you're 50.
But did they tell you that 1 pint of ice cream was not enough?
A day. No, the problem also is, like, I'm 50, you know, I'm a little overweight. I'm worried about my heart. I want to live longer. So I feel like it's preventative in some ways, right? We've seen studies that show these drugs are good at staving off heart attack risk. Why don't the insurers want to pay for the drug now rather than pay for my hospital stay when I have a massive coronary arrest later?
You are not going to have a coronary arrest.
Thank you.
Well, that's the argument that drug makers are making, and that's why they're running these studies to prove, without a shadow of a doubt, that these drugs do these things and that they're able to ward off these other health conditions. And we are seeing more insurers covering them, but at the same time, because the drugs are so expensive and because so many people can potentially benefit from them, it's really putting a lot of pressure on these insurers. It's becoming really expensive. So at the same time, we actually are seeing a little bit of a pullback from some insurers who are just saying it's not possible to cover all of these.
How does the competitive pressure stack up, knowing that Eli Lilly is reporting after market today, and also given the not only weight loss potential of this drug, but for all of these firms to really race to figure out what the other treatments are? Novo had announced that they kind of delayed one of their major kind of studies here, didn't they?
Yeah. So Lilly reports tomorrow morning pre-market, and Lilly has actually been, their supply situation has been getting better. So it's this interesting dynamic right now of Novo is still struggling with supply, Lilly's is getting better. So I saw some analyst notes this morning wondering whether, that's affecting decisions in the clinic of are people choosing Zepbound because it's just available, and that's a potential benefit for Lilly. When it comes to other drug makers and competition, we do have so many others that are now trying to get into this market, but Lilly's CEO has said it'll be a few years still because they have to do these late-stage studies to get approval, and so Novo and Lilly still have a huge advantage potentially for years to come because they're so far ahead of this. And we did see Novo delay one of their major studies in heart failure, and they are going to refile for approval next year. Lilly recently had a study in heart failure as well. So it's just, they're neck and neck in terms of studying these drugs and different diseases.
Although Lilly's an outperformer over the longer term. I always pull up the comp screen on the Bloomberg, and it defaults to 5 years, which I think is a nice time period to look at. Novo Nordisk total return 462%, which is not bad, right? But Eli Lilly total return 659%. Unbelievable returns there. Madison, thanks so much for joining us. Madison Muller there talking to us about the GLP-1 makers. We're joined now by Ellen Lee. She's a fundamental portfolio manager at Causeway Capital. And Ellen, I want to get your take on, the effects of these drugs, not only on the makers, but also on, if I look at Pepsi, I'm worried that people are going to buy fewer Fritos here. Do you think about GLP-1s in terms of real market-moving effects?
As of now, as the analyst talked about earlier, I think there are definitely supply chain issues at this point. So I think really determining when wide adoption will happen is the key barometer in which how fast these drugs can hit the demand of the snacking companies and restaurant companies, as well as even beverage companies. So yes, I do think about this risk longer term, but I'm also hearing what Novo or Eli Lilly are doing and also Roche are doing in terms of advancement. But yes, it is a lingering fear, yet as of right now, the adoption is slow. So we'll have to see. It's still early days to make an assessment of when it will start to significantly impact, if ever, these snacking companies.
You know, one question I have about the pharma industry is it's really easy to latch on to the allure of these weight loss treatments. But at the end of the day, it's such a specific and small part of the overall healthcare story, a sector that a lot of investors are gaining increasing interest in this particular environment. How do you navigate the sector?
I think, for us at Causeway, when we do bottom-up research, we're not just looking at the phenomenon of, meeting your, colleague or your friend who's just taken Wegovy and lost 50 pounds. We are actually looking at the supply chain, meaning, okay, is there a supply capacity there? And then we're also looking at the insurance companies to see, what the affordability will be like. So you have to look at it from the manufacturer all the way to the consumer and not ignore the supply chain issues that gets in the middle in terms of accessibility. And that's sort of key to understand, the adoption rate in the long term.
These stocks are still big high flyers, and I know that you're looking for more value, right, Ellen? At least if I look at the stocks that you're interested in, Kering, for example, it's a luxury goods maker, but it's been discounted by the market on concerns about a recession. What do you think about the luxury goods market right now?
You're absolutely right. Luxury goods market is tough. Obviously, they had their day in the sun a few years ago with COVID and so much discretionary income. I think in the current market, as you mentioned earlier, markets have been very strong, and there are reasons to be optimistic about a soft landing, and also on the converse, be pessimistic about a hard landing. But we're looking at the company's valuation, and to try to mitigate for what could happen in the macro environment, we're looking for opportunities where the downturn is already priced in. So in such case, we believe stocks like Kering, even though their earnings could fall during a downturn, much of that is already discounted, and therefore that gives us margin of safety in a scenario where there is a downturn. And also, if you look at the valuation gap between companies like Kering versus LVMH, the margin of safety is there for us to believe that, when Gucci, the brand, does recover with its new products that's hitting the stores today, there is plenty of upside.
Ellen, we have to leave it there. That is Ellen Lee of Causeway Capital. We're going to get a look at the stocks moving this hour. Of course, a lot of things under the surface here. Abigail Doolittle is here to join us. Abby?
There certainly are, Shonali. Let's start off with the shares of Fortinet absolutely soaring, up more than 24%, heading to the best day since 2009. This after a massive beat. They put up 57 cents in adjusted earnings. That represents a greater than 40% adjusted earnings beat, 2.2% revenue beat, margins good, billings growth good. Investors really liking this stock. Let's turn to the shares of Dell. Now, this is not an earnings report, but this is interesting because it could give us a sense on the global IT spend. Shares down nearly 4% right now. They're laying off some managers and sales staff to, quote unquote, get leaner amid a modernization. But again, when you see a company like this making these sorts of cost-cutting moves, you have to wonder, does that represent something from their customers? And then finally, let's take a look at some of the other tech names on the day. We have continued rebound. Importantly, Apple's now joining in, up 2.5%. Microsoft, Meta, NVIDIA higher. What's interesting here, Matt, is some of these stocks have what's called a quote-unquote V-bottom, a bottoming process that can take stocks sharply higher. Others don't. What they all share, though, is not so good-looking weekly and monthly charts, suggesting that any sort of rebound that we're seeing right now, it may not last for too long.
All right, always great to get the fundamentals from you, Abby. Thanks so much for doing that. Abigail Doolittle looking at some of the big cap tech stocks there. Coming up, the Harris Waltz campaign says it raised more than $20 million in the past 24 hours as it heads to multiple battleground states today. Details on the campaign trail next and the state of the race. This is Bloomberg.
loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg.
All right, let's get to high interest to look at what's making headlines around the world. Steve Mnuchin says it's time to kill his own creation, the 20-year Treasury bond that's costing taxpayers a lot of money. The Treasury reintroduced the 20-year bond in monthly auctions 4 years ago, but it fell flat with investors. U.S. 30-year mortgage rates plunged last week by the most in 2 years, reaching their lowest level since May of 2023. The drop has sparked a surge in refinancing applications, with one index jumping last week to a 2-year high. And Vice President Kamala Harris is stepping up her efforts to bring rank-and-file union members in swing states back to the Democratic fold. She's being joined by her newly named running mate, Minnesota Governor Tim Walz, at rallies in Michigan, Wisconsin, and with the United Auto Workers President Shawn Fain expected to join them in Detroit. Shanali?
Let's now discuss the state of the race with Bloomberg's Anne-Marie Hordern, of course, the chief political correspondent over here at Bloomberg Television. And you look at her getting on the road here. What do you expect?
So I think what they're going to do is similar to what we heard last night. This is really them going out and getting some excitement. This is a brand new ticket, very different than where we were with Biden at the top of the ticket. It's obviously a much younger ticket. There's an enormous amount of energy, if you watched last night in that room and speaking to some of the reporters who were in that room, about the excitement that this is just new and fresh. So they have to go out and talk about what they care about. They're going to lean heavily on abortion rights, if you heard that from yesterday. And you also see them trying to take this different tone. It's more of a positive tone. They don't want to look back, except to saying that we're not going to go back there. They are trying to take a more upbeat, positive tone, leaning into the fact that they are fresh. What is also very important is when you look at the Marist poll that was done before she selected Tim Walz, the governor of Minnesota, potentially now those numbers will change a little bit, but more than 70% of Americans do not know who this guy is. So he also needs to introduce himself to the American people, and I expect a lot of that is going to be what they use these next few days for.
The Republicans will bring up the protests from the pandemic era, the Black Lives Matters protests. How vulnerable is Walz when it comes to that? And then Israel hawks are unhappy that Shapiro wasn't picked. How hawkish will Shapiro Walz be in the fight against Hamas in Palestine?
So Governor Shapiro came out last night because it was in his backyard. It was in Philadelphia. It came down to him and Walz. The New York Times just ran a story about 40 minutes ago talking about the fact that Governor Shapiro, according to their sources, had called back, asking a little bit more about what his role would be. Some of them actually equate him to maybe a fresh kind of orator, the way Obama was, maybe taking the shine away from Kamala Harris, although there were definitely calls that he was potentially too much of an Israeli hawk for this ticket, which is why the Trump campaign didn't want him, for that reason, and also for the fact that he would potentially just shore up Pennsylvania in full. When it comes to Walz and how they're going to try to pigeonhole him, as I said, more than 70% of Americans, according to this recent poll, don't know who he is. So it's a race to try to define him. We know what the Harris campaign is going to say about him. Republicans are going to really want to focus on two things. You mentioned what happened with the Black Lives Matter protests. What we saw in in the state when he was governor, there's a lot of criticism that he didn't bring in the National Guard early enough when there was the upheaval following the tragic death of George Floyd in 2020. The other area of concern that Republicans are going to want to talk about is social concerns, things like gender reaffirming and the fact that they are this refuge state. And potentially, if your child goes there, can you get a court injunction to bring your child home? These are going to be areas where they're going to try to say he is too left and he is too progressive. If you look at the Wall Street Journal editorial board today, they struck a similar tone that we discussed yesterday off of Terry Haynes' note, which is the fact that she doubled down the progressives.
So we're looking now to the Fear and Greed Index, 27 out of 100, which indicates fear, while the Crypto Fear and Greed Index is 29 out of 100, also indicating fear. We're keeping an eye on the VIX, which is down 17.8% today at around 22.77 points.
Interesting dynamics here. Yes, he is kind of pro-union here, has union support. He did also veto a bill that would have set minimum wages for gig economy workers, Uber, Lyft drivers, kind of from a threat from Uber here. But interestingly enough, with Tony West also really working more on the Harris campaign, I'm wondering if there are signs of light here in terms of how they might approach the business community.
Well, I think the big thing that's going to happen next year, and even heard senators call it this, it's tax Armageddon. They have to come to a tax deal because the Trump-era tax cuts come to an end. Now, if you look at Governor Walz's policy when he was Congressman Walz, it's very different. He actually voted at one point against Democrats to extend the George W. Bush tax cuts, but at other times he voted with his Democrats. He was way more down the center. One thing for sure, though, when it comes to tax policy, potentially do we see the lowering of the corporate tax rate? Well, the White House is only one part of this. We really need to see the composition of Congress, and that we're not going to know till November 6th.
Absolutely fascinating.
Yeah, thanks so much for joining us. Anne-Marie Horton here talking politics.
Want to quickly actually
check
on
something? Did you want to look at the 2-year?
I sure did, because I am just absolutely stunned today by the movements in the bond market here. If you take a look, we are flirting with 4% now, firmly at 4%.
In 10 minutes time now, at the bottom of the hour, see the release of the weekly EIA inventories numbers. So crude oil inventories, the forecast is a draw of 1.8 million on the prior draw of 3.436 million. A range sees a build of 1 million to a draw of 3 million expected. For the gasoline inventories, the forecast is a draw of 1.8 million as well, on the prior draw of 3.665 million. Distillate inventories, forecast is a build of 1 million, on the prior build of 1.534 million. Inventories of crude and Cushing, the prior was a draw of 1.106 million.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
And it's time now for Social Climbers, the companies making waves this morning. And first up, Shopify riding highs after beating second quarter earnings expectations. The Canadian company's AI-powered tools are pulling in more merchants to its platform. And then up, Lumen Technologies extending gains after raising its forecast for free cash flow. The telecom company said AI demand is driving billions of dollars in new business. You have Lumen now up more than 26% after a rally yesterday as well. Finally, Intel reportedly passing up a $1 billion investment in OpenAI in 2018 that would have yielded the chip giant a 15% stake in the company. At the time, Intel decided against the deal because then CEO Bob Swan didn't think generative AI models would make it into market in the near future. Intel is not commenting on the report. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal.
All right, Rivian sees flat production this year, but its CEO, RJ Scaringe, expects output to grow in 2025. Ed Ludlow and I spoke with Scaringe in the last hour on his deal with Volkswagen.
The Volkswagen partnership is something we're really excited about, but the focus of this is around leveraging our network architecture, our topology of computers, topology of electronic control units, the ECUs in the vehicle, and then, of course, our software stack. It does open the door to other types of partnership and activities we could be doing with Volkswagen Group, but to date, the core focus, the singular focus, is around our software and electronics technology.
All right, so he has been using that software technology and those ECUs to update their core products. That is the R1S, their core SUV product, I should say, at Rivian. We're joined now by Bloomberg's Hannah Elliott. She is also my co-host on the Hot Pursuit podcast, which, if you like cars, you should listen to. And she just recently got out of one of the updated R1S trucks. Hannah, you got a story out on the new, I guess, improved Rivian. What do you think?
Good morning, and I will say you are right. It is improved. I drove the R1T truck in 2021, and at the time I thought it was pretty cool. I had some things to work out. This second generation R1 platform, I drove the R1S, the SUV, really does have some notable improvements. I think the biggest thing is the software, the infotainment.
In 5 minutes time now, at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories, the forecast is a draw of 1.8 million, prior draw of 3.36 million. Range sees a build 1 million to a draw of 3 million expected. Gasoline inventories forecasted a draw of 1.8 million on the prior draw of 3.665 million. Distillates forecasted a build of 1 million on the prior build of 1.534 million. And crude Cushing inventories, the prior read was a draw of 1.106 million.
How does this compare to the other big luxury family vehicles you could get? I want a truck where I can put my kids in the back seat. You've got, to deal with your dogs and Magnus's beard. Is it a great, big, expensive family truckster?
Yes, it is a great, big, expensive family truck. The one that I drove was the Performance Dual Max, which starts at about $95,000, and with the options that were included in the one that I drove, it was over $100,000. So yeah, it fits 7 people. It has a lot of capability. I love that the seats lay completely flat all across the back. So there's a lot of practicality, but it's expensive. It's more expensive than like Kia's EV9, which I know you and I both love. It's actually more expensive than the Cybertruck, which slightly different vehicle because it's a truck versus an SUV, but very similar too in size. So yeah, it's expensive, it's practical, it's expensive.
All right, Hannah, thanks very much. We'll check out the story on Bloomberg.com. Hannah Elliott is the co-host of Hot Pursuit, Bloomberg's weekly podcast for car lovers. You can check it out on the Bloomberg terminal or wherever you get your podcasts.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to
1 minute remaining. I'll be leading with the EIA crude oil inventories.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Ten seconds.
This is Bloomberg Open Interest. You gotta love a day with divergence. We're gonna get a check on these markets with Bloomberg's Abigail Doolittle as stocks are climbing around.
Draw of 3.728 million. A draw of 3.728 million, lower than the expected draw of 1.8 million. Gasoline inventories a build of 1.34 million. Build of 1.34 million. That's higher than the expected draw of 1.8 million. Distillate inventories a build of 0.949 million. Build of 0.949 million, lower than the expected build of 1 million. Crude Cushing inventories a build of 0.579 million, a build of 0.579 million.
A 13% short interest that could help to explain it. In addition, this stock, not for the faint of heart, up 246% this year. Yesterday alone, up 93% in anticipation of that strong quarter. Instacart up just 0.8% earlier, higher. They did put up a earnings beat and also a sales beat. Investors mainly liking that, plus a good earnings outlook. TripAdvisor, though, not so much. Take a look at this. Shares down 13%, revenue miss, and in particular, Experience and Dining Week. Reddit down 5.5%. Strong results, but a mixed guide. So some winners, some laggards in terms of earnings. Let's take a look at 2 big movers to the downside, however. Airbnb down 15.2%, the worst day ever since IPOing just a few years ago. There was a weak outlook, a guide. This is, again, the worst day ever. And
we have posted out the weekly EIA petroleum status report on the feed for anyone interested.
Week really highlighting, Matt, these signs that we're receiving from multiple companies that consumers are starting to get a little bit price fatigue, spending fatigue, and are tightening down the wallets a little bit.
Yeah, absolutely. The consumers, the visitors to the parks are up, but only 2%. That's weak growth. Instead, they're staying home and ordering, Disney Plus or watching stuff on Hulu and ESPN. Abigail, thanks very much for that. Abigail Doolittle talking to us about the difficulty that the consumer's in, as evidenced through earnings. We see that in TripAdvisor with bookings weaker than expected. Same is true with Airbnb and Disney Parks. Let's talk about that right now with Resy. It's a restaurant platform that you probably use as well. Shonali and I both do. Logging its 600 millionth reservation just last month. Joining us now is the CEO, Pablo Rivero. Pablo, it's great to have you on at this time when we see it looks like the consumer isn't going out as much, not booking an Airbnb, not going to Disney World, and staying home instead. Do you see that mirrored in your platform?
Oh, well, first of all, thank you for having me. I'm very excited to be here. What we're seeing is consistent demand for dining. People are still going out, right, trying to find that human connection with people, right, and dining table is a perfect space for that. Our results show that dining demand has been consistent quarter over quarter.
But is it divergent? Are you seeing people start to trade down on restaurants? Are you seeing the kind of luxury end hold up and kind of the bottom range hold up?
Well, it's a neighborhood by neighborhood story, right? Restaurants are the heart of that community, of that neighborhood. So you do see that some restaurants, right, can be hurting by higher prices, inflation, then rent, and so on. But at the same time, that you see new demand, new concept, right, going into the high end of the restaurants as well as casual restaurants.
But if you look at the graph of, reservations over time, is the slope still, up and to the right? Is it convex?
It is city by city story, right? So we do have stable across the macro environment, across the United States, but every city has a different story. Any neighborhood has a different story. But demand and spend is still there. Just last year, American Express reported $100 billion of spend on dining, right? Which is one of the highest categories for card members. It is a passion area. We do see diners still going out and finding that opportunity for that human connection.
Brent oil futures extend gains up 2% after the EIA storage report.
Strategy-wise for you, you have this app where you touch millions of consumers. You have this kind of relationship with Amex. They acquired you. What does this mean about your plans moving forward? Do you think Resy can be an app where you offer delivery as well?
That is an interesting concept that we're always looking into, right? How can we add more value to the restaurant and to the consumer? Right? So there are multiple options. We're trying to really drive demand to restaurants. Just recently, we just announced with Amex, which is our parent company, a new Resy credit on some of our products, like the Gold Card and the Delta Reserve Card, right? So we're incentivizing people to go out and dine at these Resy restaurants because dining is an extremely strong passion area for card members.
New York City is about to start to clear out the stalls that restaurant owners put up during the pandemic, and that's going to mean fewer tables. I expect higher demand. It's going to be harder to get into the most popular restaurants. Is that good for you when it's harder to get in? Do people tend to use your app more, or do you like to see a lot of space, a lot of capacity?
We look for ways for people to discover that next restaurant, right? Like neighborhood gem that you might not know of, right? So we invest a lot in discovery. We invest a lot in driving more channels and marketing activities for restaurants to connect with those users. And those restaurants that join our platform are now part of this Resy network where they can also enjoy that incentive for card members to go and spend. And so always finding ways for restaurants to be discovered and to connect with new card members and Resy diners.
What about technology here too? We're getting an IB from a customer, and is it true here that the Resy app is more available on Apple phones versus Android? Do you have an Android plan moving forward?
Yeah, so today
US weekly crude production hits a record 13.4 million barrels per day, according to the EIA.
We're launching an Android app, and that's on the roadmap for the next couple of months.
Is that because, is iOS a more important consideration because that's a wealthier consumer and more likely to be using your app? Why didn't you do an Android app first?
We wanted to make sure that we had parity between the apps, and we're trying to build that back up. We used to have an Android app. The consumer needs have evolved, and we have introduced a number of new features on that app, and we want to make sure that when we release the Android app, it's just as great as the iOS one.
As Shonali mentioned, you are owned by American Express, and you've got, I think, a new promotion now for Gold Card holders. How important are those kind of promotions? When people are scrolling through what they can get with their whatever card they have, do they click and actually use it? Do you see follow through on that?
We see great uptake on that credit. So the way that it works is American Express is really focused on surrounding our payment products with membership services, whether it's travel, dining, and entertainment, and the connection with Resy is always important. Again, driving back demand to restaurants. So every card member on the Gold Card or multiple Delta cards enjoy that Resy credit. All they have to do is go onto their app, activate that credit, and every time that you dine at a Resy restaurant, that transaction will be eligible for that credit.
Fun fact, Matt, you have JP Morgan owning The Infatuation, Amex owning Resy. Clearly, this restaurant, eating, dining, fine experience market is a big deal for the big financial companies. You've been owned by Amex for 5 years now. Where does this go from here? Ultimately, they like you because they have more offerings to give their customers, but what do they give you?
Yeah, dining has been a passion area for American Express for decades, right? Our card members are definitely, going out, trying restaurants, and really enjoying that dining experience. We are able to connect our restaurants with millions of card members through American Express channels, and that's demand back to the restaurants. That's revenue that goes back to the restaurants. The American Express card member, on average, spends more on dining than the non-Amex card member, and that's revenue that goes directly to these small businesses, right? And we want to help them thrive with it.
Pablo, we have to leave it there. That is Pablo Rivera of Razzie, of course, the CEO there, in a very complicated market for the consumer. But they are, of course, still eating. Now, let's get a check on the markets here because they are, of course, ripping right now. You are seeing some weaknesses in some single-name stocks that had reporting earnings overnight and this morning. Those consumer weaknesses still concern to market investors, but not in the technology sector nearly as much. You look at today, 1.5% higher. Philadelphia Semiconductor separately also riding higher on the day. Very interested in the bond market here because you're seeing yields rising, 3.93 on the 10-year and floating with 4% on the 2.
We are seeing a little bit of fade in terms of this buy, because you had the SOX index, I'm looking now, up 3.75% at one point. And as you mentioned, every member was rising. Now it's only up 1.57%. So you're seeing the market give back a little bit of those gains earlier, but I do think it's interesting that you're finally seeing a little bit of divergence here.
Do you remember
rise.
Monday?
Yes.
Feels like a year ago.
It does feel like a long time ago, but we had, real breadth to the downside there. And today we had real breadth to the upside. On the other hand, it's not quite as wide as it was. We were looking at 458 gainers. Now we're looking at 438 gainers. So not quite the strength that we saw in the first half hour of trade.
You know what has gotten stronger since Monday is Bitcoin. MicroStrategy owns 250,000 Bitcoin with an average cost of $36,000. We're going to discuss the notion of Bitcoin being a hedge against traditional markets. Some of that seemed to break down, but we're going to talk about it with co-founder Michael Saylor. Stick with us. That's next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
US National Security Council spokesperson Kirby says we're as close as we've ever been to a Hamas-Israel ceasefire.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
crypto world because there's a notion there that Bitcoin is a hedge against the swings in traditional assets, but that seems to be breaking down. Bringing up a chart here just to show you the volatility over the last couple of months here. Gold has held stable, but Bitcoin has swung quite wildly around it, though the returns are similar in the past month. We're going to talk more about this, the rationale, all of it, with Michael Saylor, co-founder and executive chairman of MicroStrategy, the largest public corporate holder of Bitcoin. And Michael, first I want to ask you, in the last couple of days, you did see for a moment there Bitcoin fall below that $50,000 level. I do understand that MicroStrategy acquired an additional 169 Bitcoin for just over $11 million in July. But when you see that dip below 50,000, do you dive right in, and to what degree?
You know, we're always buying Bitcoin quarter by quarter by quarter. It's a long-term strategy. But the most important point for people to understand is that Bitcoin volatility is a feature. It's not a bug. The volatility creates tens of billions of dollars of credit and liquidity at all times, everywhere, to everyone in the world in the short term. But over the long term, that volatility is driving superior asset performance and durability. So it's volatile because it's functional. The other markets are all closed and they're crippled by the physics and the politics of the asset.
Isn't it a problem when a store of value, if someone wants to use Bitcoin as a store of value, can lose 10 or 20% over a couple of trading sessions?
The reason it moves is because it's functional. It's digital capital, and it's superior to physical capital or financial capital. Bitcoin's a capital investment you can hold for decades that a corporation, competitor, counterparty, or a country can't take away from you. So it'll create generational wealth for your family, your corporation, or your country. You can liquidate it at any amount, anytime, anywhere in the world, or you can hold it for any amount of time without active management or business acumen. So yeah, it's volatile, but it's so superior to every other option that you have for long-term capital management that I actually think the world is just waking up to discover this virtue.
Michael, I still feel the need to really understand the psychology of these pullbacks, because at some point it still matters the price you buy into Bitcoin at. How much are you willing to put to work when you see those dips? What types of dips do you look for when you put more money to work in it?
You know, we look at Bitcoin as cyber Manhattan. So there's never a bad time to buy up scarce, desirable real estate in the greatest city in North America. There's never a bad time to buy Bitcoin. So we will just generally acquire it. You know, whenever we have cash, whenever we can raise money in the capital markets, whenever we see the opportunity. I think timing the market is almost impossible for the mere mortal. It's time in the market that matters.
Another question I have for you too is, even beyond MicroStrategy, how do you hold Bitcoin personally? Do you have a significant personal stack in addition to what you own through MicroStrategy and a MicroStrategy stock?
Yeah, I do have significant personal Bitcoin holdings. I think about 4 years ago, I tweeted that I have 17,732 Bitcoin. I haven't sold any Bitcoin. I continue to acquire more Bitcoin. And I think it's a great capital investment asset for an individual, a family, an institution, a corporation, or a country. And I can't see a better place to put my money.
How much do you personally own today?
At least that much.
That's a lot. 17,000 is a lot. I was talking yesterday, Michael, to a young journalist, Andrew Chow. He's written a book called Cryptomania, Hype, Hope, and the Fall of FTX's billion-dollar fintech empire. He seems more convinced by Ethereum and the proof of stake method because he's so concerned about the climate and the environment. And a lot of younger people see it this way, that proof of work just takes too
US
much
crude
power
futures up by
and is
$2 a
bad
barrel
for
now
the
to around
world. How do you respond to those
$75.20.
concerns?
There are hundreds of thousands of investments that people can make, and I don't opine on any particular real estate, equity, or crypto investment. Bitcoin is special because it is literally the most powerful computer network in the world. It's the most powerful. It's got the most electrical power. It's got the most computer power. It's got the most economic power. It's got the most political power. The fact that it runs on 17 gigawatts or more of electricity means it's got more power than the United States Navy. That makes it nation-state resistant and nuclear hardened. So my view is if you're going to put away billions of dollars for decades, you're going to want a very powerful crypto network to defend it. And there really is no second best.
But it sounds like that much power generation is going to lead to, a higher global temperature, melting ice caps and rising seas. Like, when can it get carbon neutral?
That's a silly observation. People have been saying that for 5 years. Bitcoin's not boiling the ocean. It's like 10, 15 basis points of the world's energy usage. So it's de minimis compared to everything else. 30% of the energy in the world is wasted from some other source. So it's just guerrilla marketing and I think largely irrelevant and debunked at this point in time.
Michael, one thing I'm wondering about is, have you spoken to former President Trump? He's been talking about this idea of what it would look like for the U.S. to have a reserve of Bitcoin. Of course, the U.S. holds some Bitcoin through Bitcoin that has been seized. But what do you think about this broader idea more largely? Have you spoken to the former president about it? I know you have.
The future is digital. There's a race to own cyberspace. And we saw an entire set of politicians waking up to this. Senator Lummis has offered the strategic Bitcoin reserve legislation, and that's our Louisiana Purchase moment. Donald Trump has said, we won't sell our Bitcoin. And that makes BTC the apex property of the United States. The only thing that the nation won't sell are its national parks, its nuclear weapons, and it's Bitcoin. I think that the conversation has shifted and every politician in the world is starting to realize that Bitcoin's the most desirable property in cyberspace. It's the future.
Back in 2013, Michael, when Bitcoin was marching up towards 1,000, we started reporting on it for the first time, and I actually spent 2 weeks living only on Bitcoin, using it to buy gas and beers at a bar down here and groceries at a place in Greenpoint. I bought my first one for $800, my second one for $600, and now I wish I hadn't spent them. Is there going to be a time when we actually use Bitcoin as a transactional, currency without regretting it so much later on?
I think if your grandfather owned a building in the middle of Manhattan and they sold it to buy a cup of coffee or some ice cream, you would have regretted that too. Yeah. Half of the wealth in the world is just long-term capital. Call it $400 or $500 trillion. People just want to keep their wealth. They want to hold their money for decades or generations. Bitcoin is capital. And if you think of it as capital, the most desirable capital in cyberspace, then the right way to consider it is the same way as if your family owned a sports team or a trophy asset or a Da Vinci painting or a building or all the land in Palm Beach. You would hold it as long as you possibly could. You would finance it, and you want to buy a cup of coffee with it, borrow some money from a bank, spend dollars, spend pesos, spend euros, but keep the most desirable property in the universe.
All right, Michael, thanks so much for joining us. Michael Saylor is MicroStrategy Executive Chairman and co-founder. He owns at least 17,000 Bitcoin. And of course, MicroStrategy always continues to add to its giant Bitcoin pile. We have some breaking news now, updates on efforts for an Israel-Hamas ceasefire. U.S. National Security Council spokesman John Kirby is speaking to reporters, and he just said, quote, "We are as close as we've ever been to a ceasefire between Israel and Hamas," since obviously October 7th. A note in terms of Hamas, yesterday named Yahya Sinwar as its political chief, who is one of the key masterminds of the October 7th attack. We'll continue to bring you any developments there. Coming up, the market-moving events that you need to be watching. That's next in our trading diary. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Time now for our trading diary, what you need to be watching this week. We're going to get U.S. consumer credit numbers this afternoon, so pay attention to the EcoGo function on your terminal. Earnings from Robinhood and Warner Brothers Discovery after the bell.
And we're going to talk to the CEO of Robinhood tomorrow as well. We're also going to get tomorrow morning earnings from pharma giant Eli Lilly and economic data, including initial jobless claims. That will certainly be one to watch. We will also hear from Richmond Fed President Tom Barkin at 3 p.m. Eastern Time. Let's go check on these markets, Matt. They've been interesting this morning. Of course, we've seen a pretty strong bid in the market, 1.5% higher in the S&P 500, 1.8% higher on the NASDAQ 100. We had some serious breath, but as you've been pointing out, it has been wavering a little bit throughout the morning.
Still pretty strong, though. Right now I'm looking at the move function on the terminal. 444 stocks up, 57 stocks down. So that's real breadth in this rally. 1.5% added to the 1% we got yesterday. Still doesn't make back the 3% that you lost on Monday. But we're back at 53.18 on the S&P 500, and we're seeing bigger gains in the tech stocks. As you see there, the NASDAQ is up 1.8%, and as you've been pointing out, the SOX index is a gainer as well. It was up almost 4% a little bit earlier. Right now, the SOX index is gaining 2.25%.
A lot of red on the screen. Airbnb, Lyft, both still down more than 12%. A lot of worries about that consumer. Disney only down now about 1.4%. Novo Nordisk down more than 6.4% in Denmark, of course. And a tough day there for some stocks, but a better day for the market. Looks like the rotation trade is out of bonds and into equities.
Yeah, I think it's really interesting that you're seeing all of this kind of disappointing news on the consumer. Not booking as much at Airbnb as expected, not going to Disney parks as much as expected, not on TripAdvisor as much as expected. Coming up on Open Interest, join us for the C-Suite interview. As Shanali said, Robinhood CEO Vlad Tenev joins us tomorrow.
So the yen down 2% against the dollar, last at 147.235.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up, I sit down with the CEO of Lyft, president of Shopify, and COO of Reddit, and we break down those companies' earnings results. Plus, we stick with earnings as Airbnb sees a record plunge on a weak outlook. And we dig into Disney as the Mouse House offers a mixed picture in its earnings. Let's check in on the markets. The NASDAQ 100 up for a second consecutive day by... Actually, no, I take that back. I'm wrong. It's down 0.2%. How things can change this session. The story right there is really about monetary policy. And on a 3-day basis, we're flat. We're slightly higher in the session. We're still thinking about Monday and the sell-off that happened on growth concerns and monetary policy intervention. So overnight, the Bank of Japan basically said, we won't intervene with a rate hike in the event that markets are unstable. And that's kind of having it not much to do with tech. There's one big tech name that is moving, and that's Airbnb. Check out this chart. So in the session, Airbnb is on track for its biggest drop ever. We're worried about the outlook. We're worried about what Airbnb had to say about its peak holiday season. Even though some
Brent crude futures rise by $2 a barrel to a session high of $78.48.
Mandeep Singh, senior analyst at Bloomberg Intelligence. So what they said was moderation sequentially of growth. And the growth wasn't that good in the quarter gone. So if you extrapolate, you're basically saying, hold on, this is the best time of year normally for Airbnb, the summer months. We're worried about what they're saying about business traffic.
Yeah, look, and you're right. I mean, given it's Olympics and, a lot going on in terms of holiday planning, they talked about shortening booking windows. And to me, the biggest risk with Airbnb is not that they don't have a great moat. It's more about the saturation in the alternative accommodations market. And whatever new products that they have launched, whether it's rooms or experiences, which they have had for a while, hasn't really driven incremental growth. So what they told us last night was, look, the room night growth will be mid-single digit, and EBITDA growth will actually taper off because they plan to invest more to expand supply in new areas in Latin America and Asia Pac. And I think all those are signs towards penetration being high in their existing markets, and they just have to find new markets if they want to keep growing in alternative accommodations. Or perhaps they need to make an acquisition, which I won't rule out given the strength of Airbnb's balance sheet.
Okay, so Mandeep, your stock's down 12 to 14%, the most on record. What do you do if you're the CEO? You go on social media and say it's a great time to buy. Would you agree with Brian Chesky's thesis here?
I mean, he had a floor last night and during the earnings call to talk about the plans, and nothing we heard was very exciting. Look, long term, as I said, this company has a great moat. It clearly is a category leader in alternative accommodations, but can it keep growing double digits? And I think there are question marks. They can do it at least in the next 2 to 4 quarters.
Bloomberg's Mandeep Singh at Bloomberg Intelligence. Thank you. I want to get more on the market outlook as equities trade broadly in the green with Bloomberg's Emily Grafeo. I don't know about you, Em. I'm kind of recovering a bit from Monday still, the trauma of a near 3% decline on the NASDAQ 100. But in the market, there's the growth concern, there's the central bank policy concern, and then there's probably earnings. What's the outlook of all of that in aggregate?
Well, the outlook is that the volatility is not expected to subside, even though we are seeing this market rally yesterday and at least today. When you look at the VIX volatility index, typically when we see a spike like we did on Monday, that means that for the next several trading sessions and even up to weeks, we'll see these big up days and these big down days. What's interesting, this is Bloomberg Technology. We had been talking so much about a rotation into smaller cap names, value names a few weeks ago, and we're actually kind of seeing that trade disappear now that markets are rallying. Technology stocks are rallying the most. You look at the NASDAQ 100, at least today, up almost 2%. The Russell 2000, which was outperforming tech, is only up about 0.8% right now. So, a few days ago, we were talking about, is tech no longer a safe haven? Is that no longer a place that investors want to hide? But it actually seems like we are still seeing an appetite to buy those mega cap tech stocks.
And we remind our audience, NVIDIA doesn't report until August 28th, and everyone's kind of treading water till that point. Bloomberg's Emily Grafeo, thank you very much. Aside from this week's massive sell-off, some of the world's biggest equity hedge funds lost hundreds of millions of dollars from piling in to popular tech stocks amid the stock rout that hit markets in around mid-July. Bloomberg's Hema Palmer has been tracking it. There are some specific single names in that industry who were probably more hit than others. Who are they and what happened?
Yes, so we saw a lot of pain over at Light Street, down 9% in 1 month alone of July. Still up 40 for the year, but definitely a difficult month for them. That's likely due to their very big position in NVIDIA. As of March, that stock accounted for about 17% of their portfolio. They also have sizable stakes in other of the Magnificent Seven. When we look across the world, the hedge fund space, specifically when it comes to the equity funds, you do see this concentration in Microsoft, Amazon, NVIDIA, and some of the other big tech names that have really struggled this month.
Bloomberg's Hema Palmer with the data and the hedge fund ownership of big tech. Really appreciate it. Thank you. So coming up on Bloomberg Technology, we're going to be joined by Reddit's COO, Jen Wong, to discuss the company's results and their outlook for sales growth. An interesting conversation. Jen really at the heart of some of the deals that Reddit is doing. One other name that I'm looking at is in the chip sector, Micron in particular. Let's bring up the stock and take a look at it. There's several stories out there, one largely around share buybacks. The company basically saying that they may resume a stock buyback program to offset some dilution from their employee stock comp programs. The stock up 2.7%. Remember, we've covered this really in the context of high bandwidth memory recently, but also it's one that is in a lot of end markets, smartphones, DRAM, and NAND flash being one as well. This is Bloomberg Technology.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Reddit beat analysts' expectations on sales growth after expanding its data licensing partnerships and investing in new advertising technology. The company's revenue forecast for the third quarter also beat estimates. Delighted to say that Reddit's COO, Jen Wong, joins us live here on Bloomberg Technology. You know, the stock is lower, an impressive set of numbers for a relatively newly public company, and everyone's kind of looking at the outlook and trying to extrapolate out, understand the world that Reddit's operating in. Could you just give us a sense, Jen, in your conversations with advertisers, what the rest of the year looks like, the environment looks like, and why Reddit may or may not fare better with those advertisers compared to other social media platforms?
Yeah, thanks for having me. Look, the markets are the markets, but when we look forward to the back half of the year, I think advertising is a pretty stable market. And what drives our growth is what drove our growth in Q2, which is delivering against our consumer and ad roadmap and continuing to drive value for advertisers. So I think what's driven our user growth has been the work of making Reddit better, making it easier to access posts, easier for people to connect with communities, easier for mods to do their moderation. And that's when we make the platform better, the users grow. And from an advertising perspective, it's been all the investments we made in our ad platform to improve usability and scalability so that we can address and serve more advertisers and grow the advertising base. Next is delivering quarter-over-quarter performance for our advertisers, and then delivering things that only Reddit can do, that are Reddit unique, like the Ask Me Anything format refresh, or testing things like ads and comments. Those strategies are working for us, and we'll continue executing against that roadmap as we head into the back half of the year, and we feel really good about the yield on that roadmap.
Okay. Jen, you've been very busy since last we spoke. I think principally about the deals with NBA, NFL. What I'm trying to understand is how those kind of video-focused partnerships contribute to your ad revenue or ad growth going forwards from this point.
So Reddit is home to an incredible group of fan communities, and the sports communities are some of the most active and engaged on the platform, and that they're global. And so the idea of having those partnerships with the sports leagues was to bring in special content like highlights, like access to players for AMAs or to insiders for those communities to enjoy. So that is really our starting place for it. Now, what's great is that it does create an opportunity for advertisers to support that content. Some of those advertisers support that content and are aligned with that content on other platforms like television, et cetera. So it is a really nice win-win-win for users and communities and Reddit and advertisers. It's early. It's a program that we're testing, and we've done some work with the NFL. Now we've expanded it to more leagues. We are excited about it because I think the communities are excited about getting access to that content. And if you think about it, you know, we've done partnerships with U.S.-based leagues, but there are so many more sports and so many more global leagues that we could engage with. And then the fan communities, they really go beyond sports on Reddit. They're deep in meeting and entertainment.
I am a long-serving, suffering, and passionate Chelsea fan in football, what you'd call soccer, and I dive deep into Reddit when I want to see what the fan base wants to know. You and I have discussed previously licensing of data to the AI companies, Google, OpenAI, but a few months have elapsed, and I'm wondering if you now have a better sort of vision for the long-term potential of that business model away from advertising.
Look, I think that landscape is still emerging. And it's still early days for AI. So it's a long arc. We've been, I think, very thoughtful about how we structure partnerships. Our view, they're not 1 year, they're not long term, they're sort of midterm partnerships that allow us to learn and find a way to work with this new area and see how it goes. So I don't think, I think we still continue to learn in this process because I think it's a very long arc. I do think some of the things that we've done have established a foundation for having these partnerships. So if you look at our public content policy and you look at the changes that we've made, I think we've made it really clear how we want the ecosystem to work because we are stewards of Reddit's data and user privacy, et cetera, is really important in allowing scaled access to Reddit data.
Yes. Jen, when I sit at my computer in the morning, I use various search functions. It's often a Reddit post that will come up. It's quite easily discoverable, specifically Google search, but going forward, ChatGPT, there are platforms where that's not the case. Bing. Do you have a clear strategy for search expansion for Reddit content?
Look, we have been beneficiaries of the open internet. We believe in the open internet and allowing people to get access to important information. And Reddit's corpus has some of the best and most important answers regarding everything, product, services, life, et cetera. So we want Reddit to be open, but we have to have a set of rules for doing that. And search and summarization and AI and data usage, they're sort of all merging, right? This is part of what's changing in the world right now. So I think our view is we will have a conversation with anybody about having access to the data, but we've been very clear and transparent about our rules, which are our public content policy and protecting user privacy, being good stewards of Reddit's data, and that we have to have a conversation where those policies and rules are respected, and then there's commercial alignment. So we're having conversations with every player, large and small. Okay. And I think we've made it clear, that what the rules are and how to make this work. And the fact that we've signed deals, I think, is a sign that we're sensible. There's a path here to do that.
Jen, the stage is now very much set for a presidential election race for November. How does that impact Reddit? Do you kind of foresee boost from political ads or even just activity on the platform centered around the election?
Yeah, we actually are not a big player in political ads. We never have been. Politics is obviously a big area that our communities engage with on Reddit, so we do see conversation. But what I would say is on Reddit, because we have so many diverse communities, different communities have moments at different times. This is a presidential election year, so politics is, going to be a little bit bigger, but then Olympics was a little bit bigger, and then there are seasons where other communities kind of have their moment. What happens with Reddit is that kind of smooths out over time. So a community might be having a moment at one time, then another community, then another community. But if you look at the arc of Reddit's growth, it sort of is all smoothed out over the trend.
Reddit COO Jen Wong, it's great to have you back here on Bloomberg Technology. Thank you very much for your time. Now, coming up on the show, we're going to break down Shopify's earnings results with President Harley Finkelstein. That's coming up next. Back to kind of AI and the server space. Look at shares of Supermicro, down pretty significantly, 16%, having initially surged in after hours. Revenue and profit missed estimates in the quarter, but they gave an outlook that was like billions of dollars above what the street was expecting. I think the market's just trying to make sense of like what's happening. Remember, Supermicro basically assembles the servers that go into rows in data centers. Interesting move. This is Bloomberg Technology.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's time for Talking Tech, and in the news, SoftBank announces a $3.4 billion buyback. The Tokyo-based firm said it would purchase up to 6.8% of its free-floating outstanding shares through August 7th of next year. The move comes as CEO Masayoshi Son prepares for a large-scale push into AI and semiconductor investments. Plus, Hewlett-Packard's $14 billion deal to buy Juniper Networks gets the okay from UK watchdogs. The Competition and Markets Authority cleared the purchase after investigating if it would lessen competition in the UK. The deal was similarly passed just last week by the European Union. And Sony raises its revenue and profit forecast for the fiscal year to March. The company saw a successful quarter in its music and gaming divisions, with operating profits at $1.9 billion. Its PlayStation division saw a lift, but its PS5 consoles sold just 2.4 million units, significantly below the 3 million units that analysts had expected. Let's get back to the earnings story and take a look at Shopify. The global commerce company reported earnings results before the opening bell this morning, beating estimates. Shopify President Harley Finkelstein joins us now for more. Good morning to you, Harley. It's good to catch up and have you back on Bloomberg Technology. Things are going right for Shopify. The environment's hard to understand. Is there something specific that Shopify is doing better or well in that environment?
I think so. I think absolutely. So first and foremost, I think we've earned the trust of millions of merchants and business all over the world. We announced, I don't know, a month or so ago, I announced that we have now powered over $1 trillion with a T in cumulative GMV since our inception, which for us is really incredible. But I think we're not just helping merchants compete. I think we're propelling them to victory. And in terms of how Shopify is doing, in particular, I think these results demonstrate that we can create the serious combination of both growth and profitability. When you exclude the sale of logistics, revenue is up 25% for the quarter to $2 billion.
Yes.
That's our 5th consecutive quarter of at least 25% top line growth. When you look at free cash flow, our free cash flow margin more than doubled from last year, from 6% to 16%. Now, in terms of sort of the more macro, sort of macro questions you're asking, look, from our vantage point, I'm hearing from other companies what you're hearing as well, but from our vantage point, our merchants, the merchants on Shopify, are outperforming others in the market. They're growing at healthy rates. We're adding more merchants every day, and I think as a result, we're gaining more market share.
Harley, real quick, I just want to jump in because it did go well for you in the quarter. You've kind of been suffering from slowing growth in prior quarters, and your emphasis was on marketing, but something jumped out. You talked about a partnership with a social media platform that really helped out. What platform was that? What were the specifics around that as a catalyst for you?
Yeah, I mean, the truth is, the way that we think about marketing is the same way we think about product ed. We don't necessarily, it's all about data. And so when we see a particular marketing opportunity, we take that opportunity. And the way that we think about all our marketing channels is these are levers. So in Q1, we did an experiment with a new emerging marketing channel, emerging social platform. We put some money to work. We saw a great return. We doubled that in Q2, and we saw about a 51% increase in new merchants from that channel. At the same time, we saw other channels that historically did perform well not perform as well, and so we pulled back on it. But the way that we think about our marketing is as this incredible data-driven engine that allows us to not just focus on SMBs in English-speaking countries, but you think about our point-of-sale business, our B2B business, our international business. We're able to deploy capital to have the highest return on those investments, all within an 18-month average payback. And that's the sophistication that we've built into the growth levers of Shopify.
So which big social platform was it?
We don't go into specifics on that. It's just an example of something that we're constantly experimenting with. There's not that many emerging social platforms, so I'm sure you can figure out which one. But the point actually that we want investors, we want the street to take away is that we are always looking for new ways to grow the business. And again, 5 consecutive quarters of above 25% top line growth while being profitable. There's not too many companies that can do that at our size and grow their market share. And I think this is the best version of Shopify you're seeing right now.
I've spoken to so many businesses, small and slightly bigger, that use Shopify. I get the benefit of it. So this is about discoverability, right? Adding new merchants or markets to your platform. But let's do the math. If we won't name the social platform, what ballpark was the spend? Because the return on that campaign seems to have been very definitive in the quarter.
Well, think about this. When we started we've been public now for just over 9 years. Initially, we were focused on e-commerce for SMBs in very specific regions. We now have a point-of-sale offering that surpassed $100 billion in GMV. International, for example, over 50% of merchants that joined in Q2 on Shopify were from outside our core English-speaking countries. 2 years ago, we didn't have a B2B product, and this past quarter, B2B GMV grew 140% year on year. So it's not just getting more people to use Shopify, it's more people in more geographies to use different products, and that is leading to the growth that
European gas hitting a 2024 high on concern over Ukraine transit.
Harley, we enter the summer months, and then we have the holiday season here in North America. Do you kind of market hard in the summer in the hopes of having business transaction later in the year? Real quick.
Look, I think the key is that I do think the holiday will be very good, but because we have so many different verticals of merchants, we have Figs doing scrubs and pet products from BarkBox, we have Nestle and Heinz and Mattel and Staples all using Shopify. We're not relying on one particular type of merchant, but I think the merchants that are on Shopify are doing disproportionately well.
Harley Finkelstein, president of Shopify. Great to have you back on Bloomberg Technology. Thank you so much. So coming up on the show, we're going to hear from Disney's CFO, Hugh Johnston, on the company's earnings results, an interview on Bloomberg Television earlier today you do not want to miss. This is Bloomberg Technology.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age, constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you...
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. Disney gave a mixed picture as it reported third quarter results, with weakness at its famed theme parks, though it made its first ever profit in streaming. But with so many bundles, are consumers getting streaming fatigue? Disney CFO Hugh Johnston joined Bloomberg earlier. Listen to this.
Consumers do seem to appreciate having a limited number of bundles. Now, what we've tried to do with our own offering is offer the individual pieces, or if people want to get a discount by bundling more, we're happy to do that. So that said, I think you do see a trend where there's probably going to be a few big competitors in the marketplace in streaming, as we see right now between Netflix, Amazon, and ourselves. And then there'll be some smaller competitors out there, and they'll have to decide how they're going to run their businesses.
Are you concerned that consumers right now potentially are going to shrug off the price increases? Because what we hear from a lot of companies is that we do see consumers trading down. Why do you think they're willing to pay for a higher price point?
Well, I think the biggest reason is it's always important to focus on this. The consumer receives value, and what they pay is price. And because we're delivering so much value, I mean, really an enormous amount of value in terms of the hits that I just mentioned. But then in addition to that, the combination of Disney Plus, Hulu, and then we're going to have an ESPN tile and ultimately ESPN flagship on our streaming service. That's a huge amount of value for consumers. And as they're allocating their entertainment dollars, I think they're going to view us as a great place to put them.
That was Disney CFO Hugh Johnston. Take a look at Disney shares. We're off session lows, but we're down 1.9%. The company also commented on its negotiations with Hulu in a filing today, saying it may have to pay $5 billion more to acquire Comcast's 33% minority stake in Hulu. The two sides have disagreed over the fair value of Hulu and entered into arbitration proceedings. The stock, by the way, down 2% so far in the year. Let's discuss all this with Lightshed partner Rich Greenfield. Let's park Hulu for 1 second. First ever profit for streaming. Is this the Rich Greenfield slow clap, or are you not so overwhelmed by that news?
When you see subscriber growth slow effectively to a halt, and the price has gone up pretty dramatically, it's pretty clear. I guess in many ways it's sort of this, hey, we don't know how to get more subscriber growth, so we'll raise the price and hope that people won't, and we'll even cut back on programming. There's obviously a lot less programming. Disney's essentially going to rely on their movies to drive the streaming service, and hope that the movies are strong enough when they flow to the streaming service that people don't cancel. because they're not expecting a lot of growth in subscribers over the next few quarters. And so it's basically trying to, get to profitability, drive profitability of the existing base. But it doesn't really seem like there's a tremendous growth story here. And I think that's sort of, look, everyone's focused on the parks. I don't think anyone's really focused on Disney Plus at the moment. The streaming is a nice data point. I think it's less about getting to profitability and how big a business can this actually be, Ed? Can this be a multi-billion-dollar free cash flow generating business the way Netflix, or is this, going to essentially tread water, at a low single-digit margin? I think that's what investors are really going to focus on over time.
I mean, you and I have discussed in the past, right, achieving profitability by cutting cost out of the equation. So let's bring it back to Hulu.
What you really want to see is people. You really want to see people who are so passionate. They love this service. They're willing to pay more because they're spending so much time. You want to see consumer love. And based on that love, you can keep raising the price, getting more people to subscribe because there's great buzz and word of mouth. That's not what's happening here, nor any of these other streaming services. So
then let's talk about Hulu. I just finished Star Wars Acolyte on Disney Plus, and like everyone else, I loved The Bear on Hulu. We did the reporting on the negotiations for that, the remainder of Comcast's stake. Is it important, if the idea is to achieve volume and get stuff that people want to watch, do you see Hulu as being sort of something that needs to be resolved as part of that?
I mean, Hulu is going to be resolved. We're just talking about the number now. And I think investors are, expecting several $1 billion, whether it's 4 to 5, we'll obviously see. But I don't think this is, I think obviously probably Comcast would love more, Disney would love less, but I don't think investors are stressing over what this number ultimately is. Investors are just surprised that the option was exercised last October. I think it's sort of crazy that we're still talking about this not resolved here in August.
Rich, if you could ask one thing of Bob Iger or give one piece of advice to him to fix this in a way that you think would be positive, what would that be?
Look, I think the bottom line is if Disney is really serious about being a long-term, and you heard Hugh saying they're going to be, in the clip you played earlier, if they want to be a long-term winner in the streaming game, it's not about discounting through bundling. It's not about cutting back on marketing. What they really need to do is invest very aggressively. Stop playing this near-term Wall Street game of trying to get earnings growth. They need to invest aggressively in making great content all the time that gets consumers to engage with the Disney streaming platforms every single day for hours a day. That should be their North Star, versus trying to figure out alternative ways to manage churn. That's what we'd like to see. And look, you've got all of these theme park concerns that are sitting with the company right now. That's what investors are really worried about is how did the theme park slow down this fast in the span of just the last few months when Disney historically has pretty good visibility?
Rich, I want to get some time to talk about another name, Reddit. We had Jen Wong, COO, on the show earlier. Very sort of patient, sanguine, calm about the ad environment, but sees a lot of opportunity in sports. I know that you like that name a lot.
We do. I mean, if you think about what Reddit is, they really understand what consumers are interested in. And they've got one of the biggest companies in the entire world, Alphabet Google, is in their corner. You can't do a Google search and not see Reddit results rising higher and higher and higher. Google's paying them for AI. Google is a firm believer in Reddit. If Google believes in Reddit, everyone watching this show and investing should believe in Reddit. I think that is a really important data point, is that there is this increasing visibility Reddit's getting within Google. And Jen Wong, who is now building out an ad business, Reddit was very slow to get going. They've got it going now. And we've seen other companies, whether it's Snap, Pinterest, go back, X, which used to be Twitter. When those companies crossed $1 billion, getting from 1 to 3 can happen very, very rapidly, and especially at Reddit, where they really know who you are. They don't need third-party cookies or data. They know exactly who Ed and Rich are. They have all of this interest data because you are searching Reddit for a topic, whether it's the Giants or whether it's video games. Like, they really know who you are, and it allows for really well-targeted advertising. I think Reddit is a must-own stock. We just put a buy on it with an $84 price target. I know people are worried about the lockup ending on Friday. It is a great opportunity. People are going to regret not buying it today.
Lightshed partner Rich Greenfield, really great to have you here on Bloomberg Technology. Really appreciate it. Thank you. So coming up on the show, we keep the earnings conversation going with David Risher, the CEO of Lyft, discuss the company's earnings results, which reported before the opening bell this morning. Timely. This is Bloomberg Technology.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job
Israel's military chief Halevi says we are at peak readiness.
Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Let's get back to earnings and Lyft. The rideshare company reported before the bell this morning. CEO David Risher joins us live from New York City to discuss. And the basics of it are that bookings, the outlook missed estimates or street expectations. The stock is down significantly. What is happening right now with Lyft, the environment that Lyft finds itself in?
Yeah. So, hey, Ed, it's good to see you again. I mean, look, to me, it's a little curious, right? And this is sort of the way the world works sometimes. So we just had our first profitable quarter ever, which is an enormous accomplishment, thanks to a lot of work for the team. Revenue grew 40% year on year, bookings and rides around mid-teens, 17%. $256 million of free cash. So, and service levels that are fantastic, fastest pickups we've had in a long time, fastest or more drivers than we've ever had. So all those things are incredibly strong, and they indicate a strong marketplace. And we reiterated our full year guidance and our multi-year guidance as well,
yes,
mid-teen growth. So all those things are good. I think what people are looking at is they're seeing what I would consider to be, incredibly small, sort of kind of adjustment around what we've said about the future, the next quarter, the next couple of quarters. And this to me sort of signifies, sort of the world we live in. Like the things that we think about are 160 billion rides in the US in total, private cars. And we are little by little, in a very, very disciplined and customer-obsessed way, growing our business. I think Wall Street sometimes looks at short-term things and gets a little bit overly focused on that. I'm thinking about the long term and super excited about the prospects.
David, there's some David Risher strategy and plans that I see playing out, like Price Lock, a paid feature. That's going to have an impact maybe on the top and bottom line, but why is that the plan for you?
Yeah, so Price Lock is a way for riders to lock in a price, just like it sounds like, on the same route and same time every day. It's really meant for commuters, and it's available today, by the way. I encourage everyone to check it out. It's kind of in soft launch. And the idea is it takes away that what I think is one of the most hated features of all rideshare, which is surge pricing, right? And we're sort of trying to get rid of it. We can never get rid of it completely, but we can certainly give riders a way to basically pay a small subscription fee and lock themselves into a consistent price. I think it's great, and I think it's the sort of thing that's going to grow the business in the long term. Of course, it's an investment, right? And you always, invest in new features that you have a lot of conviction around. But this, again, is our customer obsession is what drives profitable growth. Okay. Again, we're profitable now, and we think this is going to be a great growth driver for us.
Advertising is a battleground as well. I am so familiar with the Lyft app, but why is advertising the way to go? And what, with who, with what, right? You think about parallel industries.
Yeah. So, think about, of course, let's zoom way out for a second. Since the history of advertising, brands have tried to come up with new ways to talk to their consumers, right? And 100 years ago, maybe it was billboards, then maybe it was radio ads, then maybe TV ads, obviously more recently, internet advertising. We see this kind of mobile advertising, literally advertising that comes to you in the car where you're going, as an incredibly important, effectively a sector that we're really going to help build out. And because if you think about it, and reflecting on some of the earlier conversations you were having around Reddit, for example, we have an enormous amount of first-party data, right? 2 million rides a day, every one of them going to a 7-Eleven or a Starbucks or whatever it might be. And that's first-party data that's very indicative of what it is that riders want to do. And so our media business has grown significantly. We're up significantly year on year. And we're really optimistic that it's going to be a whole new form of advertising and media that'll go super great.
David, when I reported that Tesla was delaying its robo-taxi event to October, the shares of your company jumped in that session. The Vision is a proprietary app from Tesla for ride-hailing, but a fleet of cars that drive themselves, Teslas. Your stock went up on the basis that everyone was like, okay, the competition from Tesla's not yet coming. Just your latest thinking on that, please.
Yeah. Look, I think AVs are going to be great for Lyft. I really do. And I think it's because we're going to be the best way to commercialize what is a very, very expensive asset. Different companies will try different things, but I think largely you'll have a lot of OEMs doing a lot in the AV space and wanting them on our platform because of millions of rides, all the technology we have to incorporate cars in our platform and so forth. I don't want to comment on Tesla. I don't know. We'll see kind of how that goes. But I do think that creating your own thing, a kind of closed network, it's a fraught strategy, and maybe a different strategy would be to figure out a way to get your cars that you've built and your technology.
NASDAQ and S&P 500 at session lows now, pairing gains to 1%.
David Risher, the CEO of Lyft, thank you so much for joining us in the studio in New York. Thank you. Now, shares lower of Rivian after the EV maker's second quarter revenue missed analyst estimates just. Cash burn for the quarter came in bigger than expected. Earlier, I sat down with the CEO, RJ Scaringe. Listen to this.
We see that both through the excitement of our customers directly, but there's lots of ways to measure this. And we just had J.D. Power does an annual appeal study. We came out as the #1 brand this year. We had a #1 ranking on a J.D. Power study last year. So the reaction to the product's been great. We've in the second quarter, we went through a big refresh to the product where we've now launched what we call Generation 2 of that vehicle, of the R1T and the R1S. where we made significant improvements in the product, but also took a tremendous amount of cost out of the vehicle.
RJ, the kind of summary of the earnings print was that all of the guidance previously issued was reiterated, and there's a lot of positivity around that. Very simply, loads of people asked me to ask you, can you define what modest gross profit means, or what you're defining it by in order to achieve it?
Yeah. I mean, ultimately, this has been the central focus for us as a company, as a business, is driving cost efficiencies into everything that we do, into our bill of materials, into how we operate and run our plant, and ultimately driving towards getting our production of our R1T and R1S to positive gross margin, ultimately to have the business get to positive free cash flow and profitability. So there's a whole series of steps we're making along the way in terms of improving costs, but the biggest singular step that we've made is what we did in the second quarter. We took the plant down for about a month, but we made meaningful changes to the operations, and importantly changed share.
In the first instance, oh sorry Matt, I was just going to hold RJ to account on that one and say, in the first instance, is it just like more than zero, or single digits gross profit? Just, I think that's the answer we're looking for.
Yeah, we haven't provided a specific number, but certainly by saying it's positive gross margin, it's more than zero. Our objective, what we've guided to for a long time, we continue to maintain this guidance, is the long-term margin profile on R1 should be around 25%. And so that's what we, beyond just this fourth quarter performance that we're tracking towards, seeing how we continue to improve in 2025 and beyond, we still maintain confidence in the 25% gross margin.
My interview with RJ Scaringe, the Rivian CEO. Meanwhile, Tesla will release a software update to most of the cars it's ever sold in China due to an issue that could leave an unlocked hood unnoticed, creating a potential safety hazard. Tesla will deploy an over-the-air software fix to more than 1.6 million imported Model S and Model X vehicles, as well as Model Y and Model 3 that were produced locally. Okay, coming up, social platform X files a lawsuit about an advertising boycott. We have those details next. This is Bloomberg Technology.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
I was shocked by the evidence uncovered by the House Judiciary Committee that a group of companies organized a systematic illegal boycott against X. It is just wrong, and that is why we are taking action.
That was Linda Yaccarino, the CEO of X, after the company filed a lawsuit accusing an industry group of violating antitrust laws for an advertising boycott that cost the social media company billions of dollars, it alleges in the filing. Let's bring in Bloomberg's Kurt Wagner. An advertising boycott sounds severe. Federal filing in a court in Texas. Just explain the very basic accusation that X is making.
Yeah, I mean, the claim is that this group, this industry trade group for advertisers, essentially, did anti-competitive behavior, right? They came out and they advised all the members of the group not to spend on X, kind of created, as Yaccarino said, a boycott of the business. And they're claiming this is illegal. Now, I don't know exactly what an illegal boycott is versus a legal one, but Ed, you and I have seen boycotts of not only advertising, but products all the time, right? This is usually the way that consumers or businesses sort of voice their displeasure with someone, which is what happened in this case shortly after Elon took over. I don't really know whether this lawsuit will succeed for them, but I think what they're doing here is sending a huge signal that, one, the business is struggling, they need to do something about it, but two, they're clearly picking a fight with the broader ad industry right now.
We're showing some more of the comments that Linda Yaccarino made. It was interesting, the video posted to X, Elon Musk amplified it. I guess the context is that X has been suffering in terms of revenue or financially in the period since Musk took over and Linda Yaccarino was appointed CEO because of this. I'm trying to understand why they would take action.
Well, that's exactly right. They're saying that, look, this group is, collectively getting everyone riled up to intentionally hurt X's business. Now, I think what's sort of interesting here is what does this ignore? Well, this ignores Elon's own behavior, right, which we have talked about on the show several times over the last, couple years, right? You may recall, Ed, late last year went on stage at a conference and told advertisers to go F themselves, right? He has been very proactively aggressive to certain advertisers over the years. And so while they are saying, well, hey, look, this group is illegally creating this boycott, it doesn't take into account the fact that, some of this decision making may simply be because people don't want to work with Elon given the things that he's done and said to them.
Bloomberg's Kurt Wagner, thank you. I mean, a complicated story. There will be a legal process. We'll follow it here on Bloomberg Technology. That does it for this edition of Bloomberg Technology. Another busy day of earnings, fantastic interviews with executives from across the world of technology. Recap on the podcast. You know exactly where to find it on the terminal as well as on Apple, Spotify, and iHeart. Cue the beautiful pictures. This is Bloomberg Technology.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Turnaround Tuesday extends to Wednesday for stocks. The S&P 500, the NASDAQ, and the Russell 2000, by the way, all posting back-to-back gains, clawing back some of the losses from their three-day sell-off. Now, when you look at treasuries, they're also building on yesterday's momentum. Prices down, so yields up. The price down results in a red color here, but yields up is the red arrow going up. And the 10-year, notably, is just below that 4% mark. Dollar, yen, and currencies, this is where the real action is. The yen is the biggest decliner among G10 currencies, in fact, major currencies, after the Bank of Japan's dovish signal. We'll get into all of that a little bit later on in the show. But first, we want to drill down into some midday movers. And Abigail, stocks are up, but they're just near session lows. What can you tell us?
Well, here are some of the reasons. Other stocks that are down that we could be near session lows, even though stocks are overall up. We are, of course, having lots of earnings come in. Take a look at the shares of CVS. Down about 1%. This after they slashed their outlook again. They have launched $2 billion in cost cutting, but they've been having such a rough time over the last year or even longer. Shares responding poorly. Disney down 1.9%. This as parks grew just 2%, a slowdown in parks, pointing to some fatigue on the part of consumers, frankly, offsetting some of the gains for streaming. Novo Nordisk down 7.9%, squeezed their revenue squeezed by PBM. Or the pharmaceutical benefit managers around Wegovy, that hit drug pricing. Investors clearly not liking that with that stock down so much. And then Airbnb down 13%. Its worst day ever. They missed sales. They missed bookings in the quarter that was, and the outlook is weak. So this is a snapshot of some of the stocks that aren't working. Let's take a look at what is working, helping out some of the indexes. And actually, this is one reason why we are off the lows. We'll get to it in a moment. That's NVIDIA. But first, Lumen Technologies up 30%. They put up a great quarter. Their free cash flow outlook also very good. There's a 14% short interest, so I suspect that's some of the move. Fortinet, its best day since 2009. The cybersecurity company put up a great quarter. The outlook, so a bit of a relief for the beleaguered cybersecurity space. NVIDIA had been higher. This, of course, is one of the biggest point boosts or drags, given what direction the move is, to the S&P 500, the NASDAQ. Given the fact that it is lower, that's one reason that we're off of the high, something to keep an eye on. And Apple, Scarlett, this is interesting because this one has had a tough time coming out of the pit that it had been in, up 2.4% today. That chart technically looks pretty weak. All of this tech bounce right now, not strong enough to think that's going to have real legs, but the markets overall are higher.
Yeah, I'm looking at Apple, the first gain this week after that two-day sell-off. All right, Abigail, thank you so much with that fantastic summary of all the big equity movers. We spoke with economist Nouriel Roubini, known as Dr. Doom, earlier today, and he believes that investors are getting too pessimistic.
The markets are often wrong about what's going on with the economy and what the Fed is going to be doing. There is some significant how to say, evidence of some slowdown of the economy, but I don't think the data suggests that we're going to have a hard landing anytime soon. If anything, actually, there's some elements of strength in the economy.
Nouriel Roubini there earlier on Bloomberg Television. So let's bring in now Quincy Crosby. She's the LPL Financial Chief Global Strategist with a little bit more. And Quincy, I want to start on this idea that we do have a recovery, a rebound for a second day. But I'm wondering from you, as investors catch their breath from that brutal 3-day sell-off, does this rebound look more fragile or more durable to you?
It's looking a little bit more durable. However, we know that when you have a sell-off of the magnitude that we had, the kind of get out now and ask questions later, and with the VIX climbing that much higher, although it's coming down today, it's edging lower, that there are those who lost money, and typically they'll wait for a pocket in the market, usually toward the end of the day if the market has been climbing higher, just like yesterday, in order to get out. So you always pay attention to that because you always have those traders, whether they're retail, whether it's institutional, that they want to get out and they want to get out at a higher price. So we're going to be cognizant of that. But also you still have the other questions that got this sell-off going. And that has to do not with the carry trade, but with whether or not the labor market is deteriorating at a faster clip. Remember, that's what started this last week.
Yeah.
And whether or not the economy was slowing. So we still have to absorb the data, for example, tomorrow morning on initial unemployment claims and continuing claims. And then we get to next week where there's a host of important data, including the CPI and PPI. But the point is, these kinds of sell-offs don't usually recover that quickly unless the Fed is involved, unless the Fed comes in and does something. So the market is doing it more organically. We've got the easing of that global unwinding of the carry trade. That has certainly helped.
Sure.
And now we've just got to watch whether or not this market wants to see and test if yesterday was a bottom.
Yeah.
Normally it isn't. So normally you have to test.
Okay, there's so many different threads to pick up on there, but let me go to what you said about the Fed. The Fed is going to, it's pretty clear we're not getting an emergency rate cut at this point, but there's still a lot of pricing in of a 50 basis point cut come September. And of course, that will be data dependent. So the jobless claims report tomorrow that's coming out, that's the biggest data point for this week. Are a lot of people waiting on it? What is your sense that that's going to be a big catalyst for this week?
It's going to be because what you don't want to see, obviously, is that it inches even higher. You don't want to see that the continuing claims inching higher because it suggests that folks are having difficulty getting jobs. If it is level, it stays where it was last week or it comes down, that would be a positive for a market that has been worried about the economy and that perhaps the economy was sliding too much. You know, we'll also watch the bond market, the treasuries, because the treasury yields were coming down just too fast. They came down telling us there is a scare, an economic scare. And, you know, you have a market that loves to have lower treasury yields, not when it is worried about an economic scare.
Right.
So we will take that tomorrow. We will see. But overall, the Fed usually doesn't come in unless liquidity dries up. That's the primal fear for the Fed, that liquidity dries up and somehow they've got to get markets going again. That's not happening.
But Quincy, you haven't seen anything in the last few days that suggests that liquidity is drying up, have you?
No, the only thing that we've looked at, because you have to respect what the credit markets are saying, we've seen spreads widen at the lower end, less quality ranking of the credit market. But no, and normally when you get a VIX that high, you would think that we were all talking about credit default swaps, the North American credit default swap index, because that tells you the real fear in the market about what could happen. We didn't hear that. So this is a little bit of an easing, but what we know is sometimes in August, everyone knows this, the volatility, the pockets of volatility can continue. And right now we'll be looking end of today, are we seeing more selling in this market from those who need to capture some gains that they lost yesterday?
Yeah, you're describing forced selling, that kind of disorderly price action that can overwhelm the market. What asset class do you look to, Quincy, to kind of lead the way as the best leading indicator for you? You mentioned bonds. Is it bonds? Is it currencies? Is it credit?
Well, the currency market is beautiful in terms of sniffing out what's going on, whether the dollar moves higher, whether the dollar moves lower. I mean, it's always there before everything else. But what we'll be looking at, we want to see the banks. The banks had been leading before all of this happened. We want to see, for example, is the XLF gaining momentum and staying there. That would be a helpful sign that we're going to pre-worries about the economy, pre-worries about whether or not the labor market was disintegrating to the point that the Fed needed to come in.
Sure.
That's what we want to see. And I'm paying very close attention to the financials.
Fantastic place to end it. And of course, XLF right now up 1.2%, adding to yesterday's 1.6% advance. LPL Financial Chief Global Strategist Quincy Crosby. And of course, she mentioned currencies. Coming up, we're looking at the Japanese yen weaker against all 16 major currencies. The Bank of Japan signaling it will hold on interest rates. And that, of course, is helping this relief rally across risk assets. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. Japan is now the epicenter of concern for global investors. Today, you look at the yen, it is down sharply, weakening against all 16 major currencies by at least as half of 1%. This is after the Bank of Japan signaled that it will not raise benchmark interest rates further if financial markets are unstable. So let's talk about all of this with Mark Chandler, Bannockburn Global Foreign Exchange Managing Director. Mark, it is good to speak with you. Overnight, the deputy governor of the Bank of Japan said the bank won't raise rates as long as markets are unstable. Clearly an attempt to soothe global investors. Is that what he actually meant, or are investors kind of interpreting that on their own?
Yeah, so I think that it's important to note, as you did, that it's the Bank of Japan deputy governor. It's not the Bank of Japan governor itself. And he spoke in the first person, saying what he likes to see. And I should have heard him or read him to say that here's the context, really, I think, too, that's important. When the Bank of Japan raised interest rates at the end of July, they said that the weakness of the yen contributed to the upward pressure on prices. Well, as you've noted, we've seen a big surge in the yen. And so the deputy governor of the Bank of Japan said that there might not be a need to raise interest rates further. And he said that, he basically said that, it seemed to me that as long as he wanted to see policy remain accommodative. And we're talking about a 25 basis point overnight interest rate. As you know, the Fed is 5.25 to 5.5. So we're still talking about very low interest rates in Japan and a much higher inflation. So real interest rates remain negative. People talk about the Federal Reserve put as if when the stock market sells off, the Federal Reserve's there at our back to ease policy. And I think that's a mistake. I think that the litmus test is really financial stability. And in Japan, in 3 days, we saw bank shares, the TOPIX index of bank shares, fall 28% in 3 days. So I think that this is not a BOJ put necessarily like the Fed put, but I think it's a small step in that direction.
Okay, so I'm curious because the BOJ sneezes and the entire world catches cold. And it's not like this is the first time this has happened. According to Moody's, in 2000 and in 2006, BOJ rate increases had to be reversed after it turned out the global economy sort of stumbled. Why is it that BOJ rate hikes cause such consternation across global markets?
Yeah, you raise a good point. And so for me, I would say that it's not just the BOJ, and I think this is what the governor of the BOJ said too. People think that it's the Bank of Japan rate hike. But, we had right afterwards the Federal Reserve, and then a couple of days later we had the U.S. jobs data, weaker than expected. Spurred. So I think it's really a twofold like development here, BOJ and the U.S.
Okay.
And what happens, I think, is that because Japan is the world's largest net international investment creditor country. That means that Japan owns a lot more of foreign assets than foreigners own of Japanese assets. And so people think then that when the yen strengthens, interest rates rise in Japan, Japanese investors, and here we're talking about life insurance, trust banks, talking about large pools of capital, will sell their foreign assets and bring it back into Japan. And meanwhile, it's not just Japanese. People in the U.S. or in the rest of the world, really, especially the hedge funds, the leveraged CTAs, what they've done the same thing synthetically. They've, in effect, borrowed the yen, sold the yen, and bought something else, like Australian dollars, stocks, and foreigners are unwinding too. And you can see this really, one way to see this would be in the currency futures, which have unwound. That is, the short positions out there, the speculators, have covered almost $7 billion of short yen positions in the last 3 weeks. Tomorrow, the Ministry of Finance releases from Japan the latest weekly portfolio flow data through the week of August 2nd. And we're going to be watching that closely. How much of what's going on is Japanese repatriating money, and how much of it is foreigners covering their shorts?
Oh, interesting. Okay, so that's a really nuanced way to look at it beyond, this is the carry trade being unwound. Having said that, I believe JP Morgan said that we're about halfway through this unwind of the global carry trade, using the yen, borrowing the yen to buy higher yielding assets elsewhere. What specific yen carry trades have the potential to trigger instability across the markets the most? I mean, if you could generalize, or is that not possible here?
Well, I think it's hard to really know the full size of it, partly because there's a lot of hedging going on as well. But broadly speaking, I'd say, we think about two parts of the equation, really. The funding currencies, which the yen is the dominant one, where you've also seen the Swiss franc and the Chinese RMB. There's a lot of discussion about how China manages its currency. But one thing I find is that the correlation between the offshore Chinese currency, the offshore RMB, and the yen is about a 70% correlation, suggesting to me the same forces that are at work, using the yen as a funding currency, using the Swiss franc as a funding currency, using the Chinese currency offshore as a funding currency. So what are people buying? Well, we think that people have been buying high-tech U.S. stocks, but we also know in the currency markets, the Australian dollar was a big beneficiary of the yen carry trade, as was the Mexican peso. So as the yen has strengthened, both of those currencies got crushed. Aussie fell to new lows for the year. The Mexican peso, I think, was 2-year lows. And now that the yen is stabilized, those currencies are bouncing back.
Okay, so big tech, Mexican peso, and Aussie dollar were the beneficiaries there of the global carry trade and are now in the process of being unwound. So final question to you, Mark Chandler. To what extent is assets in Japan the key driver here for global markets going forward, for FX, for stocks, for bonds, for credit? I mean, you mentioned that Ministry of Finance report. Is that the one thing to watch for? And then from there on, you can see the ripple effect?
Well, I think that we'll be watching that. We watch the Commitment of Traders report by the CFTC that comes out on Friday. It's almost a week lag time, so you can just really get a better sense of market positioning. But I really think that things will calm down for Japan, but we still have the other side of the equation, and that's what's going to happen in the U.S. You know, the market was pricing in a risk of an emergency Fed rate cut. The market's moving back against that now. It's also moving away from a 50 basis point cut by the Fed in September. This would seem like a panic to me. I'd be watching also the Atlanta Fed.
Yeah.
They do a GDP Now tracker, and they just revised it up. So the idea that that the Fed has to respond to some kind of emergency seems quite exaggerated to me. But we're going to be watching those to see if the markets do stabilize and to see those flows.
Got it. Mark Chandler, really appreciate your joining us today, as always. Mark Chandler is Bannockburn Global Forex Managing Director. All right, coming up, we're going to take a look at one of the indicators for the health of the U.S. economy, and that is consumer spending. We're looking at shares of Shopify. They're soaring, following better than expected sales and profit in the last quarter. We'll dig into why. This is Bloomberg.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. Now, outside of the big tech stocks, this earnings season really boils down to one thing. How well is consumer spending holding up? The company Shopify gives us a read. Shares of the Canada-based e-commerce company are up the most in 15 months, up 26% right now. Here with more is BNN Bloomberg's John Ehrlichman. John?
Scarlett, you know, the story of the consumer obviously is very much in focus. You're absolutely right. And I think coming into this quarter for a company like Shopify, we had heard from big players in e-commerce, Amazon, Wayfair would be good examples, where the stage seemed set for the possibility of a message here for this company that they would be navigating some headwinds. And they come out with revenue numbers that definitely pleased Wall Street and an outlook that in many ways left some of the analysts breathing a sigh of relief. Now, earlier this year, you might recall that this stock was feeling some pressure because they had shared some guidance actually for the current quarter that was leaving people wondering about this consumer story in the first place. So maybe they got the message during the quarter that they could find some levers to pull to make the numbers better. But at the end of the day, not just the fact that there is the consumer aspect, is the merchant aspect. Here is a business, Scarlett, that grows as more companies use Shopify. Could be a small business using their e-commerce platform, could be a big partner, like they have a pretty new partnership, for example, with Target. So every time they sign these new merchants on, every time they can sign them up for more services, that helps to grow their business. So that's as much a part of the story. But I think you're right. The health of the consumer, at least viewed through the e-commerce business here with Shopify's growth, would be a bit of a, as I said, a breath of fresh air to the analysts who were really concerned about the outlook.
Yeah. I mean, they're exposed to consumer spending, but really their customers are other companies. So one thing, and you mentioned, kind of the reduced outlook that Shopify had given people reason to worry about. Competition is a source of concern here, right? And I'm thinking particularly about Temu and Shein as competitors for the shrinking dollars that consumers are willing to deploy.
Yeah, and so I guess if you're Shopify and you're looking to get more merchants that might be competing with other e-commerce players out there for dollars, certainly Shopify talked about investing more in marketing spend. And actually, I think the big thing we've learned from all the technology companies during earnings season is the message around what they are spending and the return on that investment. A lot of times it's through the AI lens, but the return on investment you're getting from that is important. So another key part of the Shopify story is they've actually cut a lot of costs over the last year. They've actually cut a lot of jobs. Instead, they're focusing on growing through certain investment in technology, which Wall Street seems to like if that limits the number of employment growth, if technology can do more of the business, but also if they are spending more on marketing to grow the business as well. And I think the bigger thing with this company is not that long ago, they were going to make a bigger push, speaking of competition, into more head-to-head competition with Amazon in logistics. They backed away from that plan, which was looking pretty costly over time. And so, if you think about the way that a lot of these big technology companies have different levers they can pull, it felt like Shopify was ready to pull a few levers this quarter.
Yeah, and of course, Shopify is interesting because it gives us a window into consumer spending, not just in the US, but globally, right? It's got exposure to Europe. It's got exposure to Asia as well.
Well, that's actually an important point. So when you're maybe feeling a little tapped out on the growth story in the more traditional markets, where can you look? We spoke to analyst Angelo Zeno today about what he liked with the Shopify business. And one of the things he pointed to was overseas growth. Europe was a great example of that. If they can sign up more of those merchants in newer markets, maybe that gives them a better growth story over the longer term.
All right, great stuff. John Ehrlichman, really appreciate it. BNN, Bloomberg's John Ehrlichman for the details on Shopify, which is based in Ottawa. Coming up, why former U.S. Treasury Secretary Steve Mnuchin says it's time to end the 20-year Treasury note, which, by the way, he created during his time in office. We are looking at Treasuries down across the curve, pushing those yields up. The 10-year yield up about 4 basis points, but still below that 4% level at 3.93%. This is Bloomberg.
reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport, it's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with, right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
DOJ or other authorities
could face bigger challenges.
Britain's next.
It was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. We are at the 30-minute mark, or just about, so let's give you a snapshot of the market action right now. U.S. stocks extending their gains, adding to a global recovery in equities, and this is after the Bank of Japan's deputy governor soothed investors' nerves by vowing not to raise rates if markets are unstable. So you're looking at advances of about 1% for the S&P and the NASDAQ 100. Now, when you look at treasuries, after starting the week strong, they are under pressure again. There's certainly less demand for safe havens, but also there's a lot of supply this week from the government with auctions, including the 10-year, in about 30 minutes' time, as well as the private sector. You've got 17 companies, including Meta, looking to sell U.S. investment-grade debt. Now, the overarching theme across financial markets is certainly less volatility in these last 2 days. Let's now welcome Bloomberg Intelligence rate strategist Ira Jersey. Ira, when you look at the bond market, was the rally in the bond market not just Friday to Monday, but over the last 2 weeks simply overdone?
Yeah, we got to very overbought conditions in treasuries, particularly in short-term treasuries. So not a huge surprise that the rally that we've seen over the last couple of weeks has slowed down. We're probably going to kind of find a new range now, especially since we've broken through a lot of key technical levels in both the 2-year note and the 10-year note. So once we settle into that range, I suspect that we'll probably be there in kind of a 20 to 25 basis point trading range until the September meeting, or Jackson Hole, which of course, Jay Powell could certainly throw a wrench into whatever range we're in at that time.
So whenever we talk about treasuries, we quote the 2-year, we quote the 10-year, maybe we quote the 30-year. We never mention the 20-year. And the most read story on the Bloomberg today, Ira, is former Treasury Secretary Steve Mnuchin talking about the 20-year note, saying it is time to kill it. He basically said, I would not keep issuing them. It's just costly to the taxpayer, referring to the interest that the government needs to pay on holders of this debt. It's always been an outlier. When you look at the yield curve, the 20-year always kind of sticks out from the rest with the highest yield. Why is that?
Yeah, it's just the sector that's not natural for people to buy. It doesn't, the profile of both the maturity and the duration, so the risk per unit of, so the price move per unit of yield change is, it just doesn't fit anyone's profile. And I was a little bit surprised and skeptical that it was going to work way back when. There were, basically the Treasury Department wanted a new instrument to be able to issue a lot of the debt that they knew that they were going to have to roll over, plus they were expecting large deficits back when they introduced the 20 20-year or reintroduce the 20-year. But the other option was a 50-year. And the problem with a 50-year, even though conceptually a lot of people liked it, is that they weren't sure that they were going to be able to issue enough to kind of make a difference. At the end of the day, 20s have traded cheap forever, like you said, Scarlett. But there's some estimates out there of how much interest it actually costs the taxpayer. Not as much as some of those really bad estimates, quite frankly, because instead of issuing 20s, they would have issued more 10-year and 30-year debt, and yields there would have gone up incrementally too. But nonetheless, it definitely has cost the taxpayer some money and is kind of a failed part of the Treasury curve right now.
So not that the Biden administration is looking to get rid of it, but if it does, or if any future administration does get rid of this 20-year note, would that cause unintended consequences in the bond market? Would it create disruptions that we don't fully appreciate?
Well, I don't think it would create disruptions because I don't think you could do it cold turkey, but you'd have to, shrink the sizes a little bit until, or even get rid of some of the reopenings. Because remember, they issue a new bond. They're issuing a new bond next week, a new 20-year, and then they're reopening it in September and October. So you could start by getting rid of the reopenings, still having enough liquidity to have it be somewhat of a benchmark instrument, and then you'd have to wind up issuing more, 7-year notes, 10-year notes, 30-year notes to replace the issuance that they've been doing in the 20-year. So the challenge is like how do you shift that issuance from one to another? You're not going to be able to go cold turkey because you'll have to increase everything else probably a little bit too quickly.
Got it.
But so it is possible.
All right, good stuff. Thank you so much for explaining all of that. Bloomberg Intelligence rate strategist Ira Jersey with the latest on the 20-year note, which for now is still sticking around. Coming up, we're going to go back to company news and dig into Disney as the Mouse House offers a mixed picture in its quarterly earnings report. It is our stock of the hour. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it...
So we're just seeing from a page on X here, Flight Radar, they note that Egypt has issued a curious NOTAM instruction for Egyptian airlines to avoid the Iranian airspace between 01 and 0400 UTC on the 8th of August tomorrow.
some of the notable equity movers at midday. Shares of Rivian down after the company said it is maintaining its full-year vehicle production target and profit-making goal. Rivian also announced it plans to close a factory in late 2025 in order to prepare for a new vehicle launch. Over the one day, it's down 3.5%, but over 2 days, about a 2% decline. Meanwhile, Airbnb tumbling after the company issued a forecast for sales and nights booked that missed analyst estimates and also warned of slowing demand from U.S. travelers. This forecast positions Airbnb for its slowest pace of growth since 2020, the height of the pandemic. And that brings us to the stock of the hour, Disney. It's down following mixed third quarter results. The U.S. theme parks business missed Wall Street estimates for sales and profits, which offsets the company's first ever profit in streaming. Disney now looking for a mid-single-digit profit decline in the fourth quarter. Here's Disney CFO Hugh Johnston this morning on Bloomberg.
The lower income consumers are a little bit stressed and shaving a little bit off of their time at the park. And then higher income consumers are tending to travel overseas a little bit more right now. So we really just see this as a few quarters of slight perturbation in the numbers. Frankly, I think we're going to be right back as we get into the middle of next year.
Joining us for more on Disney is Chris Palmieri. He's Bloomberg News team leader for media and entertainment. So let's start with parks because that's what Hugh Johnston was talking about, Chris. And parks has become a much bigger part of Disney than it had been before. How much of this is by design? Meaning, does this shift say more about the park's growth or does it say more about the other businesses' weaknesses?
The second part, they certainly want to grow the parks. They've been doing a great job in recent years about adding attractions and raising prices and expanding. But the other business, the TV business, specifically the traditional TV channels, have been really weak, and the streaming business hasn't made up profit-wise. So that's why you're seeing the outsized dependence on the parks. And where it has been a star in recent years, it's now starting to sputter at the time when things seem to be improving a bit in streaming.
Yeah, but when we say that parks missed the sales and EPS estimates, how much of this is because of difficult comparisons versus true softness in demand from a fairly challenged consumer?
Attendance, they said, was flat, and at a time when inflation and they renewed union contracts with theme park workers and that, so their costs are up and their demand is not growing apace, and that's the issue. And what's been concerning was that they had said last quarter that things were going to get, after a little rough spot in the parks, that things were going to get better later this year, and they're now saying that's not the case. It could be another couple of quarters of softness. So it's definitely working off that huge post-pandemic boom that the theme parks saw, but when it ends now is not clear.
All right, got it. Chris Palmieri, really, really appreciate your giving us a quick snapshot there of what's going on with different businesses within Disney. I want to focus here now on the media business, the streaming business within Disney with Porter Bibb. Porter is managing partner at MediaTek Capital Partners, a longtime investment banker when it comes to media businesses. And Porter, of course, before Disney reported earnings, we did hear that it had announced double-digit pricing hikes for its different streaming channels as well as its bundles. And of course, it's not alone because it did this last year, and we also heard from Netflix, from Peacock, which is owned by Comcast, and from Max, which is owned by Warner Brothers Discovery. My question to you, Porter, is do these services actually have this level of pricing power, or is this something that we can only answer in time? They're increasing prices because they have to.
Bob Iger calls this the slowdown in the parks demand moderation. He could use that term for everything that Disney owns and is operating today, because the streaming side of the business, yes, it eked out a little bit of a profit, and it's going to face a whole series of ongoing rate hikes going forward to keep those profits coming in. But basically, Bob Iger, who was probably the best manager in the media entertainment world in the 20th century, he is not handling the 21st century uncertainties and dismembership of the media entertainment industry with any facility or success.
Yeah.
And he's got 18 months in his contract with Disney before he can turn things around, and I'm not sure he can, because he's going to be obsessed with who's going to be his replacement.
Well, yeah, I mean, that's a big task, and it's been a big task for a while. They just haven't really executed that well on it. So when it comes to the streaming business, the goal was to be profitable at the end of the year, and it did turn a profit in this last quarter. Does its profitability rely on continued price hikes, like the kinds that we saw announced yesterday?
I don't think that price hikes, all of us who lived during the 20th century in the world of cable, which is now called live TV, watched the price hikes occur every other month. If you wanted to watch HBO, you had to pay extra over your cable fee, monthly fee, and so on and so forth. The difficulty that Disney has right now is it's a 20th century entertainment world for the 21st century. Yeah. Bob Iger is sitting on a gold mine that he doesn't really want to touch, and that's ESPN Sports, which represents just under $5 billion of revenue right now. But that's chicken feed compared to what it could be doing if he would separate ESPN from the Disney universe and make it an independent spin-off company, because ESPN could dominate the $83 billion sports betting world that they're basically not touching at all right now. Maybe a tiny little bit of ESPN's revenue comes from sports betting.
Right. Well, we know that ESPN was a little bit late to the sports betting part of it, and in part because of the Disney brand and the discomfort with wrapping betting gaming into that. I want to move ahead because you mentioned HBO, and Warner Brothers Discovery is reporting earnings after the close today. Obviously, the big story here is whatever it says about losing the NBA media rights after next season.
Right.
Talk a little bit about the damage from losing the NBA games that extends to other parts of Warner Brothers Discovery's
The Fed
portfolio.
bids for 10-year notes totaling $8 billion.
Other networks lose leverage over the ad rates that they charge.
Well, I think David Zaslav is probably thanking his lucky stars that he did lose those sports rights, because it's helping delever the huge, still significant debt burden that Warner Brothers Discovery is working under. And they are now part of this new bizarre company called Venue, which is ESPN, Warner Brothers Discovery, and Fox, where they're combining their resources to buy sports rights and sharing them and broadcasting them. I can't figure out how that is going to work, and I'm not sure the public is going to pay the $40 or $45 a month fee that they're asking.
Well, I'm glad you bring that up, because it's not just wondering if the public's going to pay for it. You also have political opposition. According to The Athletic, Senators Warren and Sanders are asking the Department of Justice to investigate and potentially block this venture. And the issue is whether it violates antitrust or telecom laws. I mean, just very quickly, when you look at that, does it seem like it would have monopoly power over live sports?
I don't think Venue is going to work. Lachlan Murdoch is very happy with it. He said $40 is the price point that he chose, and he's happy that his partners are going with that. But it's hard for me to see how any significant amount of sports fans are going to pay $40 or $45 a month to watch what they used to watch for next to nothing on cable television.
Yeah, that's a good reminder. Porter, thank you so much. Porter Bibb, always a pleasure speaking with you, managing partner at MediaTek Capital Partners. And of course, we'll be breaking down Warner Brothers Discovery's earnings after the close today. In the meantime, Novo Nordisk sees a major setback in the obesity drug competition as sales of Wegovy disappoint. This is Bloomberg.
principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. We end the hour with a look at the healthcare space. Novo Nordisk reported sales of its blockbuster weight loss treatment Wegovy that disappointed investors. Its CEO telling Bloomberg shareholders should look at updated guidance rather than the stock move.
The second quarter is a quarter where Wegovy came in a bit short of consensus, and that's linked partly to some adjustments in how we accrue for rebates. So I would really urge investors to not just look at the quarter in isolation, but look at our confidence in the rest of the year and the upgrade.
It's been 10 minutes time now at the top of the hour. US is due to sell $42 billion in a 10-year note sale. The prior bid to cover was 2.58 and the prior high yield was 4.276%. So today's auction of 10-year Treasury's new issue has cheapened outright on the curve amid a heavy corporate new issue calendar, including several long-end tranches and signs of deleveraging in the future. Still, it's on track to draw the first sub-4% yield for the tenor in over a year. Given the decline in yields and poor liquidity conditions, JP Morgan's strategist in a late Tuesday note said that the sale needed additional concession for a good result. I'll also make note of the latest CFTC positioning data, which shows that speculators were net short 111,000 ultra 10-year note futures, the least in a year yet, and a possible source of covering demand.
You have positive rebate adjustments and you have quarters where you have negative rebate adjustments. And this quarter was one where we had a negative impact on Wegovy, and that explains, I think, a good part of the shortage compared to consensus. So I'm confident in our ability to compete, to grow with Wegovy and also Ozempic in the US, and that's what is baked into our guidance increase for both top line and operating profits.
So the price of Ozempic and Wegovy has really, taken on a political issue in the US, and I think you're testifying before the Senate committee next month. So how do you anticipate the outcome of the US election actually changing, your life in the US?
Well, I think in parallel with the focus on the price of medicines, I think we are also building the case of stronger and stronger evidence for using it. So if you look at what Ozempic and Wegovy are bringing to patients, not only glucose regulation, weight loss, cardiovascular protection, kidney safety, we're also studying MASH, non-alcoholic fatty liver disease. We are looking at Alzheimer's, etc. So the body of evidence, you can say, becomes stronger and stronger, and the value of the medicine becomes stronger and stronger. And also, if you look at what is the cost to society of obesity, the estimates that makes that cost the U.S. society $1.7 trillion, around $500 billion direct link to cost in the healthcare system and also economic activity level. So this, I think, has to be factored in, but doesn't change the fact that the U.S. has a challenged healthcare system that we all need to contribute to and make sure the patients get access to the medicines.
That was the Novo Nordisk CEO. We're going to stay with healthcare because stateside shares of CVS are falling after the company lowered its 2024 earnings outlook for a third straight quarter and announced $2 billion in cost cuts. So let's dig into CVS with Bloomberg's Jonathan Palmer. So Jonathan, what is driving this revised outlook? Is it the pharmacy benefits manager business, retail sales, or the Aetna insurance business?
It's actually in the Aetna business, and they've lowered guidance now 3 times in a row, and it's all been based on higher medical costs in their Medicare Advantage book of business. And so this latest revision downwards, while substantial in size, actually hasn't had that much impact on the stock. The bigger step down was last quarter when there was the bigger surprise around this revision in guidance. So I think investors expected today's downward revision.
Okay, it's been, what, 7 years since CVS bought Aetna. Has this business worked out for it? I know that these latest results indicate no, but overall, has this been a good purchase?
Well, there's been this trend in the healthcare space towards this vertical integration, and I think we've seen a number of people copy this strategy. It started with United Healthcare, CVS and Aetna followed. We saw Cigna and Express Scripts. So I think generally the market was moving in that direction one way or the other. And honestly, CVS had to do something. There's the competition from Amazon. There was pressure on the PBM. So buying the insurer made the most strategic sense. While it hasn't worked out as planned, I think over the long term it will.
Okay, so it's something that every insurer is going through in terms of these rising medical costs. Which kind of insurer is best positioned to deal with this?
Well, that's a good question. I mean, the issue right now is in Medicare Advantage. And so the players who have the biggest position in that space are United Healthcare, but that's a far more diversified entity. Humana is really heavy into Medicare Advantage. And then CVS has made a very strong play to increase its Medicare Advantage membership over the last couple years. And that's why it's had such a significant downturn here.
I see. CVS also got lower ratings on a quality scale for Medicare. Is this a big deal?
It is, because that's how they get paid in that Medicare Advantage market. So there's what they call Medicare Stars ratings, and they come out every year for the year ahead. And so for this year, their star rating went from a 4 to a 3, which means they lost about $1 billion.
It's been 5 minutes time now at the top of the hour. The US is due to sell $42 billion in 10-year notes. The prior bid to cover was 2.58, and the prior high yield was 4.276%.
Headwinds that the company is facing, and less of something that CVS can manage around. Would that be a fair assessment?
I think there's some things they can do on the margin. I mean, the rising medical costs and rising medical utilization is cyclical in nature, and I think it's impacting all players. How CVS prices their book of business and manages the business is fully within their control, and they have some levers there that they can pull, like this savings plan that they just announced for $2 billion, to kind of compensate for some of those headwinds.
Is the CEO, Karen Lynch, is she in trouble? Is her job in trouble?
I would think so. I mean, she's from Aetna. It's not a business that she doesn't know. They replaced the head of the benefits unit today, and the CEO and CFO are taking over day-to-day management of that unit. And so really the buck stops with her now.
All right, so we'll see how she manages through this. It might be a bigger cyclical issue that she has no control over, but it's now an execution challenge for her.
She has to execute, like you said.
Jonathan Palmer of Bloomberg Intelligence, thank you so much for giving us the basic rundown on CVS. I'm Scarlett Fu, and that does it for Bloomberg Markets. We are continuing to see stocks give up some of their gains. The S&P 500 has now pared its advance to 0.5%. The NASDAQ is still the best performer of the bunch, gaining 0.6%, but we'll continue to monitor whether this downward drift continues as we head towards the close. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
So we're shortly expecting the results of the US 10-year note auction. The Treasury pre-sale when issued yield comes out at the top of the hour, and the auction results often follow a couple of minutes after this.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Dueling campaigns hit the Rust Belt. Welcome to the fastest show in politics as the new Harris-Walz Road Show rolls through Wisconsin and Michigan today, the same day J.D. Vance visits the same two states. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us, Kaylee. The race to identify each other is officially on.
Yeah, and it is not a coincidence that each will be attempting at that identification.
Treasury when issued 10-year yield 3.929% ahead of the auction.
The election today, and something else that could play a role is the labor vote, and that is what in part today is about for the Harris-Walz ticket, as they've gotten endorsements from many in labor, including the UAW, and it's the UAW workers that they will be rallying with in Detroit this evening.
That's right, workers who rank and file, at least in many cases, have gone for Trump as Kamala Harris tries to follow up on Joe Biden's message of being the most union-friendly administration, I guess, in waiting. We'll see how that resonates today with a running mate at her side.
Yeah, of course, one that was part of a union himself as a former teacher. That is part of the resume of Governor Tim Walz. But other parts of his resume, including his record as governor, are already drawing attacks from the other side of the aisle when it comes to some of the more progressive policies that he has enacted into law in his state.
Yeah, we're going to hash out some of this with Charlie Cook a little bit later on from the Cook Political Report. The framing that we're seeing on each side, is it the coach, the teacher, the member of the National Guard, or is it the man who ran a sanctuary state? That's what we're going to be hearing about for the coming weeks.
Indeed. And we'll have, of course, more coverage throughout this hour and later on today on Bloomberg TV and radio. But first, as always, let's get a check on the markets. Charlie Pellet has that for us at the New York. Hey,
thank you very much, Kaylee Lyons. Indeed, higher right now across the board. However, we have just seen the Russell 2000 index of small cap shares turn negative, down now by about 0.1%. To be sure, stocks have been losing a fair amount of steam, well off session highs right now. But again, to be clear, the Dow, the S&P, NASDAQ, they remain in the green. S&P up 27 right now, up by about 0.5%. The Dow up 101 at 39,099, up by about 0.3%. NASDAQ up by 0.6%. As I mentioned, the Russell 2000 down now by 0.1%. 10-year at 3.92% with the 2-year 4.01%. Spot gold up 0.3%, 23.98 the ounce. And West Texas Intermediate crude oil up 2.5%, 75.06 for a barrel of WTI. Stocks climbing around the world.
Bid to cover 2.32, 2.32 with the high rate of 3.96%, 3.96% against the pre-sale when issued yield of 3.929%. The US there sold $42 billion in the end, awarding 91.61% of bids at high. Primary dealers take 17.88%, direct 15.95%, indirect 66.16%.
Airbnb plunging by the most ever after the company issued yet another disappointing outlook and warned of slowing demand from U.S. vacationers. Shares of Airbnb down now by 13.8%. So again, recapping here, S&P 500 index up 23, a gain of 0.4%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, Kaylee Lyons and Joe Matthew in Washington, and the newly minted Democratic ticket on the road, somewhere in the skies on the way to Wisconsin and, of course, later Michigan today. But yesterday, they launched the Harris-Walz campaign officially in Philadelphia at a rally at Temple University, which drew some 10,000 people. We brought coverage of that for you live here on Bloomberg TV and radio. You could hear often the exuberance in the room as both the current Vice President Kamala Harris and the man that she would like to serve as her Vice President, Tim Walz, spoke. Here's a little taste of what Harris told the assembled crowd.
We got some work to do. We need to move to the general election and win that. And to all the friends, listen, we also need to level set. We are the underdogs in this race. But we have the momentum, and I know exactly what we are up against.
Kamala Harris with her new running mate at her side in Philadelphia late yesterday. As Kaylee mentioned, we brought you special coverage of what turned out to be a pretty long event there for the two and the grand unveiling. And that's where we start our conversation right now with Adriana Lowenkron, reporting on the campaign for Bloomberg, has endured many of these rallies and has many more booked. Adriana, it's great to see you. When we consider, I hate to do this every time you come in here, but the amount of stuff that has happened and that you've witnessed firsthand, and I guess the last 3 weeks now since the attempted assassination, is just remarkable. It's going to take us a long time, I feel like, to unpack this, to rebuild it in our heads and really figure out what happened. But you're tasked with writing the first draft of history here. And you've got a new campaign that is bringing an enormous amount of enthusiasm that I'm guessing you were not seeing at Joe Biden events before.
Absolutely. I mean, I was at the Harris rally. It was the first one since she had gotten the pledged number of delegates to be the presumptive Democratic nominee, and the atmosphere was definitely different. Everyone is saying the vibe is shifting. That's apparently the terms we're using. But essentially, you know, and I speak to voters everywhere I go, whether it's Trump, it's Biden, it's Harris, and these are people who are now excited because it's not just they're voting against someone, it's they're voting for someone. And this is something that I think even everyone was kind of wondering about. Would the Democratic Party coalesce behind one person? Would there be more division until we finally get maybe even all the way up to the convention? And so having someone that the party is rallying around, having now a new VP whom the party is rallying around, you're definitely feeling that in the air.
Well, but there's something to be said about a honeymoon period or a sugar rush, if you will. Adriana, this is all incredibly new. We're talking a campaign that's just over 2 weeks old. How do they sustain this momentum? What's the plan?
Absolutely. And as you said, it's a great honeymoon. Let's just start with that. I mean, they're bringing in a lot. I think it's now 36 million or something since Walz was on the ticket. Eclipsed Trump, where before we saw what was an advantage for Biden. Actually, now the Trump campaign was going beyond that. Now we're seeing the tables turn and the polling turns. But I think what's important now is it's not just the money that's coming in, but it's really looking at the map. And so having Harris now, Walz, who brings in kind of the Midwestern appeal, there are way more states in play. And so, again, we're looking at these swing states, both, Vance on the Trump campaign and Harris. They're going on these swing state tours, and we're really going to see how they're able to appeal to all of the different voters here.
What's Donald Trump's schedule look like right now? Because I find it interesting that you've got Kamala Harris and Tim Walz. You've got the full ticket. Going to Eau Claire today, going to Detroit today. J.D. Vance is doing a solo tour across the Midwest right now without the top of the ticket with him. Doesn't everyone want to see Donald Trump? What's that all about?
Right. I mean, Trump is definitely down a bit this week. I'm going to be with him in Montana on Friday, which is not the most traditional place that you would think, but there is, of course, a competitive congressional race going on there, and we'll likely see him touch on that. But I think he's kind of giving Vance this opportunity to shine. I think also the way it kind of lines up with Walz, being introduced to the Democratic ticket. Now the attention is kind of on both of them. And usually, I have people telling me, oh, VPs don't really have too much of an impact. But I think everyone is still looking at them. They kind of know Trump already. They know Harris in the sense of they know her as VP. Obviously, she has to figure out how she's going to separate from Biden, or the opposite of that. There's kind of a tricky balance there. But in terms of these two VPs, they're relatively new generally to the public, and so this is kind of their chance. And there's definitely a test. We know Vance has come under fire for some comments as of late. We may see the same with Walz. Things may be come up. This is the time this is their introduction, let's say.
Well, it's not just J.D. Vance who has come under fire for comments. You were at the NABJ conference where Donald Trump openly questioned Harris's racial identity and was very combative with the journalists who were moderating him at that event. There has been, throughout this campaign, this narrative that the Trump campaign is more disciplined this time. The campaign, though, is one thing. The candidate is something else. Is there a sense that Donald Trump is going to get more disciplined with the messaging?
That's a good question. I think we definitely saw a bit more discipline. I'm thinking specifically in the wake of all of the fury over Biden and the age and whether he should step down. He was kind of quiet. He actually was pretty disciplined then. We didn't really hear from him. He kind of let Biden have all of the negative news coverage. But now we're seeing things change. We're seeing Harris come up. There's a lot of enthusiasm. A lot of the earned media is going towards her. And I think he is now kind of back in the situation where he's trying to go on the offense. And so he's been testing out a bunch of different things. As you know, NABJ is an example of something that did it stick? Maybe not. Did it help kind of bring in the black voters that he needs? Maybe not. And so we're going to continue to see, obviously, some of the cities that Vance was in Philadelphia too. Trump had been to Philadelphia. These are cities that they need. They need the black population. But again, you have Harris. Harris was just in Atlanta. She's bringing in the goods, as you may say, with Meg Thee Stallion and all of these other rappers. In Philly, there was a DJ. So it'll be very interesting to see kind of just the juxtaposition between the two and who they're trying to attract.
And of course, you'll be there to cover it all for us. Adriana Lowenkron, busy girl for Bloomberg these days. We appreciate it. Thank you so much for being with us. And as we assess, actually, to Adriana's point, what impact, if at all, a vice presidential selection in Governor Walz actually will have on this campaign, we turn now to Charlie Cook. He, of course, is founder and contributor to the Cook Political Report. Charlie, welcome back to Bloomberg TV and Radio. It's always good to have you. We made a very big deal about this yesterday. Obviously, there was quite an introduction of Walz as the vice presidential candidate last night. Does it really change the race meaningfully?
I don't think so. There are all these cliches that are fundamentally right, that people vote for president, not vice president, and that running mates can hurt more than they can help. And I think people put way too much emphasis on delivering a state. I think in 2024, nobody's delivering anybody. And, even historically, at most a point or two in a home state, and that's not necessary. That's not really provable. So I don't think it's going to make a big difference in that sense. But I do think he will. I think Walz is going to line up really well with Vance in a debate, and I think he projects. It's interesting that he does two almost contradictory things. One thing is he comes across so heartland and grew up in a farm in Nebraska, Minnesota, all this. And at the same time, the real progressives in the Democratic Party really like him. And it sort of frees up Harris to try to stay more towards the center than she might have to if she were having to put out fires on her left. And that raises one other point is the fact that Democrats got a fresh nominee without having to do a primary, a nomination fight that would pull all their candidates over to the left and way away from swing voters, from undecided voters. I think that's a plus. But this is still, this is going to be a really, really competitive race.
Really interesting, Charlie, because we're hearing everything about Tim Walz. He's everything. He runs a sanctuary state. He's pro-trans. I keep hearing he's giving driver's licenses to illegal immigrants. Some say that he's a populist economist. But then I heard last night in Philadelphia, he's a coach. It's Coach Walz. He's a teacher. He's an Army National Guardsman. Which identity emerges here?
Well, it probably depends on the eye of the beholder, who's looking. But the thing is, he does have some very, very progressive liberal policies. but he comes across in a more reassuring and not a threatening way. And, in politics, as you guys know, perception is a heck of a lot more important than reality. And he seems to have a good bedside manner, if you will. And I think it was kind of a very interesting pick. I didn't really expect it, but people that have worked closely with him, other governors I've talked to, House members, and to be honest, this guy who served 6 terms in the House, sort of under the radar screen, not a flashy guy, not a self-promoter, but the people that
So US stocks pair their gains. Dow now flat and the S&P up just 0.2%, same as the NASDAQ as well.
Well, not everyone thinks highly.
The Treasury is extending declines after the 10-year auction tail as well.
There is a narrative ongoing that is being encouraged by the Republican ticket. Donald Trump was talking about this on Fox and Friends this morning. This notion that the selection of Walz over Governor Josh Shapiro, a Jewish man, was an anti-Semitic one. Keeping in mind here that the vice president is married also to a Jewish man, the second gentleman of the United States, Doug Emhoff. Is that a message that will resonate with anyone who is not already part of the Trump base?
I don't think that's much of a. I mean, heck, did former President Trump picking J.D. Vance and not someone who is Jewish, was that anti-Semitic? No, I think that's kind of, anybody who believes that is going to want to believe that and will believe anything else. I mean, the thing is, I think the race has changed in that, Biden is out of the way, age, health, all that out of the way, but fundamentals are still there. The map is still hard, it still tilts more Republican than Democrat, with sort of, Republican, we've talked about this before, Republican votes being more efficiently allocated around the country. And the cost of living, economic anxiety, border, which were real problems for Biden, those have conveyed over. And it may not be 1-to-1, but it's, 0.9 to 1. I mean, it's very, very close. And those are still problems that she's going to have to deal with. But I think the pick was, it was a solid pick, and I don't think it'll affect the outcome of the election, but it will make for an interesting vice presidential debate, that's for sure.
God, let's see if we get one. Enter the incumbent, Charlie Cook. Political reporting today that aides to Biden and Harris are considering plans to bring him back onto the campaign trail and appear with her. Is that smart? Or should Kamala Harris try to stay as far away from Joe Biden for the balance of
We
this
are shortly
campaign?
expecting the results from the Fed reverse repo facility.
I mean, the thing is that Biden, yes, the Biden administration there was a reason why he dropped 14 percentage points in his Gallup job approval rating between July and October of 2021. And a lot of it was inflation, all that stuff. But at the same time, ultimately, what pushed Biden out of the race was perception that, look, this guy's too old to serve effectively for 4 more years. And I think a lot of voters, to be honest, back in 2020, it was never explicitly said, but they thought this was going to be one and done, that Biden would serve 1 term and move on. And it was never promised. He didn't break a promise, but it was sort of implied, and probably would have been a good idea, to stick with that. But, so I don't think her campaigning, I don't think Harris campaign. First of all, if she didn't campaign with him some, it would look terrible. It would look awful. So I think do it as some makes a whole lot of sense. But his job, he's going to be sticking to his day job, being president, till January 20th.
Well, as we consider Joe Biden, Charlie, you, of course, in the aftermath of the debate, were on this program talking about how it was already going to be hard for him to win. Now, the path had gotten that much smaller. He seems to have ultimately recognized that as well. When you're looking now at the path for Donald
52
Trump
counterparties take $286.66 billion at the Fed reverse repo operation.
Simply too close to call at this stage?
Well, to me, the fundamentals still favor Trump, that is, map and the issue agenda. But, Donald Trump has always been somewhat erratic. I think the last 4 or 5 months, he's been more so. And he seems genuinely rattled since Biden dropped out of the race. And, I'm sort of, there's a side of me that thinks that Harris can't win, but Trump can lose. And that if Trump loses, it's going to be him beating himself. And it is kind of interesting that, you know, around Donald Trump and when he was president, it was like total chaos. But there's a sense from the public that the country was doing okay. And during the Biden administration, while he personally isn't a chaotic person, but things in the country and things around the world were increasingly chaotic and seemed out of control. And I think that's one thing that's just sort of working back towards Trump, is that they look back and see his administration, the country, they think swing voters think the country did better under Trump. And so they assume that it probably would again. And they're even
Charlie
willing
Cook.
to put up.
Come back and talk to us when we have more time, Charlie. It's great to have you on.
JP Morgan's CEO Diamond says 50 basis point Fed cut doesn't matter as much as people think.
And politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between.
So in 10 minutes time now, at the bottom of the hour, see the release of the Bank of Canada's meeting minutes.
So you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. Top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg.
Morning from our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks have trimmed gains. Bonds are falling after a weak U.S. sale. We have got the Dow Jones Industrial Average now trading in the red, giving up earlier gains. Right to the numbers with the Dow Jones Industrial Average down 30 now, lower by 0.1%. The S&P holding on to a gain of 0.1%. The S&P up by 7 points. And NASDAQ still higher, up less than 0.1%. The NASDAQ Composite Index up up now by 16 points. The Russell 2000 index of small cap shares trading lower. It is down now by 0.7%. 10-year 3.94% with a 2-year that's yielding 4.01%. Gold up 0.1%, 23.94 the ounce. And West Texas Intermediate crude is up 2.7%. WTI 75.15 a barrel. Lyft shares slipping by the most in more than a year after the ride-hailing company posted second quarter bookings, and it issued an outlook that did fall short of Wall Street's expectations. Lyft right now down 13.3%. Uber, which reported earnings this week, up now by about 4.5%. So again, recapping, volatility back with the Dow Jones Industrial Average swinging between gains and losses right now. Little change, down 2 points on the Dow, while the S&P up by 0.2%. 10-year 3.95%. I'm Charlie Pellet. Balance of Power continues now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York with a look at the markets. Thank you so much. Quite the turnaround we are seeing. It's been quite a turnaround we've seen in the presidential race as well, as we've kept track of here on Balance of Power on Bloomberg TV and radio. We've had a series of questions. The first a few weeks ago was whether or not Joe Biden was going to stay in the race. We got that answer. Would he endorse someone else? We got that answer too. Now Kamala Harris is officially the Democratic nominee. Then we wondered who would join her on the ticket. We learned yesterday that it's Governor Tim Walz of Minnesota. We still have one question out there, though, and that is, will we see Kamala Harris share a debate stage with Donald Trump before the election? Remember, she wanted to debate on ABC on September 10th. He's pitching September 4th on Fox, but he had this to say on Fox and Friends this morning.
I don't know how she debates. I hear she's sort of a nasty person, but not a good debater, but we'll see, because we'll be debating her, I guess, in the pretty near future. It's going to be announced fairly soon, but we'll be debating her. I'd like to see it on Fox, by the way.
I'm still exhausted from Kaylee Lyons' wind-up into that moment earlier today on Fox and Friends. So are we going to debate? How about the vice presidential candidates? Let's assemble our panel. Rick Davis is here, of course, Republican strategist, Bloomberg Politics contributor and partner at Stone Court Capital, alongside Janae Wartell, Democratic strategist and partner at ARC Initiatives. Great to see you both. Rick, I don't know where we're going to go on this. You and I and Kaylee and everyone have been talking for months and months about whether you should allow even a candidate on a stage with Donald Trump. Did Joe Biden learn the lesson?
In 5 minutes' time now, at the bottom of the hour, we see the release of the Bank of Canada's latest meeting minutes for their last monetary policy meeting.
It might happen. I would have expected Donald Trump to reject a debate, but because I know, his folks are all concerned by his debate performance. They feel like they dodged the bullet, because even though he did a poor job in the debate, that's nothing compared to the suicide pact that Joe Biden had going into that debate. I guess they feel under some pressure. They want the media narrative to be kind to Donald Trump. Donald Trump, in that interview that you played, was going on and on about how the networks just absolutely love him and are dying to have him on. And so the fanning of the narcissistic flame, is so important to Donald Trump that not saying yes to a network invitation would be a defeat to his ego. So, I guess there's going to be a debate. And it sounds like maybe sooner than later, split the difference. I mean, these negotiations go on and on like this, but at least we're going to have something to do in early September, it sounds like. And it could actually have a bearing on the outcome of the campaign. So we've seen all kinds of major events lately, and it doesn't sound like we're done with them.
Well, on this idea of it having an actual bearing on the campaign, if we're running with this idea, Janae, that this is going to happen at some point before voters have actually cast their vote, is it more likely, I just wonder what the risk reward is here for each candidate. Is it more likely that it could convince someone to vote for Kamala Harris or Trump, or that instead it could convince voters not to vote for them, but not necessarily to vote for the other, if you follow?
Yeah, so we just have to look at the past debate. When Joe Biden took the stage next to Donald Trump, we saw a tremendous amount of viewer engagement, a record number of viewers tuned into that debate. And I think the reason was because they wanted to see this contrast on full display. They wanted to see kind of this Donald Trump Joe Biden matchup. And so I think in the same way, given all of the energy that's been surrounding this election, all of the twists and turns that we've seen, I think people are eager to see them standing right next to each other on a debate stage. So I think you're going to have a lot of folks tuning in, not just members of each of their bases, but also voters who are undecided, right? Voters who haven't really gotten to know Vice President Harris in the way that they may know Donald Trump or the way they might have known Joe Biden. They want to really see and hear from her and really be able to put that contrast into context on a debate stage. So I think this absolutely helps Vice President Harris. We know she's a skilled debater. We know that, she's even kind of provoked Donald Trump with the line, if you have something to say it to my face. But I also think she's ready and up to the challenge, whereas I think Donald Trump will regress to the name calling that he's often known for. We've seen his line of attack on her, and I think it will really make him look very small and very unpresidential.
Well, on the say it to my face part, it is worth pointing out that we heard that line not from Kamala Harris, but from Nikki Haley back in February when she was still competing against Trump in the Republican primary, and he refused to debate her or anyone else for that matter, Joe.
How true. You wonder as well if we're going to be talking about a vice presidential debate here. All this stuff has yet to come together. This is just the latest drip that we have from Donald Trump. And of course, Kaylee, that could change the next time he decides to do an interview. I'd like to ask you both about what happened on primary night. This is pretty interesting. Less about the outcome of the races, more about the wait for results in Michigan specifically. Bringing us back to 2022, 538 wrote this up, Rick. A technical change in how votes are reported meant that Wayne
So shortly
County,
expecting the
Michigan,
release of the Bank of
days to
Canada's
report
meeting
its
minutes.
votes, and we might have a repeat performance here. Less than 1% of the expected vote had been reported in the primary for the 13th congressional district more than 2 hours after polls closed last night. Are you concerned about this, Rick? How worried should we be about delayed results adding to the noise and a lot of confusion in November?
Yeah, I'm pretty concerned about it. I've never quite understood why there isn't more uniformity in reporting procedures. States all, I get it, make their decisions based on state law and the appropriate use of the ballot box in those places. But the reality is, haven't we learned the lesson that the sooner we can get these reports out, the better? States aren't consistent when it comes to, for instance, mail-in ballots. Some states have a vast majority of their votes as early voting mail-in ballots, and some don't count them before Election Day, and others do. And why in the world wouldn't you count mail-in ballots before Election Day and then have your responses ready to go in a timely manner? Yeah. I think the American public
So seeing the release of the Bank of Canada minutes, so ahead of the Bank of Canada July 24 rate announcement, the Governing Council saw risk that consumer spending could be significantly weaker than expected next year and 2026 as well. Price pressures in services more closely affected by wages were unlikely to be offset to the same extent as in the past months by disinflation in goods and price cuts. While excess supply was projected to persist into 2026, some members emphasized the amount of excess supply was uncertain. They saw less chance that pent-up demand would lead to a sudden rise in house prices as rates were cut. Members agreed to clearly communicate that they would be weighing the forces that could pull on inflation below the target against those that could hold it above the target. Governing Council members felt spending per person was expected to recover as rates declined, but many households will still face significant debt servicing costs. Consumer spending through 2025 to 2026 could be hit by the number of households likely to be renewing their mortgage at higher rates. Other members placed less emphasis on the risk that wage growth could contribute to price pressures. Some members felt wage growth at the current levels could lead to persistent price pressures for many services, and some members expressed concerns that further weakness in the labor market could delay the rebound in consumption.
Have a tremendous infusion of money behind negative messaging that's going to be influential, right? And that's not about this isolated election. That's about any election. And so whenever you see an infusion of money, such as what AIPAC dumped into this race, you're going to see that there's going to be a drive driving message that's going to alienate some voters and is going to galvanize other voters. And I think that's what you saw here in this race in Missouri, but also what you saw with Jamal Bowman's race, getting voters to focus on a singular issue, despite other issues being important for elections of members of Congress. You're going to be able to have a tremendous impact on the election. And I think that when you look at this primary race, I think you see that the spending, the messaging, it was kind of a perfect storm for there to be kind of some backlash against Representative Bush.
Well, millions spent by AIPAC in the primary here against Bush, and the same in New York against Bowman. Rick, what role will AIPAC play in the general election?
You know, I think that they've done their damage on the members who they felt were needlessly negative toward Israel. Their job is to help support Israel and their support in the United States. So I think most of that is done. I would be surprised if they get involved in the general election at the presidential level. So they may pick a few winners and back people in the congressional level. They will start to look at whether or not it's better to have a Republican Congress or a Democratic Congress. And part of that construct is who do they think is going to be president? You know, do you want a divided government? So I think the real impact they have and has been felt and been wildly successful is weeding out some of these folks who they felt were really antagonists to the Israeli cause.
All right, Rick Davis, Republican strategist and partner at Stone Court Capital, together today with Janelle Wortel, Democratic strategist and partner at ARC Initiatives, our political panel. We appreciate it. Thank you both so much. Now we want to get a quick check on world and national news. Amy Morris has that for our 99.1 Newsroom here in Washington. Hey, Amy.
Hi, Kaylee. Vice President Kamala Harris stepping up those efforts to bring rank-and-file union members in swing states back to the Democratic fold, this time with Minnesota Governor Tim Walz on the ticket. They are holding rallies in Wisconsin and Michigan today, with United Auto Workers President Shawn Fain expected to join them at a stop in Detroit. Now, this is all part of a 5-state blitz of battleground states that launched yesterday with a kickoff rally in Philadelphia, where Harris and Walz took the stage together for the first time as running mates. The National Transportation Safety Board is hearing more testimony today. It is the second day of hearings into potentially inadequate manufacturing standards at Boeing. The board is hearing testimony and sifting through mounds of evidence after the blowout of a panel of fuselage on an Alaska Airlines Boeing 737 MAX 9 back in January. A group of faith-based investors are warning retailers against selling the abortion pill mifepristone. The letter was sent to the CEOs of Costco, Walmart, CVS, Kroger, and McKesson, and it says the companies risk reputation and legal repercussions if they agree to sell the drug. The coalition behind the threatening letters was led by Inspire Investing. The Summer Games in Paris continue through this week, and at last count, the U.S. has the most medals with 88. China has 61 medals. France has 48 medals, and the U.S. also has the most gold medals with 24. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
In tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. All of a sudden, things have gotten very choppy. Last update, I told you the Dow was down. Right now, we have got the Dow back in the green, up by 0.2%. Dow Industrials up 88 points right now. We've got the S&P holding on to a 20-point gain, up by 0.4%. NASDAQ up 44, an advance there of 0.3%. The Russell 2000 index of small cap shares does remain lower. That index down now by about 0.4%. 10-year 3.95% with the 2-year on this Wednesday, now at 4.01%. Spot gold up $3 the ounce, $23.93, up by 0.1%. And West Texas Intermediate crude oil right now rallying 2.9%, 75.29 for a barrel of WTI. Brent, the global benchmark, at 78.43, up 2.5%. Stocks have trimmed a rally that was driven by the Bank of Japan's reassurance in the wake of historic volatility. Treasuries falling, after a weak $42 billion sale of 10-year bonds. Again, the 10-year, 3.95%. Briefly, Disney out with a mixed picture after earnings. Disney shares today, they are trading lower by 3%. And in the UK, many of the biggest banks and consultancies are encouraging staff to head home early this week to avoid protests being planned across the country after similar actions morphed into violent riots in recent days. Again, recapping, stocks higher, S&P up 19, up 0.4%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet sets the baseline for us on Wall Street. As we continue our way through this Wednesday edition of Balance of Power, we want to get more under the hood on the markets here. Abigail Doolittle is back with us, of course, Bloomberg Markets correspondent, with a better sense of what brought this turnabout today. Are we just selling into strength here, Abigail? How do you see it?
That could be a bit of it. It is certainly a topsy-turvy day. One saying that I really like, there's so many on Wall Street, but is volatility breeds volatility. And we have certainly had volatility in recent times and on the year. Into the recent pullback for stocks, the S&P 500 had been up about 20% on the year, and then from that peak into the recent dip, almost a correction. And then over the last day, yesterday felt like it was a strong rebound, but I was just looking at it. It was up just 1%. So this is a long way of saying investors are recalibrating, trying to figure out whether they should buy or if the strength of this near-term selling that we've seen, if it's here to stay. Now, very specifically, what's brought about this selling is what we talked about in the last hour, and that is NVIDIA, the chip maker, the AI maker, at its peak on the year, up more than 180%, too far, too fast. Investors getting a little bit nervous, taking profits. Earlier today, it had been up 4%. Now it's down 2%. So Charlie was just talking about the Russell 2000 being down. We also have the chip index, the SOX, down at about 0.9%. Investors just a little bit nervous. And frankly, when you take a look at the downtrend, it's pretty steep. It suggests that there's more work to be done. People want to figure out about the uncertainty of election 2024, the yen carry trade, earnings as they come in, and then, of course, the Fed. Jackson Hole's not so far away.
Mm-hmm. Well, on that note, Abigail, I wonder what kind of relationship you're seeing between what we're seeing in the equity market versus the bond market. Because, of course, on Friday, after that softer jobs report, we saw a massive bid coming in, especially at the front end. We were down 27 basis points on the day Friday, and then every day this week climbing back up. Same goes for the 10-year. What exactly is happening, and is there a correlation here?
Well, so today's interesting because we're not having that flight to safety that you're talking about there. We're not seeing it for bonds, and we're not seeing it for the yen. Right now, that 2-year yield up 5 basis points, telling us that those 2-year notes are selling off. The 10-year yield up about 6 basis points. So folks are not buying bonds. So today is not overall risk off the way it had been on Friday and Monday. In addition, the dollar yen is actually gaining by about 2%. But something that I would point out is the fact that we did have that risk off where folks were buying bonds and buying the yen. Why are they seeking so many havens? Really a flight to safety. That gets lost sometimes because the risk assets selling off seems a little bit more exciting. But
US stocks turning lower in choppy trade here. The S&P 500 last down around 0.4%.
So just keeping our eyes on the markets here, seeing the S&P 500 down around spot 5% on the session. Dollar slightly positive at around spot 2.6% up on the session. So again there, S&P 500 down around spot 5% on the session. The dollar up around spot 2.6%.
Yeah, so a virtual reality AI analogy, it's a red pill versus blue pill. The red pill is the AI momentum remains still fairly strong. Blue pill is the gross margin aspect of it. You know, how much do you want to sell your AI servers and at a cost, right? You know, what happened this past quarter was that they missed gross margins by about 300 basis points, primarily because they wanted to sell or add footprint to a particular customer, as well as some supply chain issues with their liquid cooling products. So, like you said, Carol, they raised their guidance by, you know, roughly $2 to $3 billion above consensus at the midpoint, but the margin profile seems a lot weaker because of that.
Why did this company, you know, if I put SMCI on a comp screen, which is a Bloomberg, for those listening who don't know, which is a Bloomberg screen that gives me the performance of the stock, the default is 5 years out, and I put it with NVIDIA, it just makes NVIDIA look like a slow burner. I mean, it absolutely took off for a while at the beginning of 2024. Now it's lost, it's given up all of those gains, but why did it grow so much faster than the chip maker?
So if you think about it, Supermicro is actually an arms dealer for NVIDIA, but at the end of the day, they were winning a lot of these deals that we're talking about by you know, billions of dollars of deals over the last several quarters, right? Now, if you look at the revenue rise for Supermicro, we're talking about $1 billion per quarter. All of a sudden, we're talking the next quarter's guidance, we're talking about $6 to $7 billion as part of their guidance. So they had this rapid rise in terms of revenue. Margin profile, like NVIDIA, they were the only game in town in terms of selling these AI clusters, and they've actually been able to ride the AI wave quite quickly. Now, in terms of the recent downturn since mid-March, as you said, Carol, what we noted in our primer is that they're going to start facing growing competition. Dell has come into the fray, but also you see these Taiwanese ODMs like a Foxconn, and Acton, and Winstron come in to play a bigger role into this AI server market.
So big deal is competition. You know, it was interesting. Speaking of functions, I was looking at the supply chain analysis. I mean, NVIDIA is its top customer, right?
Oh, that
supplier.
is the best function. If you look at SPLC,
I love it.
Anyone who has a Bloomberg sitting in front of you, that is worth its weight in gold.
Well, what's interesting, so NVIDIA, its top supplier, about 8.6%. Intel is its second biggest. I mean, and I just think about those two companies having some real serious issues, right? And a kind of a bit of a rethink. I do think about the supply chain and where Supermicro fits into all of this. Is that important to think about? And what are the other companies you watch to get a better idea of kind of the outlook for Supermicro?
And that's the irony of it, right? Because I was looking at the same function heading into results as well. And the big talk in town is the NVIDIA Blackwell chip production delays. And the stock was pulling back as a result of the concerns of the production delays. Now, they confirmed that the production delays were happening, and they don't expect the next generation Blackwell chips to occur until early next year. But the issue is they still raise guidance, right? So they're still able to work around these production delays with the current generation chips. So that speaks to how strong the demand on the AI side is. Now in terms of the Intel side, you know, I think Intel has separate issues, but they are still selling chips into Supermicro, and they are still seeing demand on the AI side with Intel chip as well as AMD chips going forward.
You know, Carol asked me at the top of the show which stock I thought was the loser today, Supermicro or Intel, and I just thought Intel because it's a loser every day. I mean, this company seems to get no breaks here. If I look at the SPLC, the supply chain function for Intel, its top customers are Dell, Lenovo, HP, like wah, wah. You know, really a bummer compared to NVIDIA's big customers, Microsoft, Meta, Alphabet, Amazon. I mean, those are the heavy hitters.
What's the PC versus the AI?
Yeah, exactly. Why has Intel, is it just take too long to reposition itself? And Is it just a perma-loser now, or is it possible for Pat Gelsinger, maybe some other CEO, to turn this company around?
He inherited a lot of bad stuff,
He's been there for 3.5 years.
But he inherited a lot of bad stuff.
I mean, maybe that's not enough time. What's the story?
Yeah, so I'm not the semiconductor analyst, though I do like to talk all things tech, Matt. I will say that there were some strategic moves that Intel had made that made them miss the mark on the AI side. And also, look, if you think about where NVIDIA is, I mean, they essentially won the AI game for at least another year or so that Intel has struggles to catch up. And some of the foundry strategies that they laid out a couple of years back, it seems to be taking longer than anticipated. So, missed the mark on AI, missed the mark on foundries. You're going to have to reset expectations.
Hey, listen, you're sitting down. I want to go back to Supermicro. You're sitting down with their C-suite. You want to know, what's the top 2 questions that you want to ask these guys?
Yeah, look, how much of the margin issues is more competitive-based versus self-inflicted? And how long do you think that this AI sales momentum can last? And where do you play in this AI in this overall scheme of the AI server market?
Having said that, Woo Jin, when you look at AI, I mean, that's what we've been nonstop for over a year. I mean, is it fair to say, accurate to say, the momentum is slowing a little bit? It certainly feels that way, and certainly from some of the numbers and commentary.
Well, if I look at it from a stock perspective, it feels that way, right? We're starting to see multiples contract because people are starting to rethink: is there an ROI to all of these AI investments, whether it's from the cloud side or whether it's from even the server side, right? Dell and Supermicro the same, but the revenues tell a different picture, right? The cloud guys are still spending, and the revenues are still growing. The question is that does that stop abruptly, or do we still maintain this rapid speed? I mean, I want to point out that at the top end of Supermicro's guidance, revenues are going to grow double again in fiscal 2025. So it doubled in 24, and it's going to double in 25. So that doesn't feel like the AI story dying down.
Okay, certainly it doesn't. All right, going to leave it there. Hey, listen, Woo Jin, thank you so much. Bloomberg Intelligence Senior Industry Analyst of Technology, Woo Jin Ho, joining us from BI headquarters there in New Jersey. We did mention Intel. There's
By
a
the way,
great.
that's a guest I'm going to steal.
No, you can't. He's ours.
I haven't talked to him before,
Woo
and
Jin,
I'm going to
say
use
no
him
to
on my show in the morning because he is a smart analyst.
He's super, super, super. We love him. Having said that, we do want to draw everybody's attention to a story about Intel. It was up 2% in today's session. It's down now about 2%, but not as down as much as Supermicro. Ryan Fostelka writing about it and basically saying Wall Street losing its patience, and stock's been downgraded at multiple times and by multiple firms in the wake of earnings, making it the least liked semiconductor company among analysts.
I'll tell you what, semiconductors in general. This morning, when we were looking at the 1.5% rally on the S&P and a little bit stronger on the NASDAQ, Shanali said, hey, you know what? The SOX index, the semiconductor
wasn't every
index.
name up?
Yeah, they were all up. It was gaining 3.75%. So really ripping face. And now it's down 2.25%. So a complete turnaround for semiconductors.
Even on Intel,
Our next WTI crude September future settle at $75.23 a barrel, which is up $2.03 or 2.77% on the session.
You've got 7 buys, 35 holds, 7 sells.
And holds are weak. You know what? If you're an analyst, a hold, come on, get off the pot. Make up your mind.
I don't disagree with you. You either like it or you don't.
Exactly.
It's kind of my thing. All right, guys, that is certainly our look at 2 of the tech companies. This, as we are looking at equities, pretty much near their lows of the session, down about 0.7% on the NASDAQ 100. World and national news we go. Off to D.C. and Amy Morris. Amy, take it away.
All right. Thank you, Carol. Vice President Kamala Harris stepping up her efforts to bring rank-and-file union members in swing states back to the Democratic fold, this time with Minnesota Governor Tim Walz on the ticket. They're holding rallies in Wisconsin and Michigan today. United Auto Workers President Shawn Fain is expected to join them at a stop in Detroit. Wendy Schiller is director of the Alfred Taubman Center for American Politics and Policy at Brown University.
They're clearly going back to the Democratic playbook: health care, reproductive rights, infrastructure, job building. She's shifting the playbook, and he's right there along with her with what right now appears to be no major liabilities within the Democratic Party.
This is all part of a 5-state blitz of battleground states that launched yesterday with a kickoff rally in Philadelphia. The National Transportation and Safety Board is hearing more testimony today. This is the second day of hearings into potentially inadequate manufacturing standards at Boeing. Yesterday, NTSB released public documents, including statements from Boeing workers, speaking of pressure to work too fast and a perceived lack of accountability for safety concerns. Summer Games in Paris continue this week. At last count, the U.S. has the most medals with 89. China has 61, France has 48, and the U.S. has the most gold medals with 25. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport, it's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with, right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
From the world of politics politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day on the S&P down 25 right now, right to the numbers. We're at 52.14, a drop of 0.5%. Dow Industrials down 192, also down 0.5%. The NASDAQ Composite Index down 110. For NASDAQ, a drop right now of 0.7%. Broad-based selling. We got the Russell 2000 lower by 1.3%. A swoon in stocks came after a weak $42 billion sale of Treasuries, just underscoring the fragility of the market rebound in the wake of historic volatility. The 10-year right now 3.96%, the 2-year 3.99%. Gold down $3.50 the ounce, down 0.1%. West Texas Intermediate crude off 2.9%, 75.32 for a barrel of WTI. Earnings news: Disney shares down 3.1% this morning. Disney gave a mixed picture as it reported third quarter results. Weakness at its famed theme parks offsetting its first ever profit in streaming. Disney again lower now by 3.2%. Airbnb shares, they are plunging as well today, down 14.4%. In fact, the biggest ever drop for Airbnb after it issued yet another disappointing outlook and warned of slowing demand from U.S. vacationers. Airbnb down 14.4%. Recapping stocks lower, S&P down 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Matt Miller, who is in for Tim Stenovic right here on Bloomberg Business Week. I feel like we're sharing our war stories of being like, let go or almost let go.
Going through layoffs.
Going through
it's
layoffs.
Tough when people
it's
have,
horrible.
pink slip parties puts too much of a positive spin on it. But that's when I first encountered real layoffs, because I started this job during the .com bubble burst.
And that's
I remember friends of mine were all sort of commiserating with each other over getting fired from their first jobs. Unfortunately, I was at Bloomberg.
Okay. Anyway, so that gets us to a story that is among the most read on the Bloomberg. It's a Business Week story by our WorkShift team. It's about the true cost of layoffs. It is, as I said, among our most read today. Let's get into it with Matthew Boyle. Matt, by the way, is Bloomberg News Senior Management Workplace Reporter. He joins us here in studio. All right. I am curious, though, why you guys are doing this story now. Is it because of some of the softness that we continue to see in the labor market?
No, Carol, I started work on this story 6 months ago.
Oh, you did?
Yeah, when layoffs were layoffs, when have they not been, coming hot and heavy, and just with Intel recently and Dell as well. But you see all these press releases, you read the memos from the CEOs, streamlining, efficiency, blah, blah, blah. And then the SEC filing goes out and they say, we are taking a charge of X million for severance. I'm like, okay, there's got to be more to it than that, right? What's the true cost of a layoff? Because I've been laid off. And we've, either you've been laid off or you've done a layoff. I think all of our listeners fall into one of those two categories. And you see what happens to the survivors, the people who are still there. They're like zombies at times. They're worried about another layoff coming. They now have to do the work of 2 or 3 people. So, your engagement goes down, your morale goes down. You're kind of looking out the door like, maybe I should be down the street taking a job somewhere else.
Yeah, a lot of other people
exactly.
just leave because
so
they're like,
we
listen,
know,
we're doing layoffs,
exactly.
I need to get out of this.
And Brent
So
crude futures settle at $78.33 a barrel, which is up $1.85 or 2.42%.
I see these as like intangibles. Like, well, it happens, but we had to do this. So I'm like, somebody must put some numbers behind this. So I dug around and finally found, I found an actuary at the Department of Labor. I found academics who have studied this. I found a guy who studied 200 layoffs and figured out how much did the quitting rate increase. after the layoff.
Let's step back and first look at just the direct costs.
Sure.
Because you're talking about the whole ball of wax, right? But you lead your story with the Facebook firings, and I knew a couple of young people that Facebook brought over here from Europe to work, and then almost all of a sudden laid them off and sent them right back. They had great packages, and the whole thing was almost $1 billion, right? To lay off 11,000 employees, that's like $88,000 a person.
Exactly.
And that's just the severance, right?
Yeah. So I looked in their filing, and they said, well, you know, after we $975 million or whatever it was in severance,
It's real money,
but it's not material because we're saving all this money. We don't have to give any of these people bonuses next year, and we're saving this or that. And I'm like, you know, there's got to be, again, more to it than that. So, but all we really know is how much they take in the charge for severance, which will cover, you know, 2 weeks salary, health care continuation, outplacement, you know, help with your resume. But again, the cost of a layoff goes so much further.
So what are the biggest indirect costs? Like you got to bring in, I guess, Bain or McKinsey to make you feel better about it first, right? So you got to pay
another cost. Yeah, there you go. No, Matt Boyle will do it for you. So the biggest ones are reduced productivity, output goes down. So I went to a firm called Active Track, and like other firms, so they're one of the biggest ones, they track employee activity. Now, we've all heard about, you know, they're watching your hours, they're surveilling you, and all these stories about employee surveillance, but employers do want to know, you know, what you are doing on the company time. So this company was able to track pre and post layoff productivity at 7 anonymous firms. Obviously, I don't know who they are, but we saw exactly what happened to productivity, and it was usually about an hour a day less productive. So that's 18 hours a month. Turns out to be, you know, for every, every 10,000, for a company with 100 employees, that means more than $50,000 lost in productivity every month until it finally reverts to normal, usually after 6 months, but sometimes, you know, not 6 months. So that's one of the big ones. Another one is increased quitting. People are worried about their own job, and so you have an increase in what's called voluntary attrition, quitting. Now, companies always have a level of attrition normally. It's usually about 19%. So usually you are replacing 19% of your people just because they found something better in general. But when you do a layoff, your voluntary attrition can go up by 50%.
That's a lot.
That is a lot, yes.
Well, and I feel like on the other side of that, like if you need those workers that are leaving,
yeah, those are the ones you want to keep. Exactly.
That to bring them in, to recruit them, then to retrain them. That's again another cost.
Yeah. So those are people you didn't want to lose in the first place. They're not the people you laid off. Then you have to recruit and train their replacements. So all that has a massive cost, and I was able to determine it. So you take a normal turnover rate, you figure out how much it costs to replace the people you lose, the increased incremental quits, as I was calling it, because it usually costs about 1.25x to replace a lost worker. So if you take, let's say, $65,000 average salary in the U.S., you know, that's over $80,000 to replace them. Multiply that by the incremental quits, and at a 10,000 person company, you know, you're talking about $75 million that you were not thinking you were going to spend to replace all these people.
I have to say, you sound like an accountant. I'm kind of loving this.
Well, I'm a history major, so no, this was all new to me. But you know,
it's wild though.
I had people walking me through the math, saying, "Yeah, that sounds right," but like, you know, I wish I could do it for like a particular company. You know, get inside their books. That wasn't going to happen, so I just had to sort of guesstimate and do back of the envelope
I bet those calls
stuff.
went well. Hey, so and so.
Yeah, exactly. Hey, Meta, why don't you tell me what you're
You have also, you know, obviously we all pay unemployment insurance tax, so the company pays that, and because when Meta fires 11,000 people, a lot of them are going to go on unemployment and start collecting money from the state. We all pay for that collectively, but it turns out the state wants a little bit more from a company that fires people the next year, right?
Yeah, I filed that under boring but important. Of course, your unemployment insurance rate is going to go up because you just put some people on unemployment. So guess what? So there I've spent weeks finding this guy who used to be an actuary for the Department of Labor, who was so tired of getting that question from people. How much is my UI rate going to go up? He built his own calculator to figure it out because it varies state by state, and all these laws and the formulation for it goes all the way back to 1935, and different states do it different ways. Long story short, you know, this guy actually put a calculator together. So I said, hey, what if you're a Texas company and you lay off 10% of your workforce? He's like, oh, just plug it in. Boom. There you go. Your unemployment insurance is going to go up by such and such $1 million a year. That's another one. Then there's the lawyers. Let's not forget the lawyers. You got to hire lawyers to make sure you don't get laid off, and if you don't get sued.
Right.
And you will get sued.
And you probably might get sued, but it might be a big, massive, ugly class action lawsuit, or it could just be one person who's like, how dare you, type of thing. But you have to analyze the demographics of the people you plan to lay off to make sure that no one group is disproportionately hurt.
It's not just a rash decision.
Unless it's just white guys.
Well, there are certain groups that, yes.
I can't say that. I feel like that's fair, right?
And you do not want to get into a class action suit. So you have statisticians. So you got to hire statisticians. You can't just do this, on Google. You got to crunch the numbers, and you need a real number.
In 10 minutes' time now, at the top of the hour, see the release of the U.S. consumer credit. Forecast is 10 billion on the prior 11.35 billion.
When we come back, we're going to talk about Tropical Storm Debbie, the story we have to do.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Super Micro computer shares plunging after reporting quarterly revenue and profit that missed analyst estimates, outweighing an annual sales outlook that was billions above Wall Street projections. Super Micro right now down by 20.2%, all part of a broader technology sell-off that we're seeing right now. Lows of the day with the S&P down 33, down by 0.6%. Lumen Technologies, based in Monroe, Louisiana, surging after full-year free cash flow forecasts from the telecommunications company surpassed consensus estimates. We've got Lumen up now by 29%. Both Goldman and J.P. Morgan upgraded their recommendations on the stock. Lumen by 29%. The cybersecurity company Fortinet jumped after it forecast adjusted EPS that beat estimates. Analysts are positive about billings growth, and they note that margins were the strongest metric in the second quarter report. Fortinet shares, they are also surging today. Fortinet up now by just about 27.5%. Rivian Automotive is maintaining its full-year vehicle production target and profit-making goal. It is warning of a looming plant shutdown next year to prepare for a new vehicle launch. Rivian today down by 6.5% among some of the other EV makers. Tesla down now by 4.2%. Some of the other company stories that we're following for you at this hour: Lyft shares slipping by the most in more than a year after the ride-hailing company posted second quarter bookings, and it issued an outlook that did fall short of Wall Street expectations.
In 5 minutes time now at the top of the hour, we see the release of the US consumer credit. This data here for the month of June. Forecast is 10 billion on the prior 11 spot 35 billion.
4%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, more Business Week to come in just a moment. First up, though, let's get another update on world and national news. Back to D.C. we go, and Amy Morris.
Thank you, Carol. Vice President Kamala Harris stepping up those efforts to bring in rank-and-file union members from swing states, this time with Minnesota Governor Tim Walz on the ticket. They are holding rallies in Wisconsin and Michigan today. Wendy Schiller is director of the Alfred Taubman Center for American Politics and Policy at Brown University.
You know, they're clearly going back to the Democratic playbook: healthcare, reproductive rights, infrastructure, job building. She's shifting the playbook, and he's right there along with her, with what right now appears to be no major liabilities within the Democratic Party.
Now, the Trump campaign is also holding events in key swing states this week. Donald Trump's running mate, Ohio Senator J.D. Vance, is also in Wisconsin.
And not just that we could be doing so much better, we were doing so much better when Donald J. Trump was president of the United States. We had somebody who was fighting for American manufacturing, American workers, and fighting for their jobs.
Earlier, Vance visited a Michigan police department to talk about what he sees as failed immigration policies. The Summer Games in Paris continue through this week, and at last count, the U.S. has the most medals with 89. China has 61. France has 48 medals, and the U.S. also has the most gold medals now with 25. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Matt Miller.
All right. Amy Morris, thank you so much. I love hearing the count on the. Are you watching the Olympics? I keep asking.
I'm not watching the Olympics because I don't know where I would stream it. Where do you watch the Olympics?
Peacock. And then I also
that's NBC, right?
Yeah.
Yeah.
It's their streaming. And then I also I had set some stuff on the regular NBC network. Their prime time, like at 9 o'clock, 8 o'clock, or 9 o'clock it starts, because there's a couple things I wanted to watch.
Yeah, I would have liked to watch that Djokovic Nadal match for one thing, and then Djokovic Alcaraz. I'm so happy for Novak.
I know, it's pretty cool, right?
You know? Yeah.
Such a great player and stuff. You should go to the U.S. Open.
I definitely will be going to the U.S. Open. I won't get the kind of seats that you get. But.
Well, you know, you have to hang with us. What can I tell you? Let's get to one more thing. This is a story that you're like, we have to do this.
Well.
Hurricane Debbie. We know the storm. It's now, I guess, a tropical storm. Strong winds, heavy rains, a lot of stuff happening certainly in Florida, but it also
a lot of stuff blowing around, right?
Matt's gonna have fun with this one, guys. Let's see if you can guess what it's all about. Go ahead.
It gives new meaning to the name the Florida Keys.
Apparently, about $1 million of cocaine was swept up onto a Florida beach in the Keys.
Yeah, unbelievable. 25 packages of premium Bolivian marching powder washed up on the shore. Apparently 70 pounds. That's 70 pounds of blow. And how many keys is that? Let me look at the unit. So 31.75 actual keys, wrapped in plastic, marked with red and black symbols, washed up on the shore, and somebody found it and returned it to the police.
As the police say, the drugs were discovered by a good Samaritan.
Who was really shaky and licking his lips a lot.
Stop that. I bet they were checking now where the package is open. We're trying to be serious, but it's just, you know.
It actually is. You know what?
It's not the first time it's happened either.
No, it's happened before, and it's pretty amazing, I think, because it's kind of funny at first, but then it's not funny, because you think about whatever mule lost this or whatever smuggler lost it, he's in deep, deep trouble with the cartels.
That's where you go.
Yeah.
Apparently some bad weather also had driven some cocaine to wash up in Australia, too. So,
yeah.
It's happening.
It happens all around the globe. Cocaine is everywhere.
He's worried about the cartel. That's the view from
You get
Matt
the smuggler's
Miller.
blues. You know?
All right, if you're watching on TV, the close is coming your way in just a moment. Matt and I are going to continue on Bloomberg Business Week on radio. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
A turnaround Tuesday flips to a wobbly Wednesday. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. I'm going to call it Wilted Wednesday.
Yeah, wobbly, wilted, walk
Whacked
back.
out, walk back.
We're going to be doing this for the next 2 hours.
Yes,
Stick
we
with
are.
us.
So this is the story. You have higher yields and you have a lower equity market. This was kind of the setup in terms of the bond market for most of the day, but the equity market was able to work its way higher. But then we had that pretty weak 10-year auction. We had record issuance on investment grade in terms of bonds, and that really continued to weigh on the overall bond market, and equities couldn't hold up and then slowly reverse their decline. Is this a blip? Or is this a continuation, Romaine, of Monday and Friday?
That's the big question.
US consumer credit 8.93 billion, 8.93 billion, slower than the forecast of 10 billion.
Historic 3-day market sell-off, a sell-off that we should point out has widely been perceived as overdone, particularly if you look closer at macro conditions. At least that's the view of famed economist Nouriel Roubini, known as Dr. Doom for his warnings about the 2008 financial crisis. But he says folks today are actually too pessimistic about recession probabilities.
I don't think the data suggests that we're going to have a hard landing anytime soon. If anything, actually, there's some elements of strength in the economy.
And then you have economist Claudia Sahm, whose cause celeb recession indicator was triggered last week. She also says it's not time to panic yet. There is no recession now, though she says we're not headed in a good direction. Former New York Fed President Bill Dudley, though, says while Sahm might be right that the economy isn't in contraction now, he wouldn't base monetary policy on that assumption. He says the Fed needs to act and act fast. That's going to be a big story, a big theme for us here on the show today. Meanwhile, we're also going to focus on earnings. That's also driving price action today. A bit of disappointment out of Disney. Weakness in its parks business earlier this morning, though that was offset by blockbuster showings for Inside Out 2 and Deadpool, the 2 highest grossing films so far this year. After the bell, we do get Warner Brothers reporting. No slouch itself. Godzilla and Dune among the 5 biggest films of 2024 worldwide. But investors, of course, likely to look past that and toward the TV and streaming division, which is reeling from cost cuts and the loss of a major sports contract. Nevertheless, let's go back to the macro and how it's really affecting the market trade out there, particularly when it comes to large caps versus small.
We could just keep watching.
I know.
Deadpool.
This is like kind of distraction
cool
here.
I love this movie, by the way. Okay, let's just have this really basic chart, and I appreciate how basic it actually is. It's a 5-day dip of the S&P, but I think it really highlights where we're at. And you can see here, this is Friday morning at the jobs number, gap down. Really weak day on Friday. Big gap down when it comes to Monday. Another weak day on Monday. Then we try to rally here on Tuesday. We try to rally a little bit with a little gap up today, but we just can't make it. And then now we are rolling over. And the question is, was this the start of a downtrend, or is this just a blip in the middle of an uptrend? And how we can define that in a regime that continues to see increased volatility, Romaine?
Yeah, here on a daily basis, an S&P that was in the green by more than 1%, now in the red by 3 to 4/10%. But it's really the sell-off in the mid-cap and small-cap space catching a lot of people's attention. The Russell 2000 down 1% as we kick you off to the close here on this Wednesday afternoon. Jill Carey Hall joining us right now, U.S. equity strategist over at Bank of America. And Jill, I do want to start off with small caps, or at least kind of the relative play between small and large. We had been, I don't know, it felt like it was like 5-6 weeks where small caps are really showing that they can kind of punch the weight with the large cap names. That's faded over the last few days. Does that continue?
Well, thanks for having me. I think from here, what's going to matter is earnings. So our view has been that, one of the necessary conditions for the Russell 2000 rally was that we could see more confidence in inflation slowing and more confidence that the Fed will be able to cut rates. That happened a few weeks ago and was a big driver of the rally. But I think now the other thing we're looking for is confidence that fundamentals for small caps can improve. And I think a lot of investors are looking at the earnings story because back at the start of the year, analysts were expecting that by this earnings season, small cap profits would have recovered, would have been very positive, would have been outpacing large cap profits. And that hasn't happened. The numbers have just continued to be cut. And this earnings season, it's been relatively weak for small caps so far. We still have a lot more reporting to go, but we're seeing, much fewer beats, much weaker guidance than in large caps. And when we looked at corporate sentiment on earnings calls, we're seeing so far this record negative spread between small cap and large cap corporate sentiment. So I think until we can see the fundamental trends turn around, the small cap rally is likely to, to pause from here. But if we can see the fundamental shift that gives us confidence in that very back end loaded earnings recovery, then the rally could pick up again.
It'll be interesting to see if that happens. I mean, we're already worked our way through about half of the Russell 2000 in terms of earnings reports here.
So we have posted out the US Consumer Credit June reports on the feed for anyone interested.
I am curious about the correlations to the macro economy, to the economic conditions. That is, there was a lot of talk here about that if you do think we're in a recession or at least headed towards a slumping economy of some degree or another, that small caps have a higher correlation than some of those large cap names. Are you finding that holding?
Yeah, I mean, I think, we've looked at the correlations of small caps to macro data and to various indicators. The ISM manufacturing indicator is still one of the most correlated indicators with not only corporate profits overall, but with small versus large cap relative performance. So we've obviously seen several weak months in the ISM. Macro data, we do continue to expect a soft landing in the US, but, typically these, when we look at different macroeconomic regimes, we've been in a recovery regime since earlier this year. Last year, we had some weakness. We had an earnings recession in the U.S. Small caps typically do well coming out of that and when profits recover. But now, obviously, we're watching a lot of the macro data. And if it were to start to weaken further, then, in those macro downturns, that's typically a period where you want to own quality and larger caps.
Right. So, Jill, if we sort of get through this soft patch, do we revert back to the rotation trade that we were all talking about 10 days ago in terms of sell tech, buy small caps?
I think broadly, we have expected a rotation in the market, particularly within the S&P 500 out of the Mag 7 and into the other 493. And that's where you are seeing those earnings trends start to shift. You've seen more sustainable evidence of that within large caps, that the earnings for the other 493 are picking up versus slowing for the Mag 7, which are also investing heavily in CapEx. And so that story is there for small caps as well, but it's just taking longer to play out, and we're not seeing as much evidence of it. So, I think if we do see soft landing, no recession, and if the small cap earnings data can improve, then that rotation may likely continue, especially if we're in an environment of Fed cuts, given all of the refinancing risk for the Russell. So near term, bottom line, we still think there's opportunity within pockets of small caps, particularly those that are higher quality, have been able to beat and raise, see upward estimate revisions. But for the Russell 2000 overall, we think it may be a challenging period. Volatility also typically picks up in this period, especially in election years. So owning quality and sticking with large caps for the near term may be more prudent.
Yeah, I was going to say, so I'm looking at the VIX, it's at 26, far cry from 60, but also far cry from 12. If we're in a more consistent, higher volatility regime, that's U.S. tech large cap, yeah?
Large cap over small and really quality. I mean, when we look at what's been consistent when volatility picks up, just stocks that have stable rather than volatile earnings have been a very consistent outperformer in those environments where the VIX picks up. I think for large caps, we've been more cautious on tech relative to some of the other sectors. Mag 7 stocks have been relatively more expensive and over-owned by fund managers versus some of the other cyclical areas. I think even if we're in a slowing macro environment, we still expect a CapEx cycle in the U.S. We have a lot of aging and crumbling infrastructure. We have reshoring. So even though CapEx is something that's usually cyclical, there may be more of a case for a CapEx cycle this time around. So, we still think that a rotation is likely, but near term, if there are concerns around a slowdown, we think sticking with high quality stocks, it makes sense.
Jill, always great to talk to you. Jill Carey Hall, U.S. equity strategist over at Bank of America, kicking us off to the close here on this Wednesday afternoon. Coming up, U.S. mortgage rates falling the most in 2 years, and that's sparking a surge in refinancing applications. More on that move ahead of the earnings results out of Zillow.
All right, plus you got European gas prices hitting the highest level of the year on reports that Ukrainian troops seized a key pipeline near the border in Russia. The geopolitical risks coming back into the energy market. Rebecca Babin of CIBC Private Wealth will be joining us.
And a closer look at the AI trade that was. Infrastructure AI stocks falling today, including shares of Supermicro down 20% as investors grow more cautious about weak profits. That's our stock of the hour. All that and more coming up in a bit. This is The Close on Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
European gas prices hitting a 2024 high today. This is after reports that Ukrainian troops seized key gas transit point near the border of Russia. Rebecca Babin, senior equity trader at CIBC Private Wealth. And this also comes on the heels of oil getting a nice little rally here despite getting hit quite hard in the last few weeks. Should we be pricing in geopolitical risk now in the energy market?
So the answer to that is no.
No, really? Why?
I think for a couple reasons. The first is the geopolitical risk premium that gets priced in is so quickly faded because unless you actually see barrels come off the market, there is not a lot of appetite to buy into that rally. And ultimately, what we're seeing happen in the Middle East and what we're seeing happen in Russia is some slight escalation, but I don't think that the market is anticipating or is going to start to see actual supply come off the market. We've had these head fakes, Alex, how many times since the...
A lot.
5, 6, 7 times. So I think at this point, the market's not willing to take that leap. We'll start to price that in when the barrels come off, and I think that's the smart play.
Do you think that the weakness that we've seen is that supply-driven or demand-driven?
this is a great debate. I personally think it's more of a supply-driven issue.
Yeah.
So demand, there's a lot of talk on the street. China demand, it has been a little bit soft. But guess what? India's demand has been stronger. U.S. demand has actually been a little bit stronger. They've offset. Estimates were for 1.4 million barrels of demand growth this year. We're coming in right now at around 1.3. It's not horrible. We do have a lot of supply on the market. Russia is not complying with the OPEC cuts. Kazakhstan not complying. We have a lot of countries within the OPEC group not doing what they said they were going to do. And so we don't have that deficit that we've been wanting to see. It's starting to come through fruition over the summer, but we really need to see it extend into the fall. And I think it's more supply, widely debated. I think there's a lot of people out there worried about demand. You can worry about demand in the future. Demand right now, what we're seeing, high frequency, not bad yet.
Well, let's stay on supply for a second. I mean, how much is the next OPEC meeting going to matter? I mean, you mentioned all these non-OPEC suppliers, so to speak. Are the OPEC countries, OPEC plus countries, going to matter?
Yes.
Yeah.
So they absolutely are going to matter. And what they do at the next meeting is critical. Do they actually step up and start to unwind those voluntary cuts that they've had in place for years? They're supposed to bring back about 180,000 barrels a day in October. Not a huge number, but the messaging is critical. I think where we are right now in prices, they're not going to do it. Should we rally back to Brent closer to that 80, 85 level? They're going to start to unwind those cuts. They have to. 2025 doesn't look like a great year for supply and demand imbalances. Their window to do this is small, and they need to do it to keep their group together.
I am curious for traders out there and investors, for that matter, too, in this space. We kind of went through this period where it seemed like volatility kind of evaporated out of this market, and for that matter, prices didn't really go anywhere. Now that we're starting to see prices move a little bit more, is that going to be accompanied by a significant uptick in volatility, or would this be maybe a smoother process?
I think we're going to see continued volatility. And we did have that really nice lull where vol was super low and you could just trade that range all day. You could buy the dip, you get a geopolitical event, you sell that rally. I think those days might be behind us simply because we're going into elections. We are going to a critical period for Fed policy. Economic data now is paramount. Every jobless claims is going to matter for crude tomorrow, right? So there's just that more heightened sensitivity to every reading in terms of what it reads. I think that the volatility stays high. I think you can buy a dip in crude and trade the range, but you need to be prepared. The vol is going to be very different than it has been over the last 6 months.
Which does raise the question about M&A and if that prohibits or ignites more M&A in the U.S.
Good question.
And also just the idea that does that actually support or detract from overall production too?
So I think the volatility detracts from production. Generally speaking, I don't think that M&A or decisions about production like to be made during extreme volatility, right? How can you make a decision and feel like you have a good line of sight when things are all over the place? So I don't think it's good for production or decision making. For M&A, I think, honestly, the M&A train is rolling and these guys are going to stay on it. I don't think the volatility is going to change. They see opportunities. They're sucking up the good assets in the Permian. That's going to keep happening.
And you don't think at least here in the U.S., any regulatory issues associated with that?
No, I do think there's going to be regulatory issues.
That means they're not going to do it.
Maybe not, depending on the outcome of the election.
We're still going to go for it.
All right, Rebecca, always a great conversation. Rebecca Babin, senior energy trader over at CIBC Private Wealth Group, as we count you down to the close here. And it was kind of interesting, Alex. I was looking at some of the other moves in commodities today. It's interesting. She was kind of saying that the demand issue isn't really an issue right now. But then I was looking at some of the other, like the industrial metals, and people seem to be freaking out about the drop that we've seen in copper and why China isn't buying more, why the U.S. isn't buying more. And I wonder, when does that start to become a bit of a yellow flag?
Wasn't copper, though, that trading really distorted from the arbitrage? So I feel like we've just finally wrung that out at this point. So it's hard to know how much of that was just readjusting from that trade versus actual underlying China weakness.
Yeah, and how much of this is just China and not necessarily more of the other major industrial economies?
I mean, probably when it comes to copper, but you ask anyone, they're still structurally bullish on copper. There's no way you're not going to be long copper in the next 5 to 10 years with the energy transition.
All right, well, we'll see.
So I hear.
All right, well, coming up here, we're going to talk about whether to break up or not to break up. That's one of the main questions on the minds of investors about Warner Brothers Discovery. We're going to preview what to expect from this evening's quarterly report. That's coming up in our top calls. That's up next on The Close on Bloomberg.
that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
All right, time now for our top calls. So look at some of the big movers on the back of analyst recommendations. And we start off with Fortinet. Upgraded to hold over at HSBC. The analysts encouraged by the cybersecurity company's forecast for adjusted earnings per share, a forecast that did beat estimates. HSBC also positive about billings growth. The price target being set, though, all the way down at about $59 a share. Those shares, though, having their best day, believe it or not, going all the way back to 2009. Next up, let's take a look at Trex. This is the decking company. It was cut to hold over at Loop Capital, which is flagging a slowdown in sell-through trends that will likely be worse than expected. Analysts also worried about the company's increased CapEx spend on a new Arkansas facility and the impact on margins. Those shares down about 20% on the day. And finally, let's take a look at TripAdvisor, flying down to neutral from buy over at B. Riley, with the analysts saying a deterioration in the core brand's revenue growth and margin prospects a bit concerning. A slowdown in travel coupled with high competition, serious headwinds to top-line growth, and no immediate catalyst in the analyst view up ahead that could turn the tide. Those shares moving lower by as much as 17%. Those are some of our top calls. We do want to stay in the sell side space right now and push ahead to a big event after the bell, and those are the earnings out of Warner Brothers Discovery. Investors and analysts have a lot of questions right now about everything from the loss of that NBA contract to a possible breakup of its assets. Jason Bazinet joining us right now, internet and media analyst over at Citi. He's got a buy rating on the shares. A lot going on with this company, Jason. Let's start first with the cost-cutting efforts, because that's been a big focus here. And expectations are that those cost-cutting efforts will continue. Are you encouraged by some of the moves that Zaslav has taken with those cost cuts, or are you more concerned that that might actually be distracting from some of the, growth initiatives that investors want to see?
Oh, no, I think the cost cuts are good, because we all know that the quantum of dollars you can get in the legacy linear business is just much larger than it is for any streaming business. And so the expenses have to come out of the business as the top line faces pressures.
Well, and the top line definitely going to face pressure because of losing that NBA media rights for those games. What do we expect them to lose on that and that forecast, and can they make it up somewhere else?
Well, it's really interesting. I can't remember how many weeks ago it was, but the market sort of sniffed out that Warner Brothers might lose the rights before they did officially, and the stock was down 10% that day. And it struck me as sort of an outsized reaction. And we went and cranked through the math of how much they would save by not having the NBA, and then how much they would lose. And when you went through that math, what the market was essentially doing was pretty rational. They were saying that the affiliate fees for the channels that carry the NBA content would probably get cut by a little over $1 a month. And that's actually pretty reasonable. So I would say that the market has priced in correctly early that Warner Brothers was going to lose the NBA. And I'm not sure that there's a lot that they can replace it with. I think it's just resetting your affiliate fees and advertising lower.
And that brings us to the question, too, about whether this company sort of stays together in its current form. Jason, do you see any value here in breaking it off? And if so, which pieces?
Well, I think the first principle is the market, I think, correctly has inferred that having sort of all of these assets together doesn't work, meaning a production asset that you feed into linear channels that you also feed into the app, and they're also uncomfortable with a level of debt. And so the home run scenario would be if you could take the production assets and the streaming app and essentially put no debt on them. That would be sort of good media co. And then you'd have a lot of debt on the linear business, and as it generated cash flow and shrank, you'd pay off the debt. I think the market would love that. The question whether they'll go down this route, I think, is really more of a bond indenture question, which is, do they have the legal flexibility under those bond indentures to essentially saddle the linear business with the majority of the debt? If they don't have that, then I don't think that they'll do it. If they do, the market would applaud having sort of bad media co, a lot of debt, the linear business, and then good media co, not as much debt. For the production assets and the streaming app.
I'm sure Zaslav would be totally into that. When you take a look at the stock price over the last year, when are we going to hit sort of like the bottom, the washout for earnings, and we kind of grind our way up from there?
Well, it's interesting that those are exactly the nature of the questions we're getting from the
It's been 5 minutes time now at the bottom of the hour. We are expecting possible comments from ECB's McCall.
Is that the enterprise, the multiple, the EV to EBITDA multiple sort of holds, and then the company uses its cash flow to pay down debt, and then that accrues to the equity. Mm-hmm. What's essentially happened is the multiple has just continued to compress. So back in 21, it was 10 times EBITDA. We're now down to about 6. And so at some juncture, the EBITDA multiple can't keep compressing. And so I think this will be true. And those are the nature of the questions we're getting. From my conversations with the buy side, I think most think it's a little bit early, but we're getting to the point when you start trading, I don't know if it's 5 times EBITDA, 4 times EBITDA, it's hard to get your EV to EBITDA multiple much lower.
All right, Jason, appreciate it. Thanks very much. It's going to be very interesting in the next 35 minutes time. Jason Bazinet over at Citi. So Disney shares, they're higher today, had a mixed earnings release this morning. You got weakness in its theme parks offsetting its first ever profit in streaming. The CFO spoke to Bloomberg about the strength of that streaming business.
3 great motion pictures, the IP that we've produced ourselves, are going to be on the streaming service, as well as an enormous number of Emmy-nominated TV shows. And when you deliver that much value to consumers, consumers are willing to pay a little bit more because, frankly, they're getting so much back in terms of entertainment.
But at the same point, have they just raised their prices too far in the theme parks, and they just started pricing people out now?
Yeah, I think this was a cost issue. I don't know why they don't just admit that, but I mean, there was so much anecdotal evidence about that. Also, just a quick correction, Disney shares actually down right now, down about 4%. But it gets to the question, too, is the business, the entertainment business did well. I mean, you saw a couple of their big films.
Oh, yeah. Including... You got me Inside Out 2. You got me Deadpool. This is The Close on Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we
Shortly expecting possible comments from ECB's McCall.
On a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
One stock we are watching into the close is Zillow. It's reporting earnings after the bell. The stock is down by about 1%. I'm totally one of those people that have Zillow app on my phone that I look at all the time obsessively. Mm-hmm. And you have to wonder what kind of demand forecast they're going to put out there, considering we're going to get those drop in rates this year.
Yeah, I wonder if this ends up being a catalyst for buying. I mean, we talk about how there's really been no activity, and first sign you get a meaningful drop in mortgage rates, then obviously people are going to come out the woodwork. And if you buy into this notion that the Fed's going to cut rates multiple times sometime this year, then I don't know, if you're shopping for a home, this might be the time.
Exactly. And speaking of, you got those 30-year mortgage fix coming into 6.22%.
What exactly are you looking at on Zillow?
Me?
Yeah,
oh,
like what types of homes?
I have 2.75% 30-year fix.
I know. You can tell us that every day, but I mean, but you're not looking for like a second or third home or something like that?
No, I can't afford it. It's just fun. Okay. It's just real estate attraction. Right. Okay, that 30-year fix dropping the most in about 2 years as bond yields drop. And also, on the way the equity market, REITs are the best performing sector in the S&P this past month. Joining us now in the studio with more is Laurel Durkee, head of global listed real assets at Morgan Stanley Investment Management. Let's start with REITs. Does that REIT run last?
So, I mean, the REIT market absolutely has been on a tear over the last 30 days, and it's a huge difference from what we've seen over the last 5 years, when REITs were underperforming the broader market by almost 10%. But taking a step back and looking at what happened over the last 5 years, it was COVID, and it was QE to QT. Mm-hmm. Right? And so the dramatic hike in interest rates really was detrimental to the cash flows and the underlying fundamentals for a lot of the listed real estate sector. But where we stand today is very different.
So where do we stand today in also light of potential rate cuts?
So I think the question is not if we're getting the rate cuts, it is when and how much. Mm-hmm. And we have seen that REITs do perform very well in the 12-month period following interest rate cuts. So in the past 35 years, if you look at REIT performance following the rate cuts, they do outperform the S&P in that environment. In fact, it's consumer staples, healthcare, and REITs that outperform after rate cuts in all of the S&P. So we're in for a potentially very positive 12 months for real estate securities.
You have a market pricing right now, at least based on the Bloomberg terminal, a full percentage point of rate cuts this year. You think that's going to happen? That
I think
magnitude?
It's very plausible.
Mm-hmm. Yep,
I really do.
And when we talk about the benefits of that, I mean, we talk about REITs as this sort of big umbrella, but I assume not everything in the REIT space is going to perform equally once we start to see those rate cuts. What's going to perform better?
So it's at the beginning of the year, I had said we really want to focus on the top-down thematics within the real estate sector that have secular drivers of demand that really will propel growth. So it was technology positively impacting data centers. It was aging demographics positively impacting seniors housing. And it was this housing affordability and housing shortage thing you're just talking about, everyone looking at Zillow but not being able to afford it, that was benefiting the residential rental market. Where I look at today, what I'm most excited about, I think those sectors are still going to do well, but what I'm most excited about are sectors that are going to benefit directly from these rate cuts. And those sectors that are going to benefit directly are ones that have a fundamental positive, that will have an improved cost of capital and therefore be able to really participate more robustly in external growth activities.
Like what?
So look at the freestanding net lease sector, whether it be with retail net lease, gaming net lease, or even healthcare net lease. So a name I really like in this sector is Agree Realty, ticker ADC. It has done very well in the past month, but this is just the beginning for this stock. It's a mid-cap retail freestanding owner-developer of single-tenant properties, very diversified tenancy. About 2/3 of its tenancy is investment grade. Top tenants include Walmart, Tractor Supply, CVS, TJ Maxx. No single tenant is more than 5 or 6% of their rent roll. Balance sheet is pristine. They have dry powder on the sidelines that they can deploy into properties that they find. And what they have is a disciplined management team.
Okay.
Right? And you don't always find that. But their external growth engine only really works when the spread between where they're acquiring and where their cost of capital is at least 75 basis points.
Okay.
And if it's not 75, it's not going to be accretive enough for the underlying shareholders. So the past several years didn't really work out as well as it does now. Where we're in that green zone and the company is going to be deploying this capital.
All right, well, that's definitely a new one for me on my radar. We'll keep an eye on that. I am curious as well about your thoughts on general office real estate. I mean, there was a lot of talk, obviously, about all the gloom and doom, that we were headed for some implosion. That implosion didn't necessarily come, though there's still a lot of stress out there. What is the state of commercial office real estate, and would a series of rate cuts solve some of those issues?
So office is an interesting sector, and I would say it's very divergent among cities across the globe, and then even within those cities, within particular submarkets. So you have some submarkets that have vacancies of 5 to 10% here in New York City, for example, whereas the overall vacancy of this market is closer to 25%. What we have seen unfold in the last quarter is outsized leasing that really surprised everyone's expectations. And that is, I believe, an indicator that the office market is not dead. You just need to be a little bit more discerning when thinking about what office property you want to invest in. But you have certain submarkets, including Park Avenue, Grand Central, that really is seeing increasing rental rates, declining vacancies, and it's a great fundamental backdrop.
Because right next to Metro North, too. It's like if you go to the transportation area, that seems to make a lot of sense for commercial real estate. Now, you mentioned what you do like. What do you do with, like, AI data centers, warehousing, like sort of these, structural changes that we're going through, still in a cyclical market, though?
So I'm still very positive on the overall data center sector. I think that you have seen the companies perform pretty well this year, and that's across the globe. And that's really predicated upon the artificial intelligence demand that is really fueling data growth for these data centers. And it's coming at a point in time when you have supply coming in much below what is necessary in order to meet this AI demand. And the reason why supply is more limited today is because we have power availability challenges. It's not necessarily power generation, it is power transmission.
Yes.
The grid simply cannot support the amount of power that is required to fuel these data centers to really meet the AI demand. So when I look at the fundamental picture for data centers, really for the next several years, I think that these secular demand drivers are going to significantly outpace even the most bullish expectations, and they're still going to be good stocks to own.
All right, Laurel, going to have to leave it there. Great conversation. Laurel Durkee, one of the best in the business, head of global listed real estate assets over at Morgan Stanley Investment Management. Counting you down to the close right now. Just about 21 minutes to go here, Alex. And it's interesting, too, she ended on data centers there. I know in a few seconds we're going to talk about Supermicro, which is taking a huge leg down because of some concerns about their earnings in the here and now. But there was a weird story there because their forecast was very bullish in terms of revenue growth coming out of AI data center growth.
Well, it's going to be hard for me to understand how to take the reaction function of the stock market for earnings right now very seriously because we're in this weird phase. Like, are we still in are we in a downtrend that's going to be for real? Or are we still in an uptrend and this is a pause? And that's going to really also determine the reaction function of these stocks.
When you were on Zillow, did you actually look at like commercial properties as well to save the office space?
That's stupid and boring.
So,
no, why would I do that? No, I'm looking at the penthouses I'm never going to be able to afford with like the pools and like the upside thing.
Nobody lives in those things anyway. All right, coming up here is a sharp reversal for shares of Supermicro. We're going to dive deeper into that story when we come back. It's our stock of the hour. This is The Close on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Taking a look at some of the big movers right now. Topgolf Callaway, ticker MODG, plunging about 12%. Hard to know exactly what's going on here, but they were scheduled to report earnings after the bell tonight. It looks like some type of earnings presentation was inadvertently posted online. Now, if you believe those numbers as they are crossing the Bloomberg terminal right now, it does look like they missed on some key revenue numbers, both for the current quarter as well as for their guidance going forward. I'm not going to read those numbers to you just because we want to make sure that all this is correct here, but the knee-jerk reaction is a huge down tick here in the stock, down 12% here, Alex, as we move closer to those closing bells.
All right, let's get to our stock of the hour now. We're watching shares of Supermicro. That stock is down by almost 20%. We're reversing some major gains this year. You got weak profits foreshadowing its strong outlook. Bloomberg's Abigail Doolittle has more. But Abigail, it was really about margins that seemed to be the problem here.
It was absolutely about margins, and I would also say it's about how much. You were mentioning that the stock was higher on the year between January 2nd and March 8th, up 337%. So that's the degree of perfection priced into this stock.
That's it?
That's it. You know, if you only want 300% in 2 months, you know, but it's been trickling down since then. So in terms of the quarter that was, you were mentioning margins. The margin came in at, the gross margin came in at 11.3%. Their long-term goal is 14 to 17%. Apparently what's really weighing on that margin is the mix shift, like the products that they were selling, plus higher production and supply chain costs and a more competitive landscape. But then on the other hand, you have this guidance that is really pretty great. 87% sales growth. They're really targeting the midpoint of their sales range of coming in at $28 billion. That's an interesting thing, though. It is the midpoint. So the range for next year, $36 to $30 billion, right in the middle. I think, again, this stock was up so much, and I just received feedback on Twitter, or I mean X, that I should stop using the phrase too far or too fast. But how else do you describe up 337% in 2 months? Yeah.
Well, pro tip, just ignore anybody on social media. But I am curious, though, too, about the guidance, because I thought the guidance was strong.
It's strong.
And you would think that that would please investors, because it's kind of a continuation of that AI steam. The idea that there is something in the tank. Now, whether they have the operating margins that go along with it, but the idea was everyone thought maybe the bloom was off the AI rose. They're basically providing the forecast saying, look, data centers are still hot.
Yeah.
And I think everyone we talk to seems to think they're hot.
I think I don't think that there's any disagreement with this. I think, again, when you put it into the context of the environment with the stock up so much and then the last month of a bit of risk off, folks want perfection. If the companies aren't hitting the numbers that they're expected to hit, then they're going to move on to companies that do. I mean, put this into context. So today we're down almost 20%. That's only the worst day since April 19th. That's how many big moves this stock has made. And I would say since it's been added to the S&P 500.
Do you look at the 90-day volatility on this stock? It's insane.
No, I didn't. Is it crazy?
Yeah,
it must be. I mean, it's
like Tesla from the old days, almost.
Yeah, it's pretty wild.
But I should point out, Supermicro is still up 73% so far this year. It's the third best performing stock in the S&P. All right, Abigail, thanks very much. We really appreciate that. We are counting it down to the closing bells. 15 minutes to go on a, what do we decide? Wacky Wednesday? Wilting? I'm going to go wilting on this
Wobbly,
Wilting Wednesday. Emily LaVille is portfolio manager over at Thornburg Investment. There we go. In management. She'll join us next.
The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm
So just around 1 minute to go now until we get the market on close imbalance.
They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you...
I had actually run tech banking and took Google Public, so I had a little sneak preview.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. You need a basic technology adoption.
Nobody covers business like Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day.
So we are looking now to the market on close imbalance. The S&P 500 is 1.2 billion to the sell side. NASDAQ 100, 410 million to the sell side. Dow 30 stocks seeing 425 million to the sell side. While Mag 7 stocks are seeing 365 million to the sell side.
Bottom line, we still think there's opportunity within pockets of small caps, particularly those that are higher quality, have been able to beat and raise, see upward estimate revisions. But for the Russell 2000 overall, we think it may be a challenging period. Sticking with large caps for the near term may be more prudent.
Joe Carey Hall there over at Bank of America Securities, kicking us off to the close just about an hour ago. We started the day, it looked like we had an extension of yesterday's rally heading into Tuesday here, but as we march closer to those bells, Alex, you can see it there, red pretty much across all the major indices.
Yep, although the VIX is a little bit lower, but we're still about 27. And small caps underperforming as well, off by almost 1%. So it feels like we're just back to selling all the stuff. But this time we're also selling bonds rather than buying bonds as a safety. Yeah,
a slight uptick in yields, mostly in the middle and the longer end of the curve here. Your 2-year yield, though, back up to right around that 4% level, briefly trading above it earlier in the session. Let's keep it rolling now as we move closer to those closing bells. 9 minutes to go. Emily Lavelle joining us, portfolio manager at Thornburg Investment Management, joining us here in Studio 2 in New York. Great to have you.
Thank you. Thank you so much for having me today.
We have to kind of ask you about the elephant in the room, and that is interest rates and the Fed, and will they cut, how much they're going to cut. This is a market that seems pretty convinced right now we're going to get multiple rate cuts before we get to the end of the year. That seemed to be the catalyst for the rally, but to a certain extent, it also seems to be a catalyst for part of the sell-off that we had as well.
It's like bad news is bad news again.
Finally.
No, we absolutely think we're in the later stages of an economic cycle, and I think you saw that with mixed consumer data last week, but marginally weaker. I think that what the market is going to be looking for from here until September is the jobs data, the inflation data maybe taking a little bit of a backseat, but I think we're definitely in a slowdown, and it's just a matter of how fast and when we start to see continued slowdown in the consumer, at least in the United States.
How much do you, or I guess how confident do you have to be right now to enter new positions in the equity space? And if you are confident enough to do that, are those positions idiosyncratic? Are they more macro? What?
Well, we're fundamental active investors, and so we see these moments of volatility as moments of opportunity. And so we absolutely are looking for, to add to positions where we think the earnings power continues to be underappreciated by the market, and to new positions where we see potential opportunities emerging. I would say we're definitely looking at those idiosyncratic growth drivers. We want to invest in companies that are going to be able to grow and maintain their earnings power throughout an economic cycle, and they're not going to be as tied, particularly to what we see is some weakness in the consumer in the U.S.
All right, what do you like?
Well, we still really like the AI trade because we do think that we're in the very, very early stages of the build out of AI infrastructure. So in a certain sense, the AI investment that needs to happen is going to march to the beat of its own drum. And we saw that in the earnings from the cloud service providers in the last couple of weeks. You know, a confirmation that they're seeing revenue stability, a little bit of revenue acceleration, even some revenue coming from AI, and also that they're accelerating their CapEx spend. So that gives us security that, you know, the chips, the demand for chips that we need to go into these AI data centers, they're going to be there. So we like TSMC outside of the United States. We like some of the niche players that are important equipment providers, ASML, Bezi. These are all sort of at the leading edge of the AI build out. The other area that we really like is healthcare. So we talked a little bit about, you know, GLP-1s and Novo Nordisk. The stock was a little weak on earnings today, but fundamentally there are 1 billion people that suffer from obesity today. That number is only going to grow. And we've seen just the tip of the spear in terms of the number of people that have been able to get treatment from Wegovy and Ozempic.
Well, but, sorry, can I just follow up on that? But is that going to benefit Novo? Because it seemed part of the sell-off, the concern, at least amongst investors, was that you've got a lot of new entrants into this market. There are a lot of other weight loss drugs in the pipeline here, so that while the pool of people taking it might expand, that doesn't necessarily mean their percentage of market share for Novo or for any specific company is going to grow, is it?
That's true. Yeah. However, I will say Novo, we believe, has a first mover competitive advantage, both Novo and Lilly. Yeah. Novo also has a very strong pipeline of new drugs, so they'll be coming out with trial data later in the year for their next generation weight loss drugs, CagriSema. Novo has been very focused on running trials to expand the applications of this GLP-1. So we've seen them run trials and continue to run trials on kidney disease, on heart disease, on a number of different indications, what we like to call a company that has a pipeline and a product. So they're able to take a drug that they've developed and then potentially use it for different indications and expand that earnings potential for the business over a really long period of time. So we think Novo will continue to be a key player in the space.
So what stock might you not like anymore that you may have liked at the end of the year?
One of the names or one of the areas that we've been focused on where we have exposure that is, you know, exposed to the United States is in the luxury space and what we call sort of maybe more mass luxury space. So LVMH is a name and just, you know, generally the consumer space is a name that we're steering clear of for now. We think this is a great long-term business with a very strong platform of brands. But what we've seen from Amazon, we've seen from L'Oreal, we've seen from Nestle, is everybody is talking about how the consumer in the United States is trading down. And so we think that if you're going to be in the consumer space, you want to be at the ultra high end of luxury, the Ferraris, the Brunello Cucinellis, or you want to be in the value for money.
As well,
well, me too.
I'm not going to pay $1,000 for a sweater. I do not get it. But anyway, I digress.
There certainly are people out there that can, and they're a lot less affected by the jobs market than the rest of us are.
Just real quickly, only got about a minute left here. I am curious. I saw in some of the stock picks that you had several in that kind of the IT services area, and I know some of that links to AI. Explain that.
We think that IT services is an area of the market that's been really an underappreciated beneficiary of AI. So, you know, you heard Andy Jassy talk about this on the earnings call from Amazon that, you know, this is a process. Enterprise use of AI is going to be a process involving a lot of data transformation. High quality data is going to be needed. All that sort of lifting and shifting that we've seen from enterprises moving data from on-premise to the cloud, you're going to continue to see. And so companies like Globant, companies like Accenture, we think are going to be businesses that are really going to be key to that transformation of the data so that enterprises can use those large language models to benefit their businesses.
All right, great to have you. We're going to have to leave it there. Emily Lavelle, co-portfolio manager of the $830 million Thornburg International Growth Fund. As we count you down to the close, just about 3 minutes to go, Alex, we should point out that as we were talking, stocks actually hitting fresh session lows now, down to more than 1% right now on the NASDAQ indices, down more than 1% on the Russell, down more than 1% on transports, and the S&P 500 right now down about 0.8%.
Yep, here we go. And we also get some earnings out after the bell as well. Obviously, Warner Brothers, we talked about that earlier, but we also have Zillow coming out. We have Occidental. We also have Robinhood. So we're going to get a nice smattering of earnings coming out in the next about 15 minutes. minutes time as we really wind down here. NASDAQ off by over 1%.
The VIX right now camped out around 23.9 and change right now on your 2-year yield. Your 10-year is still below that 4% level here, but a lot of weakness across the board, a lot to break down as we get closer to those bells. Full market coverage coming up right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here alongside Alex Seal. We're taking you to the closing bell with a global simulcast starting now. Scarlett Fu joining us in the TV studio, Carol Massar and Matt Miller in the radio booth as we welcome our audiences across our Bloomberg platforms, including our partnership with YouTube. Carol Massar, the turnaround Tuesday turning into a bit of a wobble on this Wednesday. Stocks now at session lows.
Yeah, right. Really interesting from how we started the day to where we are right now with just a few minutes to go. Having said that, you and I, Matt, have been talking a lot about the semiconductor space. Just the swing that we've seen, that group has been down more than 3%, and it's been up as much as almost 4%. So you're talking about a 7% swing, Scarlett.
Yeah, definitely. And I think it's notable here that we started to see equity indexes give up their gains well before the final hour of trading. Yesterday, if you'll recall, we had a swoon into the close. We still finished up, but definitely off our highs. Now we've completely given up our advances. And Quincy Cosby was telling us earlier that that's a real sign that this unwind has more to go.
Yeah, and that in many ways doesn't surprise me at all. JP Morgan Market Intelligence this morning had their note out, and I love this quote, you guys. They were saying that basically this was a sell-off that was coming. It was just disguised as a growth scare. And if that's the case, you can obviously say that there's a lot more downside to come then. We haven't really reversed that 200-day moving average for the S&P.
And as a lot of our guests point out, too, I mean, a lot of this might also be just profit-taking, good old-fashioned profit-taking when you consider the gains that we've had through the first few months of the year.
Yep, indeed. And you're taking a look at the indices really rolling over here. You're looking at the S&P off by about 0.8%. Now, to me, the question is, guys, what happens into tomorrow?
All right, well, let's talk about today for 1 second here as we get the closing bells in New York right across the screen, which is a big turnaround from where we were at the start of the session when it looked like stocks were set to rally 1 or 2%, closing lower by about 1% across the board. The Dow Jones Industrial Average down 0.6%, S&P down 0.8%, NASDAQ down more than 1% on the day, and the Russell 2000, Carol, going to close out the day lower by 29 points or 1.4%.
All right, so back to the big caps I go, as you know I like to do. Most names, guys, lower in today's trade by the end. Very different picture again at the open today. 358 names in the S&P 500 losing ground today, Scarlett, 144 to the upside.
Yep, and in terms of the 11 sector groups in the S&P 500, 7 of them are lower. Consumer discretionary, materials, and infotech leading the way down, each losing at least 1.33%. Your outperformers here are really your traditional defensive groups. Utilities up 0.5%, energy gaining about 0.5%, financials barely positive, and staples unchanged to barely positive.
All right, guys, to the individual gainers we go. This one, number one gainer in both the S&P 500, the NASDAQ 100. We're talking about Fortinet. It was up 25% in today's session, jumping as much as 27%. Biggest intraday rise since about November of 2009. So quite a bump to the upside. Company forecasted adjusted earnings per share that beat estimates. Analysts also are really positive about billings growth and note that margins were the strongest metric in the second quarter report. Axon Enterprise, also a major outperformer, up about 18% in today's session, top in the S&P. Company makes tasers, they make body cameras, boosted its revenue guidance for the full year. Yes, the guidance beat the average analyst estimate, so some really outperformance. One more for you, Latham Group. Ticker, great tipper. Ticker is SWIM. Company makes and builds in-ground residential pools. It reported adjusted EBITDA for the second quarter exceeded even the highest estimate among analysts tracked by Bloomberg, so some really outperformance there, Matt. So
you ever been tased?
No.
Any of you guys ever been tased?
No.
It is a pretty interesting experience.
Why have you been tased?
I tased myself once when I was working as a security guard in a Russian disco in southern Germany, just to see what it was like.
It's coming in the Netflix documentary on Matt Miller. All of this will
Let
be
me get to the decliners here.
Me too.
Super Microcomputer, the biggest decliner. And I think this is a fascinating sort of picks and shovels play on AI because the stock has grown so much faster faster than NVIDIA and now come crashing back down to about the same gains, but they had margins that disappointed analysts. So a big drop in Supermicro Computer today. Airbnb, the biggest drop on record, as much as 14%. The shares came down 13.4 there at the close because they had a disappointing bookings outlook. And then Disney, I think this kind of tells the story of the consumer. What we saw yesterday from TripAdvisor and Airbnb and Disney is that they're just not going out and making these bookings. They're not going to the parks as much as Disney would like. They did have people staying home and buying Disney Plus or watching Hulu, watching ESPN, but they're not seeing the growth that they want at the parks. So the real question, I think, from earnings over the last 24 hours is about consumers.
All right, guys, speaking of consumers, people watching Warner Brothers, let's get to their earnings just crossing the Bloomberg terminal. Adjusted EBITDA for the second quarter, $1.8 billion. The estimate on the street was $2.07 billion. Cash and cash equivalents, $3.61 billion. The estimate was for $3.21 billion. We did see the stock, initially I was looking at it in the aftermarket, coming a little bit lower. We'll bring it up for you in just a moment. What's interesting is what we really want to know about is them losing out on the NBA contract. That's 70